Okay, back after a long while. Let me see. What is up, everyone? How was your week regarding trading? I have a few things to discuss with you guys. So this is all at a sudden I decided to come. So yes, if you are here, let me know in the comment box, and I'll be waiting to see who is joining and who has joined so far. So let me just fix a few things. Now the chat, I need to bring and dock my chat screen. Anyway, I can do that from a different place. Okay, so I will wait a couple of minutes just to see who else is willing to join, and then I will start with my main streaming or lesson. Hey George M, hi brother, how are you? Welcome. And yeah, let me know like who is actually here, so that I can start with interacting with all of you. And let me actually look for a few things by the time I finish. Okay, like by the time I'm done with my personal things. So I have this. Let me figure out a few things. Let me check. Why did I wrote it and talk about it? I actually need to. Let me check. I think I'm ready. So this was a trade I took on Thursday. During this trade, yeah, I was with 5 lots because my stop loss allows me to take that 5 lot. I was running $800 profit during that moment, and I took 3 lots off at that price level. There was a order block level of the hourly, and look at that mean threshold and the order block level. I will show you how much price has respected that area. Unfortunately, I'm not willing to actually so let me just show you the take profit over here for a second. I will explain why I'm showing my previous trade. How are you? I'm good, brother. How are you? Jayat? Good to see you in the stream, since I know it's already like 1 a.m. in Australia. So yeah, good to see you over there. So yeah, like the very next candle gave me my first 3 lots. I just reduced my stop loss to the remaining thing, and that's the order block level. You will see like market reacting too much from this. Now I have put another partial over here based on the standard deviation, and that partial was hit as well. So I took 2 partials over there. It was a good day, good trade as well, and I was expecting market to reach to that mean threshold. Hey, thanks a lot for subscribing to the channel. I don't know like if I'm worth your subscription or not, but I'm trying to show you what I have done on Thursday. There is a reason, a specific reason. Just give me a little time so that I can actually come to the point and I can explain exactly how and what I look when I trade. Okay, now 15 minutes fair value. I know previously market respected that area. There was a 1 hour order block mean threshold. I kept it here, not all the way to the high. There is a reason behind that, but I think this final lot actually came back and hit my trailing stop loss, something like that. Okay, so let me check how far it went. Okay, yeah, it came back and hit my trailing stop loss. I trailed it higher so that I can secure more profit. Overall the trade was a pretty good trade. Okay, even though it came back and hit my trailing stop loss, see the hourly mean threshold, this is 1 minute. You will find how many times market is reacting from that area. Okay, now at this point let me give you a pause over here. You see 4 hour dealing range buy side, if taken market will go higher. This is something that I'm writing on the like Thursday. Same thing you can see like it's over here as well. So around 6, not 6 p.m. Here it's 7:33 a.m. on Thursday. I'm writing that this buy side should not be taken. If it's taken, market will go higher. Now that is like, this is the thing that I wanted to show, that yes, I had those things even before market was there. Okay, market even before that. That's the exact reason I didn't target that buy side as my drawn liquidity. Instead I targeted these equal highs inside or internal liquidity that I targeted. But unfortunately, as I said, like since I moved my or trailed my stop loss too quick, it came back and stopped me out on the final one, but still in a good amount of profit. Now why I wrote that specific line or marked that specific liquidity and said if taken market will go higher? Let me come from 4 hour and let me hide all the charts. Where Thursday, right? Thursday, I think around this moment, this was the high I was talking about, if I'm not wrong. So from the 4 hours, okay, for the reference point I can do another thing. I can quickly go to my NQ1. I think it's still, yeah, it's still over there. So what was the high? The black candles. Okay, now I can get back to the NQH one more time for the reference, because I don't want to do the calculation again. So I will just go to the replay mode until this one, and this is 4 hours time frame. Okay, I'll show you exactly. If you were with me during my previous live, or I think when I did that, maybe Tuesday was my previous live stream. If you are with me, you know that I was looking into certain things during that moment. Let me know if you can hear me clearly or not. Okay, this high was the high that I marked, that if this liquidity is taken, 33.50, one more time, 33.50, that's the high where I wrote if taken market will go higher. Okay, so let me come back to 4 hours and let me explain the rest of the thing. This high was the high I was willing to see that market is not grabbing liquidity from, that 33.50. Why exactly? If you have watched my dealing range video in my channel, okay, let me show you that for a second as well. I don't know like how many people are actually listening to or watching this specific live stream, but if people have joined, it could have been a very good live stream for them. I think in my challenge I have this dealing range type 2, and I think way before that I have dealing range type 1. Okay, in this video I have talked about how dealing range works, or how it usually generates or engineers liquidity. You see here, I have marked like accumulation, manipulation, distribution. Market will retrace back into the premium array for a sell short delivery. Now in the same video I have talked about what I don't want to see, what I like, things like this. Okay, this is the retracement to a higher premium array, PD array, right? Premium discount PD array. I don't want to see that high is grabbed to confirm the lower run. I don't want to see that high is grabbed, things like that. If you have watched this video, you will have some idea. And today I'm going to explain why and how. Even I have uploaded more videos regarding my entries, like on my channel. If you have watched this 1 hour 11-minute worth of video, in this video, in one single week, I have found every single model that I usually use during my silver bullet, and those are the things I have utilized to make over 10k on that specific week. Okay, now I had a day with 4.1k. I had so many things. Okay, before even the CPI news, I made 2.6k, things like that. Okay, within 1 minute 57 seconds I made $480 with only $220 or $30 risk or something. I cannot remember, but exactly whatever it is, within 2 minutes, 1 minute 56 seconds, but 2 candles. Okay, I have made that money. But why I'm showing, okay, my internet is not supporting. You see, that is my entry. Market within 2 candles it came to the take profit, and the take profit was 1 to 2. So I don't care about the lot size, although in this case I had only 1 lot, but usually whatever my stop loss is suggesting me, I'm just utilizing that. See, like the one single candle came straight to my take profit, and that's it, done within 2 minutes. Entry from that black candle, 1 2 candle, done. Okay, now after here market started going higher. I don't care. Okay, that's why these are the liquidity levels I had over there. I draw, when I'm in a trade in the 1 minute, I draw all the possible liquidity levels just to make sure that, you see, like I put only sell side on 2, but I have 4 red lines, like the sell side liquidity lines. I want to see like where exactly the week came. Is it creating more stronger sell side liquidity? Like, is it creating something that is now more obvious, or it has already taken the liquidity and then giving me reaction, things like that. When price was here respecting a lot of things, I missed this order block entry, I missed the volume imbalance entry. I waited, it created a fair value displacing below that low. When it created that fair value, it generated more liquidity. Even though it took my first level that I was anticipating, it generated more liquidity along those levels. Okay, that's why I considered entering. That's why I keep multiple lines in my chart when I'm in a trade or when I'm entering. But usually when I'm marking just the obvious levels or extreme levels. Okay, but when in a trade, I want to see from where exactly market is currently doing this consolidation. It makes proper sense for me to see a lower run, because 1 level, 2 level, 3 level, 4 levels of liquidity over here, and this consolidation generated more liquidity around that area. So that's why I considered entering into a trade from that. Okay, now that's what I shared in my channel. Now why exactly this high was very important. Okay, I marked something like, if taken, market will go higher. I will give you the example, but before that, on the 4 hours time frame, look into, or maybe I can go and talk about 1 hour as well, but especially on the 4 hours time frame. You see this whole thing, accumulation, this low, okay, this low. Why I'm not looking here, I will explain that as well, but for now look from here. Accumulation is happening. The lowest low was here, the sell side. Market did not take that sell side, market started accumulating more. Okay, so accumulation inside of this range, manipulation towards the upside. market again went into the accumulation phase. What we call is reaccumulation. So market did again reaccumulated, then manipulated towards the upside. So accumulation, manipulation, reaccumulation, remanipulation. From here it accumulated again, manipulated higher, started coming lower until this liquidity was taken. I had only the bias towards that as a distribution. Now why this one is very important? Because from this range to this range, this is now your dealing range. Okay, like accumulation, manipulation. I could look for a distribution. If from here market came lower and took this sell side, then the distribution could have happened here. I could ignore all this and start my new accumulation and new manipulation from this area. Since that didn't happen over here, that's why this low, until that low is taken, I don't have a dealing range. Now I have the dealing range. Okay, so when the dealing range happened, market retraced where you see the fair value gap on the 4 hours level. I will show you on 1 hour as well, but this is the 4 hours fair value. All the bodies are respecting the middle point. It retraced until that. But more importantly, if you have watched that video from my channel, from the low to the high or from the high to the low, since it's a sell side delivery, so I should draw from the high to the low. Market reached inside of my OTZ. Okay, so this high was important. When it reached here on the 15 minutes time frame or on the 1 minute time frame, however you want to look this. You see the buy side liquidity grab, market structure shift, fair value gap created. It's giving me the sell short setup. That high has to be the protected high. This high should not be taken. When market failed to take the sell side liquidity from here and took that during the news time, there is a news over here right now. Yeah, so it took that liquidity instead of coming lower and taking the sell side liquidity. It came until this far. There is a lot of things around this area, but for now think this way. When market took that liquidity, my expectation was market will go higher where until that high. But before that high, I have these 15 minutes bearish fair value gaps that can possibly make the market go lower as well. So when I'm in a long position, a long trade, I want to see that market is disrespecting this in terms of going higher. Now in 1 minute it's a huge range, guys, don't get me wrong. It's like in 1 minute market is currently here. Okay, it's reaccumulating over here. So when the reaccumulation happened, there is a manipulation range as well that happened. Eventually market went higher like crazy at the last, like I think PM session, New York PM session or something. During the AM session market was doing something very awkward, but when that happened, let me actually exit out of the replay mode so that you guys can see. That's the high market reached here. Although you are not seeing the 15 minutes was tapped, it was respecting the hourly bearish fair value over there. Okay, so hourly is sitting little lower than that hourly breakaway gap. That's why. That is how far market reached. Took that high, it gave you more run towards the upside, then it started coming lower. The reason behind that is that specific high, sorry, this specific high, this should not be taken before market is taking the sell side liquidity. Now this is my dealing range low. Market reached to the level where from where it can retrace. Now why I'm not going until that far, I'm looking into this fair value gap. My eyes were here too. Okay, the first and the second fair value on the hourly, but it broke above like it's nothing. So that's why I ignored that fair value and kept this one, because it's a very small comparing to that one. Market reached there, then it started going lower. Shiva, hi brother, how are you? I'm good brother. I'm very good. Brother is not completely well. yet. He had to like go for a what it calls, for some oxygen supply or something, support, something like that recently. Father, as you know, the finger is broken, so he got the finger plastered, and like whatever the medications are, he got that, so he is doing all right. And overall, lot of stress. I had no intention to come on a live stream, but fortunately few of the things have been solved, like the issues I was facing regarding everything. Few of them are in place together so far. So now I thought like, okay, let's spend some time with something else so that I can actually stay away from those bad moments for a bit. Okay, that's why like I wanted to divert myself from all those thoughts, because I was very upset. I went outside in a park and I was sitting like in a corner in the dark area, in a corner alone for nearly 1 hour and a half. After getting a better news, I came back home. So yeah, like I was not in the mode of coming or making a video, doing live stream, nothing like that. But since few good news, I want to forget those bad moments for a bit. That's why I came. So yeah, thanks a lot for asking, my brother. Yeah, so when market took that, I was expecting it will take these, but on the daily or on the 4 hours, it's a huge week over there. Okay guys, this is a huge week, so I cannot expect market will go through that week and take that liquidity. Moreover, I was expecting at least a run until this far. Okay, but it didn't go until that far, because from here to here, that can possibly work as a rejection block. It did not reach above that, but there is a hourly fair value that market has respected, and then it has retraced. So my eyes, there is another thing as well. Okay, this hourly fair value, this specific hourly fair value is sitting inside of a breaker block and your order block. So order block started from here until there, but I'm not looking into order block first, because it's a huge range, and I usually look into the extreme part of the order block, at least somewhat around from this candle to the high, that I can look into as my order block. But here this is more obvious level. You see the middle point tap, the common area. Why I say the common area, guys, I will share a few things with you guys. Please remind me about a podcast. Okay, just if I forget, in the chat write about podcast. I will share few informations from the podcast. I watch a lot of videos, even though I am making good amount of money, but still I would love to watch what others are doing. Okay, I just like this Tuesday I just got 4K as my withdrawal from one account. So I'm making money, I'm profitable, I'm doing this for a long time now. Still I would love to see what others are thinking regarding the market. Now today, why I'm showing this is because there is a thing. Okay, I saw I don't want to say the name, but my friend, some of the people who I know who are trading, who has good knowledge about things, but a bad psychology or ego problem that I usually see, that is something I don't want to affect me or people who are watching my videos. I don't want them to affect them as well. If you remember from my Tuesday streaming, I was saying that I'm overall bullish on the bearish on the market, but I made all my profits from going long. Okay, I was bearish, but if like almost all my profit came from my long entries, the like bigger profits came from my long entries rather than short. Why? The reason behind that is you have to have some flexibility regarding your analysis. No one can be 100% right about their analysis. No one can be 100% right. Even ICT, he is not 100% right. If he was 100% right, so many times he like not so many, but few times he said market is going higher, market actually went lower. Few times he said market is going lower, market went higher. Recently his two live streaming, he tried to execute at least 6 to 7 trades, all of them he lost. He didn't win a single trade during the live stream. But beside the live stream, like he is uploading his profitable trades as well, right, in his channel. But during the live stream he didn't make a single profitable trade. If you have watched, I watched the entire live stream from ICT. Okay, I was literally watching it live, and I was calling it that this is not a good entry from my, like my understanding. I was saying that, and eventually he didn't get it. But I'm not saying I'm better than ICT. Okay, it feels good when the way you are thinking is correct. It feels good. Okay, so even though this concept is coming from ICT, you can be even better regarding your entry strategy, entry model, things like that. So why I'm saying this is because I had the reason I was bearish was because of this. Okay, accumulation, manipulation, reaccumulation, remanipulation, reaccumulation, remanipulation. Finally market started distributing lower. So this is where my bias was sell side until where? Until this low. Okay, until this low, because you see, like Tuesday, this low was happened on Tuesday, and exactly on Tuesday market took that liquidity. So when the sell side and the buy side delivery is done, like manipulation done, distribution done until the due range, this was all due. On the 4 hours time frame it looks more clean. That's why I started with 4 hours. You see, like high and this low, between this range market was consolidating. When this engineered liquidity happened, market started going higher. So the manipulation happened higher rather than lower. If market could take this liquidity first, I would be bullish from this area, or even earlier I was bullish. But from this specific area, market was accumulating, manipulating, accumulating, manipulating, accumulating, manipulation done. Now the distribution until the first range of accumulation. When this range of accumulation happened, from that high to this low, this is my dealing range. The dealing range is confirmed from this low to that high. This is my intermediate. I know this is the all-time high, but for now this is my intermediate term high, intermediate term low. Market went higher, retraced with this candle. Okay, when the retracement happened, where did it happen? In my OTG. I know this is also a retracement to the OTG, but before that this was the retracement. This high was the retracement, and this retracement happened inside of a beautiful hourly fair value gap. You see here, this was the first fair value from that high until all this thing. That is the retracement I was talking about. So when this low formed, I said I'm bearish. Market reached to the level, liquidity grab, market structure shift, displacing lower. But later on, what market did is market took that liquidity. Okay, when market took that liquidity, I had it written as I showed you, like from that video recording. Let me play that one more time, and I don't know if just let me go to a random place. Okay, I have already showed the entry, secured the profit and everything. Hey, thanks a lot, thanks a lot. Okay, so where was it? Here. See, like this is, let me go back because you will be confused. I'm calculating everything, writing everything on my chart on Thursday, that if that is taken, everything, like during my Thursday silver bullet session, I made the profit. I was willing to go out and exit my day as it is, because I would love to call it a day. So I was marking a few things for the AM session and PM session. I will come to this as well, what I was marking and why I was marking. But as I already showed that the buy side liquidity. I was writing it here. See, like here I'm writing 4-hour diligence buy side. If taken, market will go higher. See, like this sort of thing. One what day? Thursday, during the silver bullet. Now after that, I have already explained like why that high was important to me and things like that. Okay, if you missed it, you go to my channel and watch for the ICT diligence type 1 in the strategy folder or playlist, where I have shared the ICT strategies here. Diligence type 1, type like these 4 videos. 4, I don't care about the entry models, but these 3 videos are all you need. Okay, these 3 videos, if you can digest the information, if you can practice the information, this is all you need to improve your performance, to become more profitable. But you must have to know it inside out. Okay, the way I know, it's helping me. Even though I said I'm bearish on the market, I made most of my money from a like buy long setup rather than sell short setup. The reason behind that, as I said, is these 3 videos. Now silver bullet, I would highly suggest you watch that after watching these 2. So first watch these 2, then go to the silver bullet. Then the silver bullet strategy will make more sense. Okay, I have 3k views on that video. This video got 705 views or whatever. This one got the less views, but this was one of the most important part. And this is the part 2. Okay, type 2. I have explained what can happen when a certain thing is not going the way you are expecting to go. So every video has information. That's why the videos are this long. This 2 hours long video has more than 10 or 12 execution parts where I was back testing. I have kept without editing a single information out of it. If I'm losing a trade, I'm happy to show it to you guys during the back test. So those 10 or 12 back testing entries or models or setups, that will give you more idea about how I utilize those specific areas or specific price actions. This is how you will learn. If you just watch how the strategy is and then after 2 days you try to implement to yourself, it will never work for you. ICT has, I think, 82 or 92 entry models. Okay, 82 or 92, I'm confused between these 2 number, but more than 80. Keep that in mind. How many do you need to know? You need to know only one model, but you have to know it the way you can trust it and forget about everything. If it's a loss, take that loss. With proper risk management, you will be profitable. If you have practice, if you have back tested, forward tested, and the strategy is giving you a positive result after a long period of time or long amount of entries. You cannot decide with 5 days of back testing and then go for trading. In 5 days maybe market played out and you got maybe 4 days winning trades, or even all of them are winning trades. If you go with that a small sample size back test or forward test result, you will fail every other day. That's inevitable. You have to have at least something that you can consider a sample size. 5 days is not a sample size. For me, at least 50 trade is a sample size trade, because that is 50 days worth of information that will give you. Now how you can determine? You can have FX replay, like I think they have 14 days or something free trial. We utilize that free trial. Go to Forex FX replay or whatever, selected month or year. From there, go all, like why I'm not suggesting trading view is because this reply mode is not available on trading view without a membership. Now you can have the trail 14 days trial and you can have the reply mode, but the main problem is it won't generate data after a certain amount. Like you see, like from here it's not generating, it's showing that's the end. Okay, this is the very beginning, but more importantly it is just giving you until July 2023. But if I go to 1 minute, it will give me only I think 1 week worth of data or 5 days worth of data. it won't give me even with membership. This is me with membership. But FX replay, you can go as far as you want to go, okay, and you can back test from there. Then you can try couple of days or whatever weeks to forward test. Hey Ali Khan, Faisal brother, how are you? So you can forward test from there. Now as I said, you when you have, think this way guys, if you have back tested maybe let's say 2 months worth of data, okay, which is 60 days, if you plus minus like the weekends and other off days, you can have around 40 days worth of data over there that market has traded, because 60 days means there is 8 week, and inside of that 8 week you will have like 16 regular holidays or weekends, and I'm adding 4 more as my maybe some financial year or you know whatever, like some bank days, bank holidays, things like that. So you can have at least 40 trades from there as your back test. Now forward test another 10 days, total 50 days worth of back test and forward test. You know a lot of information. If you in your back test any entry fails, or in your forward test any entry fails, try to figure out why exactly this time it didn't work. If you can figure out those sort of thing and avoid those session, your success is inevitable. The hard work, if you do it, if you are willing to do it, it's inevitable, let me tell you that, okay. My even what it calls, if you have watched Ali Khan, okay, this guy is I don't know, like I just love this guy because of his transparency, because of the way he talks. Ali Khan ICT, this is the channel, okay, just search Ali Khan ICT, you will find it, Ali Khan, okay. Watch his, let me show you, actually I don't care about copyright strike, things like that. My channel is not monetized, and I don't think I will be monetized anytime soon. So let me just give you this and mute my microphone for a second. Let's hear this together guys, let's hear this together.
Because I stopped focusing on the money aspect and only started to look at the percentages. Because I realized this, that it doesn't matter whether I have a small £100 account or I have a larger £100,000 account. If I am only focusing on percentages, then it doesn't matter, because the percentages are not going to change, regardless of the money that I'm trading with. So I thought to myself, if I can only average 1 or 2% a week, or maybe 3 to 4% a month. And even if I did that on a £100 account, once I scaled up and I acquired the skill set, and I could do the same thing on a £100,000 account, those small percentages have a much bigger monetary value at the end of it. And it also psychologically helped me massively when I started to actually scale up, because you start seeing fluctuations of thousands of pounds up and down in your account. That becomes incredibly scary. I mean, losing money is hard, but sometimes seeing massive fluctuations and gains is also hard at the same time. And this was due to a lot of factors. I mean, I was over leveraging massively, and I wasn't really paying attention to my risk management. It was massively over leveraging. What is approaching? And that amount should be so pharmacy, because I was the biggest mistake that I made was, like I said, thinking that, okay, if I can find time to study as much as I can, then it's going to be easier. Neglecting the chart time and neglecting the experience. And that's why it really took much longer than it needed to for me. So if I were to go back in time and talk to my younger self, I would say, listen, you need to find time in the day where you have got an hour to sit in front of your charts and choose a session, whether it's London, whether it's New York, or the AM session or the PM session in the index market. You need to find an asset class and a time. And I would always recommend just stick with one. Just start with one market, one asset, one model, one pair, one time window, and become a specialist in that. right? You want to become ideally a specialist in one type of thing first. Later on down the road, if you want to add different assets and you want to add different models and different things to your trading, then that by all means, that's fine. But start with something very, very basic and easy for you to do. And why I say make it easy as possible is because if you're already going to overcomplicate it from the beginning, you're going to put yourself off doing it, right? If it's something very basic and easy and you know what you want to look for in the charts, then it's going to be easier for you to stick to that, right? So you're only documenting something very basic. And then that gets you into the habit of journaling, and you're looking for the same thing every day or every week, then you master your model. And at the end of the day, you're going to be the master of your own model, right? I'm the master of my own model. Nobody can tell me anything about my own model, right? But my model might not work for you, and your model, it might be great, but it might not work for me, because we are different people and we have our own psychology and our own personalities, and things affect us differently, and we're all going to read the market in different ways. So you should never, ever, ever look at somebody else's analysis and say, well, that's what they think, so they might be right. You have to only focus on your analysis, because at the end of the day, this is a very solo journey, and you have to be accountable and rely on yourself and yourself alone. And unfortunately, that is just the way it is. Your model has to be unique to you, and you have.
Now guys, I don't know how much information you got from this one, but that's what I was telling, that's what I was trying to teach you guys, that whatever I'm trying to help you guys regarding the things that might be confusing to you, but end of the day, it's all you, it's all about you, how you perceive a market, how you look into a market, how you have mastered your plan. Okay, for me, my friend, like I have a friend, I'm not willing to say the name, but my friend is a very good chart analyzer. Like he analyzes the chart, I think sometimes he is better than ICT when he is analyzing the chart, but most of the time I have conflict with him, so I don't watch his chart analyze, like the way he analyzes the chart. I don't watch his videos or his analysis, I do my own analysis. Now, genuine channel to follow, I will give you that's the genuine channel, my friend. It's Ali Khan ICT. Okay, he has a free ebook on the what it calls, on the description of the video. You can download that as well. It's very helpful, very few information, but keep that in mind. Don't leave me. Okay, I will share few informations before you go, but this is the channel, don't worry. I will share the link in the description as well, so that you can one click and subscribe to his channel as well. Okay, this is Ali Khan's channel anyway, but don't leave me. Okay. Yeah, I will show you more, but what I was saying is, my friend, he has the problem I felt that he has, is he is very egoistic regarding his analysis. Why? Every single profitable trader has one thing in common. Forget about everything, their strategy, their trading psychology, their risk to reward, their entry models, everything differs, but one thing in common. The common thing that everyone said is, you have to be flexible, you have to know. Remember, like one Tuesday stream, I shared 5 points, like 5 questions you must ask to yourself before you enter into a trade, and the 4th number was what if. What did I said over there? What if market is not going the direction I'm anticipating? These sort of things, right? You have to be flexible in terms of your analysis as well. If you are wrong, you have to accept that you are wrong. On the friend I'm talking about, I'm not over and over again, I'm not willing to mention his name, because he sometimes feels offended without taking my perception or point, how I'm trying to represent him. But let me tell you this, my friend, he said, for 3 weeks I'm bearish for 3 weeks, and he is not willing to shift his bias. He is bearish for 3 weeks. Look, for 1 2 3 4 5 weeks market is going higher and he is bearish. So I don't know, like, yes, he is still making money from sell short, he is still making money from buy longs as well, but why you have to be bearish for 3 weeks when your all analysis ends, like starts with weekly? Where can it expand? It has taken the buy side liquidity, then this buy side liquidity failed to expand higher. On the daily level I can see this liquidity grab, market structure shift, there was this small little bearish fair value that market has traded, even went above that mean threshold respect, market coming lower, as simple as that. Now I can be a bearish trader. On the daily level for 3 weeks, if you are bearish from here until that far, you are bearish. How many black days can you see over here and how many green days can you see over here? So this is where I say, like, what if? Now on this specific day I had few things in mind. Okay, on this Tuesday I said I'm still bearish because of that expansion level that I'm seeing, and the only area that market could have respected was this fair value that market came through straight away. It gave 0f to this fair value gap, but below that fair value, okay, this is where you have to understand a few things. Let me show you that as well. From this swing low until that swing high, do you have any problem seeing this as your swing high and swing low, like this range? Forget about this. Now from this to this, is that a clean swing high and swing low? I hope you all are answering yes, since the chat is delayed. You see this specific area, the bullish fair value is sitting in a premium level. In the discount level, what do I have? Now I talked about this in his stream, in his channel as well, but he didn't figure out this. This is a swing low, market took the liquidity, gave you the market structure shift, low, high, lower low. The highest up close candle with the body is your breaker block. This is your breaker block. Okay, there is another reason over there, but okay, let's talk about the breaker block a little first, then I will explain, because you guys will have the idea. To become a breaker block, all it needs is a low, high, lower low, so liquidity grab, then a market structure shift. So this is a market structure shift. Your breaker block is here, the highest up close candle with the body. This is the bullish breaker. Now this breaker block will hold or not, that depends on a few things, but if this is a high probability or not, how you can determine that is, let me expand the low a little more so that I can draw it properly. This is your liquidity, sell side liquidity. Okay, let me put the marks or levels, and let me actually create a low over here. This is your sell side liquidity market has taken, but the low that it created, if the same low can take another level of sell side liquidity from either higher time frame or the same time frame, higher time frame is better. Okay, keep that in mind, higher time frame is better, but the same price leg, if it takes two or multiple level, at least two or multiple level of sell side liquidity, this breaker is a strong breaker block. Why I'm showing you here is because, let me remove that one more time. You see this green candle's low, this is also a sell side liquidity and a swing low. Why I'm saying this? Let me go to 4 hours. I can go and show you to like 15 minutes or something, or even like other time frames, but 4 hours. See that low? Is it a clean swing low over here? Market took that liquidity, market took this liquidity as well. This is a daily time frame visible swing low, this is a lower time frame. From daily I'm coming 4 hours, even in 1 hour, look at those lows. You see that this is the low that market took, and this is your daily time frame, higher time frame. So two levels of liquidity is been grabbed with that single move. Now this area is important when market is trading above the high, from the low high and the lower low. When market went above that, closed above that, the highest up close candle with the body is your extreme breaker, which is sitting right here, and the set of candle can be your breaker. Now here is the candle that traded above, closed above. The very next candle also traded above, closed above. You see the breaker retest here, and here market went higher. If you had this knowledge or idea or this vision of the market, this is where you need your higher time frame point of interest. If you had this, these were the areas where you could have entered into a trade and looked for higher runs. That what market delivered here. But on the daily level or on the 4 hours level, let me show you. You see that same exact candle, that's same exact tap. This is on the 4 hours first time tap. But on the daily level, market is yet to retest. Yes, this one actually retested, but yet to retest. Now breaker here shifted to here. Why? Because it has the high, but the body is here. Now on the daily, I'm refining my breaker block. I can still consider these two candles and that high as my breaker, since that's the highest market reached as the green candle, but the highest up close candle with the body, this is the breaker. Look where market came on the next retracement sheet. I just went too fast, but anyway, you see this specific black candle retracement came until the middle point here on the daily level. I'm just marking, okay, it's in the box, so I don't really need to mark it, but let me show you exactly how that middle point looks in the lower time frame. Hourly, that's the middle point, first retest, second time. 15 minutes, first retest, second time. 1 minute here. This is your mean threshold. Okay, when market retested here and went higher, this is where I had opportunity to look for a long setup, but with other things as well. I will come one by one. When market took that liquidity and won the 15 minutes or on the hourly, it just created swing low or some wicks over here. That is where I had more confirmation that market is respecting that middle point. Now this is the daily level of breaker block that I just showed. Same area, if you come here on the hourly level, low, high, lower low, where is your breaker? Let me remove this one. On the hourly, breaker here. Now let's see how far market came. Did it came here? No. So that level was revisited actually here, and then market went higher. But with the same concept, let me check other things as well here. Actually, hey, thanks a lot guys, thanks a lot. Maybe subscription. I really missed what my what my OBS studio showed, but if it's a subscription, thanks a lot and welcome to the family. So that breaker happened here and respect happened here. Now when you are going to use your breaker and when you are going to use the fair value gap, let me talk about that as well, where I draw the breaker block and other things. Let me check. Yeah, here. Now when this breaker is more important than a fair value, let's say the fair value is sitting here, okay, and this is your breaker block. Let me mark it the way I want to teach you guys. This is your fair value. Now you might have another fair value around here aligning a portion with your breaker block. This is another fair value. Now in this case, you are willing to use your breaker block or this fair value as your entry point. Why? Is because from the low it reached to the break of a structure, from wherever it is giving you the retracement. In the discounted area or at the equilibrium level, this 0.5 level, you have a breaker block, you have another fair value gap, you might not have this fair value here, it can be here as well. In this case, your eye should be on the breaker first. If market is willing to go lower below that breaker, you are expecting this fair value will be unfilled and it should act as a breakaway gap, because you have one level of defense here, two level of defense here, and market will not disrespect so many level of defenses then come to this fair value. This is the place where you might be focusing into entering into a trade, and a stop loss should be maybe below the middle point, or if you want to be so like secure, or let's say like you are entering from this fair value, not even the breaker, your stop loss should be either here on the middle point, a tick below that, or you can put just at the low of that breaker, breakaway gap. From here you are expecting a higher run towards the upside, and you, even if market comes here, you will not look to increase or move your stop loss. If you are wrong, you are wrong here. Remember guys, level of defense, ICT said this is when your first level, like when market disrespects your 3 level of defenses, the next target for the market is your S. Okay, I'm using the exact same language. The next target is your S. Why? How do you know that when a breaker block that has taken 2 level of liquidities, this one is more powerful than any other possible PDRS? You want to hear that? Let me show you that as well. That breaker is the, like ICT said, I can take entries on this specific breaker block anytime, any day. Okay, this is okay, this is not ICT, come on here, this is my first mentor. Okay, support resistance trader, I will give you that as well, don't worry. I have entered so many trade based on my own analysis, own information. I will give you that. Shiba, I will not give you it. Rare to find people like you share genuine knowledge for free. Won't leave you. Thank you. Good afternoon. Hey Mikhail brother, how are you? Good afternoon. And up candle close means green candle close. Yeah. So up candle, up close candle means a green candle that starts from here. Okay, this is the opening and it closes on the upside. That's why it's called up close candle. A black candle opens on the top, closes on the bottom. That's why it's called the down close candle. So up close and down close. Color, I'm not referring to the color because you can just go to your chart settings and change whatever color you want for your up close candle. So I'm not referring into that. Simple, whatever color you have choose for your up close candles, that's what do I mean by up close is it gonna open at the lower portion, close at the upper portion. That's your up close candle. The down close is the opposite, it gonna open at the upper portion, close at the lower portion. High and low are always same for every single candle. What do I mean by same is the upper highest it reached, or the week's high is the highest it reached, the week's low, and if there is no low, then the opening price, or depending on the candle color, opening or the closing price. Let's say like this candle doesn't have that one tick of wick, so the closing price is the low. Same with this one, like the lower portion, this is what it calls. Okay, no problem brother, I'm gonna go through a lot of things, so I hope you guys will be able to digest a lot of information. So what do I mean by the breaker? Let me advanced theory of breaker, ICT advanced theory on breaker. This is the one. I don't exactly remember where he mentioned this. Okay, where exactly he has mentioned it, but just showing you some example. You see the buy side and another buy side, this. Okay, that's the sell bearish breaker, and for the bullish breaker he has explained at the very beginning or something. I don't know, or here. Okay, same thing, 2 level of liquidity. And in this specific video, okay, I will just share the link as well. If possible, you guys put it at as your watch later video so that you can watch the video. Okay, I have posted the link in the comment box. This video is the only video you will need to understand the breaker. Okay, this is the only video you will ever need, ever. I wanted to make a like summarization or a short video within a short time frame. I wanted to give you all the information, but since you guys are here, I want to know like who is actually here and who is not. So this video, you keep that in your mind. This ICT breaker block, that's the only video. Like forward test, back test, don't use it, no problem. Keep that in your mind, the information when you are trading. Just see how those areas works. If it works perfectly or properly for you, this is how you are mastering the information. Once you have understand the information, next time you can utilize the information. But if you have that in mind, you can expect that okay, market might not come to a fair value here because there is a breaker block that is more strong, because when the breaker block happened, it has taken multiple levels of liquidity on its low. Now this sell side is ICT referring to a higher time frame sell side liquidity or point of interest. This sell side is the time frame you are looking into, that specific like short term swing low with a higher time frame sell side. So two levels of sell side liquidity. So if I'm trading in a 1 minute chart, I will either look into 15 minutes or max 1 hour time frame. If I can go higher, that's better, but 1 hour and 15 minutes, these are the time frames most of my analysis are. Okay, so this is the video you want to watch regarding understanding the breaker. So that was the breaker, that's where market came, and the next day it started going higher. The very next day it went higher as well, even above this, and finally when it reached to the mean threshold of that order block, that is where market respected, came lower, closed below, and now I'm looking for a sell short delivery. I don't know if that gonna happen or not, but if that happens, I have so many to target over here. Okay, now this time I'm not expecting breaker to hold, but I think that is exactly where market came. Yeah, so that is exactly where market came and ended or finished the day. Okay, middle point respect, upper portion respect. Now it's here. I want to see a candle's body closing below this level. Okay, not even this 50%. This CE is important as well. Keep an eye on any PDRA around this area, especially if there is a fair value. If not, look for the order block. But my eyes are on this middle point, how market closes below or trades around this area. If a body can close below that middle point, I'm gonna look for sell short until this low and this fair value. Okay, so that's the breaker. Now Diyat Khan, thank you brother for sharing a valuable. No problem brother, no problem. I'm also learning by doing this. Okay, this is also some sort of back testing and forward testing. Now as I said, on the 4 hours time frame, I was looking into this thing. Okay, like accumulation happened, manipulation happened, market failed to take this low here, otherwise I could consider this as a manipulation, then I could expect a higher run, but that didn't happen. So market manipulated and left this sell side. When market went higher, took the buy side with the manipulation move, it reaccumulated, it went higher again. So now my range is getting higher and higher. So when market took this buy side after accumulation manipulation, it started going lower with distribution. Now the first accumulation manipulation distribution happened here from this to this. That was my liquidity range for the day. Market tapped into the fair value, market displaced lower, took this sell side and the original accumulation phase sell side. Now why I'm showing you from here and not from this area? Let me show you here first, then I will go to 1 hour. Okay, why exactly this low and not this low? You see, this 4 hours accumulation, the first move was manipulation into this fair value gap, right? Before this manipulation, before this week, market did not take any liquidity. You see, like before that week, it was accumulating here for 4 12 4 8 12. For 12 hours market did that. If I go to 1 hour, this specific part will be more clear. Where was it? Here. Now look how many candles are here. As I said, I love looking into 1 hour. So it accumulated, manipulated, now distribution. So it took the sell side into a fair value, took the buy side above this and this. Now what is my dealing range? From this low to this high. Where do I want to see the market retracing? Into the discount. Now in 1 hour in the discount I have nothing here, right? I have only this huge candle that can act as a order block or something, but there is no fair value, nothing. And since I am mastering the fair value first, okay, I don't want to say I have mastered, but I am mastering the fair value first. This is the hourly dealing range. Okay, let me mark this and this. This is the sell side liquidity, this is the buy side liquidity. Now let me put on the replay mode until the retracement level so that I can show you the retracement properly and remove everything. Okay, so buy side and sell side of the dealing range. Now let me go to 15 minutes. Since I'm entering from 15 minutes, I want to look into, let's say like I'm entering from 15 minutes or even 1 minute, doesn't matter, but on the 15 minutes this is the fair value in the discounted area, or from the low to the high I can look into a couple of things like OTZ. You see that fair value is aligning around this area. I have nothing. Okay, so only this is the only fair value that's aligning with my OTZ. I am, what just happened? Somebody else logged into. How is that even possible? I don't know if my laptop has it connected or not, but anyway, I will come back to the same exact level. So this is the only fair value that is connected, that is connected, that is in my OTZ. I want to see a retracement to the OTZ, at least a PDRA over here. I'm not looking into this fair value yet, but I will look into if I see it's failing to come here. Let's see. If market creates another high, I will mark that as my buy side liquidity, but since I have seen it, I know it, I'm looking into that. And also be mindful about this move as well. On the 15 minutes time frame, market is accumulating here. So what I want to see is manipulation lower. My higher time frame is also giving me that a retracement here is expected, and then a buy side. If I see from 15 minutes that accumulation happening, manipulation to the lower side, what is the next distribution? Upside. So lower time frame and higher time frame is aligning together. This is where you are getting a high probability setup. Okay, let me see. Price is still range bound. Okay, let me actually speed up so that it can come here. See, like all these areas market has accumulated, manipulation happened lower, where? To my OTZ. Now here I'm looking for a entry in the lower time frame. Since I'm not entering into 1 minute, I'm looking for entry at this level from either 1 minute, 3 minute, 5 minute, whatever gives me the perfect setup or move. Okay, as you can see, I can see in 1 minute liquidity grab, but my market structure shift has to happen above that level. Here it happened. So market, as I can see from here, it's not clean. There is no fair value gap, nothing except here, but at this moment I didn't get any market structure shift. So maybe on 5 minutes I have better price action. Yes, so on 5 minutes I have a better price action. So I would love to enter from a 5 minutes fair value gap, and this is my market structure shift. Okay, so this swing low, liquidity grab along with whatever it has created, and you can see like the accumulation, manipulation. Now I'm looking for a distribution above those highs. But before that, how am I entering? From this low until, I'm expecting this is the highest it reached. If it didn't go for that level, I'm expecting this is the highest it reached. With my OTZ, I have this fair value and maybe this order block sitting over there. So I'm looking into a, okay, Since market went even higher, this is the level I'm looking into the OTC. Still, that's the only fair value and the order block aligning with my OTC. This fair value is above the OTC, so I'm not looking into that. Now let's see where market came. Okay, it went even higher. Okay, now look, it has taken accumulation, manipulation, distribution. It has taken the sell side first, it has taken the buy side. So on the time frame 5 minutes that I'm looking into, I have a new dealing range that is also suggesting that market will retrace, then it will go higher. Now OTC is aligning here. Still it's the same thing, but this fair value is also aligning. So two fair value gaps. Whatever I do, I have to keep in mind that I would either enter from this 6-2 level, or I can enter from here. And since there are some liquidities, if market can come to this fair value, that is more that is a better possibility that market has taken the internal liquidity. Now it's going higher, so it will not come lower anymore. Let's see, like I'm focusing into this fair value because it's aligning perfectly rather than this one. So if market can come and retrace and give me an entry now, I will enter that there as well. Maybe I have missed the chance, but I don't know. Like on the 15 minutes this was the entry, but on 5 minutes I'm looking for an entry if market can come. Okay, so market came here, gave me the entry. What is the stop loss? Either the mean threshold, below the mean threshold, like around this low, or to be safe, this one is the best position to place the stop loss, targeting this high. Okay, because the higher time frame dealing range high is this one. Okay, this one. So that is where my most focus is. Let's say I'm in a trade from here, my stop loss will be either around this area. That is a very conservative one. If I get stopped out, I will look for a lower entry one more time until it takes this liquidity. If it takes the liquidity, then there is a problem. I have discussed this thing, and the entry and exit will look like this. Now we all know we will not hold until that far, take some partial around this area or 1 to 2, whatever you are comfortable with. But let's see like what it looks like. Now market came very close to my stop loss. It didn't stop me out over here. However, as I said, like conservative way of entering. It came again into the drawdown. It didn't stop me out. Finally, I'm in a profitable trade, but until it hits that, I'm not considering exit. However, if this is a 1 to 2, I can take some partial here, or if it goes around this high, I can take some partial. We all know what happened after, because that's exactly where market went and took the liquidity from. Okay, so that's the buy side. The dealing range by, oh sorry, I extended too far. This was the target, so this is where I got my all the profit, even though it went to the -27. Usually when entering from OTC, that's the target, but this buy side was the most obvious. So first partial, you can leave a runner with a break even stop loss, or whatever you can calculate around this area if you can find any proper area. This is where you are actually putting your stop loss. Now market even went higher. Now let me get back to that 4 hours time frame one more time. That's the accumulation, manipulation, like accumulation, manipulation, distribution. Now the entry, now the buy side liquidity is taken. This is why I didn't consider this specific move, this part, okay, this part as my sell side liquidity. From here on the 4 hour, this is where the accumulation is happening. But market, why I'm saying accumulation is happening from here, okay, let me explain that so that it can get better. Let's say this low, okay, this low, when market traded below these sell side liquidities, when market traded with this low, market failed to take the liquidity of buy side. Instead, market accumulated more, came again. So this was the sell side. Now buy side, it failed to take, so no manipulation happened on the upper portion or the lower portion. So that's why this whole area is my manipulation accumulation phase. Like from this high to this low, this is my accumulation phase. Market has taken the buy side, I'm waiting for a delivery what takes this sell side. Now market accumulated more and then manipulated more. Eventually market again did some accumulation, manipulation, and the same move took all these liquidities along with this and this. Now I have a dealing range from that high to this low. So buy side is here, sell side is here. But what sort of dealing range is this? Before I showed you a manipulation towards the downside first, then the distribution towards the upside. Now it's giving me the manipulation towards the upside. So this is a sell side delivery and the dealing range is a sell short dealing range. Same thing from the high to low, I'm looking for OTG and my point of interest. So when market had this on as the point of interest, at the same time I had this breaker block that is taking this liquidity and this liquidity. So two level of liquidities. Now again let me get back to 1 hour so that you can get a better view. This is a clean swing high or liquidity here, internal, and this is the external, two levels of liquidities. This is the breaker block that you are seeing around here. Okay, so before the breaker block I had a very small fair value in the 1 hour. Since as I said I look into 1 hour and 15 minutes mostly, so that's why I'm showing you the 1 hour. I had a very small that aligns with my OTG, and even in extreme level from the 6-2 until that 1, it's all in the extreme premium. So in the extreme level what do I have? I have another fair value right here. Okay, so this will be the fair value and I'm expecting this to act as a breakaway gap. Now if you don't know about breakaway gap, I'll just, oh shit, I didn't mean to put a brailer. That's a brailer. Let's say that's a breakaway gap, and this is just a regular FVG. Why I'm counting it as a regular FVG is because this fair value gap can be fully traded, but this one has level 2 defense over here. Level 1, first level of defense, level 2, and this is the level 3. Above that I might, like, all this is also my water block. So above that I have this water block as well, like even below that breakaway gap I have this wick that from where the order block starts until that high. It's a huge range, so I will look for a premium and discount range of this specific area and look into the mean threshold of that as well. So that's the higher or upper portion. So I'm expecting market will not fill up this one because it starts with a breaker and a order block level below that. So if it can keep some portion of this fair value open, it will be considered as a breakaway gap, but it has to break below that, lower that, like when it reach here it has to break a structure or break lower. When market came here, you will see from that specific fair value market fell off like this. Okay, so this is where the market ended. Where did it reach? It reached until this far. Now when it reached there, I had so many opportunities to take long from a different. Now I'm expecting a pullback until that far on a hourly time frame. Think about it in a 15 minutes time frame. I will give you Friday's price action. Okay, Friday or Thursday, I forgot, but I will give you from here. This is Wednesday. Actually forgot where exactly on the 15th. I think this on Wednesday, yeah, because this one in my time from here the move started. Hold on a second guys, I actually forgot the levels, but I think this was the level that I was looking into. Let me get back to hourly because there was an hourly order block from where market actually retest. Yeah, so this low, because that is where I exactly looked into a entry and targeted that high and this. like at this level, the fair value gap. So let me, yeah, here. So when market was trading here, what market did around this area is market took the, oh shit, again too far here, market took the liquidity, market gave me a structure shift. Where was it, guys? I actually forgot, but it was very clean. I can promise you that during that specific moment when there was not a lot of things, it was very clean. Either this was the fair value, yeah, I think so, so something like this or this I was looking into. So liquidity, market structure shift, that created a fair value here. This is where I entered into a long trade, and I discussed with my friend regarding that as well. Yeah, so this specific area, okay, after market traded here, this was the fair value I entered from. Oh no, I actually entered from a fair value here. Yeah, this fair value, because in 1 minute I found my market structure shift way earlier. From here, internal structure shift, it created a fair value here. This was the fair value I entered, but I was taking a partial at this high because that high had a hourly bearish fair value around that area. Let me check. Yeah, see, like this hourly bearish fair value. So I took my first partial over there in 1 minute. The entry I had from this, I took my first partial over there. Now you might be thinking, what sort of entry is this? How much did you made? Things like that. Third candle low that covers the order block as well. So this was the entry. This was the first partial at 1 to 2. When market gave me the first partial, respected this, doing this, I moved my stop loss right below this fair value here and kept the runner until this high. But when market was going higher, I kept trailing. When this liquidity was taken, I closed some partial as well over there, and then eventually this move stopped me out around this area with my final. That's the entry I showed you already at the very beginning, if I'm not wrong. Do you take 50% off on the first partial for 1%? First partial, it depends. Let's say, let me give you this, okay. These two lots is giving me $760 worth of stop loss, okay. Now this is still inside of my 1% risk to reward. You see, like 0.76. This is a paper trading account I have now connected, just keeping the 100k balance, equity 100k, because that's the account I trade with. Like my funded account is 50k, 100k and 150k, so 3 accounts altogether 300k. Now with 300k, if I divide that, I consider that I have 3 times 100k account. Like this is for my easy calculation. I don't risk more than 1%, either I don't risk less than 0.5%, because that is like $500. Now here 1 lot is causing that, 2 lot is 760. Now when $760 I'm investing on 2 lots, I'm happy, because if I can go 3 lots, okay, let's say 3 lots, it's going over my 1%, so I don't want to take 3 lots over here. So in this case, if I have 2 lots, I will close at the most obvious level 1 lot, leave 1 runner. If I'm taking 3 lots, I will close 1 lot here, 1 lot above that fair value, which is these liquidities, that is most obvious, I will close here. Above that, I will keep a runner until this or this, depending on what is aligning with my personal, with my point of interest, personal analysis. If that aligns, I'm happy to trail my stop loss. But after taking the second partial, I usually don't look for a bigger run like that. I move my stop loss according to plan. If it stops me, I don't mind seeing that, because even if it stops me somewhere here, it will still give me, like, think here. Okay, so my first partial was around this area, which was 2.41 or something. If the liquidity was not this clean, I would and the fair value, of course, this is the hourly bearish fair value, that's why I'm showing that level. Okay, so if it was not here and liquidity was not that clean over here, I would consider 1 to 2 as my first partial. But since this was the most obvious level and this fair value is the fair value from where market can possibly retrace or reverse for the sell side delivery, I targeted until this far for my first partial. This is 2.38. the next partial is above this high because that was accumulation, manipulation, distribution. So this high sometime, like in 1 minute, okay, so this high sometimes can hold the price and send it later rather than taking that. So this high or that high, whatever I have targeted, I cannot remember, but if this is the high I have targeted, that's another 4.5er. If I targeted the highest level but got stopped out around this pullback, let's say this is where I got stopped out, that's 3.8er. so all together combining, my total trade goes nearly 4er. so this is where I'm happy with that. Even if market goes higher, I'm happy to leave it and I don't look for another entry here. Now on Friday's silver bullet, when silver bullet started somewhat around this area, this low was the silver, yeah, so since I took a small entry, now don't get me wrong, I exited intentionally and exited because of my mental situation. Okay, I just wanted to finish a day with 200 plus profit. So when my profit went around 450 or something, which was around this area, I exited. I know it is going higher when I saw this and this. Okay, market closed above, came lower, failed to break below that fair value. So this is a inversion fair value that is happening right now. Later on, when market broke below, you see, like when it came here, it found some resistance over here. Now this is just because of the 1 minute's reaction on a hourly fair value for a short moment. I'm not using this fair value as my higher time frame point of interest for long time, because this is my long time point of interest. This sent price lower, kept the portion unfilled, literally completely unfilled. When market goes above that, I will be like looking into longs until it breaks below this. I will explain why I'm saying that way. I have a lot of area to show you, but about the 50%, as I said, like it solely depends on the price action. If I'm not confident about the price action, like if it's very choppy, sloppy, you see, like every time it's going above a certain high, it's creating some fair values. Forget about respecting, disrespecting, because nowadays market is at the all-time high and it will most likely is retracing towards the order block levels. But it created this fair value here. Okay, it's even bigger like this. Okay, now the risk to reward is even bigger anyway. So it created this fair value, went above this high, created another fair value, went above this high, created one fair value here, very small, but keeping an eye on this. When market came back to this fair value, I might have less confidence regarding this trade because I was not expecting a lower run until this far. Okay, so when I have less confidence at this level, I will close. If I have 3 lots, I will close 2 here. So that's like 66.66% of my total entry or position, and the rest I will leave runner. Things like that. Sometimes if it's taking too long, I'm feeling bored or I'm not willing to sit anymore in front of my computer, I will take all the profit, I will turn off the computer. It solely depends on the market situation, how long it is taking, or how I am like anticipating the market and how market is reacting on my anticipation levels, things like that. So yeah, I don't have anything fixed as my partial close, but I try to close partial because partial is the most important thing in terms of like growing your account. If you want to grow your account, you must take partial. And when you have the solvency, okay, when you learn or when you earn enough money, that if one day I can hold a position until it like comes back and stops me at break even, I have made enough already, I have enough money, things like that. After taking some partials, you can leave your stop loss at break even. So when this high was taken, you can leave at break even and leave like without even considering taking any profit. Just leave it until it reaches to your higher time frame, to a certain level that you are anticipating. Now think about this. If just one trade I have left like this way, okay, here, or my where was the hourly fair value that I have removed from my chart, I don't remember, let me check. It was easier to go back with the hourly candle. So since I was anticipating that breaker block level, maybe I would leave until that far, or this hourly fair value could have been a good target for me for the same entry from that same level. I would leave until that far, okay, take profit. If I don't put take profit here, I would leave until this far and put a alert here, like on the chart I would put like NQ is at that level, things like that. If I get the alert, I will quickly see how market is doing around that area. If it's falling, I would close the position around that area. Same thing, however you are anticipating, you put an alert here, you can look how this fair value is holding, and if market is breaking above 1 hour, you can monitor from here. You don't need to sit from here until there all the way, like it's how long, it's nearly 2 days or 1 day worth of trade. First thing first, on the prop firm I cannot hold until like I can hold only until it's 4:30 or 4:45, something like that. I cannot hold for a new day. I have to close the position. If I want, I can re-enter. That's the thing. On the next day during the Asia session, I can re-enter, but that is not a good idea because your entry will be moved from here to there, somewhat around this area. So I cannot hold like that. If the market is showing too much of bullishness, that is where I will consider maybe like holding until the session end, wherever it reaches. If it reaches this fair value or this fair value during my session or a specific time frame window, I will hold like that. I will close at that level. After that, whatever happens, I don't care. Like yesterday, I didn't care at all, like Friday, because I was not feeling like looking into the chart, waiting there, only because if I complete 5 days of winning trades, I can request another withdraw from my account. I didn't want to miss that opportunity. So that's the only reason I took another entry during the silver bullet. When market came lower here, started going higher, I literally entered from this. Okay, this black candle was my entry until that far, whatever, with one lot. I didn't even calculate the risk to reward, like how much I can take, how many I can take, because I know that I don't want to hold the trade for longer and I don't want to trade at all for the day. So literally I didn't trade, like see that 1 to 2, this is what I literally I targeted with just one lot. Whatever the profit was, I don't even know, like 335, maybe that was the profit. Actually, let me check. If I'm not wrong, that was like something like that was what I actually took. I don't remember exactly, but let me check, because I can check on my top step. Let me have a look how much profit I got on that trade. I don't mind, guys, I don't mind. I really don't mind looking into my trades, how many trades, whatever I did, I will show you all, because as I said, I was not, come on, load the chart please. Top step dashboard is very frustrating. It takes too long to load. I really, okay, I will give you just a second. Let me grab the, since I said it, look man, this is exactly what I did. Okay, like I was expecting 300 plus, it's not even that. Now I am not bound to show you guys these things. Okay, if you cannot trust my process, you should not be in this channel first of all, because you are not trusting your mentor or your teacher, whatever you are talking about. You have to trust the process first and what he says first. If you don't trust ICT, you are not, no matter what you do, you will never be successful with ICT's strategy. It's the same thing. I'm not bound, but I want to be clear. Okay, 16 February 261 as my profit. This is let me check what it shows actually. Total contracts, I don't know, it's showing 4, so I really don't know what I did. One total trade is 1, that is what it's showing. What the hell, why you are not marking? One trade, 100%, one, only 7 minutes of hold, so I didn't even hold the trade. Once I received that 200 plus profit, I closed it manually. Maybe that's why it's showing only one trade over here, and that's why it's multiplying my balance or whatever, like the equity, lot size, things like that. So I don't even know, like from here, if I entered from this candle 1 2 3 4 5 6 7 on this, I just exited somewhere around this area. Let me check. Yeah, something like that. I as I said, I was not feeling like it, I didn't consider. But look at that specific day. Okay, from the silver bullet, market was reaching for the higher time frame point of interest. Fair value, market just for a tick, market didn't come here, but when market went above this high, this order block, market tapped. If you didn't find your entry at this extreme order block level, which is here where market came, when market broke above that, it created 1 2 fair value. You are expecting this will be a breakaway gap. From this gap, it can, price can come here even at the lower half, but it cannot fill up the gap completely. So you are expecting this as a breakaway gap. You might enter from this fair value. See, that fair value is also respecting. So when market came here, you can expect that. A stop loss, since you are expecting this is a breakaway gap, you can put here if that covers your order blocks mean threshold. It doesn't cover, so I will put here. Now for to be more safe, you can put at the low. Okay, don't worry about that. 1 to 2, you found it, beautifully delivered. Market is respecting bullish PDRA. When it went above that bearish hourly fair value, this entry might not be a good entry, but when it is a good entry, you see inside of that hourly bearish fair value, market took the liquidity. It already closed above this area once, it closed again around this area one more time. Now this fair value was retested before, so I'm not telling this is your entry, but when this fair value and this fair value occurred, from, even if you draw from the low to high. Okay, I'll come back to the entries one by one. OTZ 6-2 level, again that order block candle is there, but I would mostly focus into this fair value since it's also in the discount. If it doesn't align with OTZ, I look into the premium and discount. Okay, that's why I'm saying the discount, it's also in the discount, as you see. So below that level of the fair value, I would consider an entry for another 1 to 2 run until it, if it's giving me that. Now this entry could have been a very high probability entry. Why? First thing is, market trading above a hourly bearish fair value beautifully, it respected the upper portion. This is a entry, but as I said, like since the market structure didn't happen here, I don't look into the wicks. If I looked into the wicks, then this is my entry, but I don't look into wicks. I want to see a displacement above the liquidity, because without displacement, your break of a structure, market structure shift is nothing. So the displacement happened from there and market closed above that. That's why I'm considering this. And below this level, market has already taken sell side liquidity, gave me a market structure shift. So there is no reason for market to come here one more time. Another thing is, the whole day, the thing that I'm talking about, accumulation, manipulation to your discounted array or the OTZ distribution. You see the accumulation, manipulation, distribution. Now you are entering from the distribution range. When the distribution happened, what is your dealing range? Sell side and buy side. This is the sell side liquidity, guys. This is not hindsight, I'm just saying it, that's why I'm showing it. It's not like that, okay? This is what I'm using. Literally, I have shared in my channel for a long time now, okay? It's been for 3-4 months, I guess, if I'm not making any mistake. From the low to the high, discounted array, mark again the OTZ. Look at the OTZ. You had this fair value that previously market respected. One more time, market came into that fair value. If you don't want to count that, this is your discounted fair value. Since order block is something that you have not mastered or you don't know, that's the discounted array. Below that, if you even consider this as your order block, look at the mean threshold respect over here. Market came inside of that mean threshold, it went higher, no body closed here, and never ever market came to revisit that. Now if you are entering from here, where could have been your stop loss? Let's talk about that as well. So entry, stop loss below the mean threshold, or first, second, third, 3 candle fair value gap below that candle's low. It came very close to stop you out, but did it stop you out? Let's check. So it didn't stop you out. What is the target? That dealing range buy side liquidity. You are not targeting any higher. That 2.6 with even one lot, that's $260 for $100 risk. Now this is where I take more positions, because 100 is 0.1% risk. I take at least 0.5% of my account balance as a risk. So 0.5% is $500. So in that case, I would consider either going for 5 lots, because that's the maximum I can take on my 50k account. So 5 lots, $500. Let me put it one more time. 5 lots, $500, and $1,300 as my return by just targeting from this to that. Now this is a very conservative place to put the stop loss. To be safe, just put at the swing low. It's still 2.17R. It's a good trade. Yes, it's a good trade. All you need to know is what happened before: accumulation, manipulation, distribution, sell side taken, buy side taken. Now from the high to the low, this is your buy side dealing range. Market came to your OTZ, point of interest. If you missed this one, I'm removing that. On your discount array, this is even, as you can see, like I actually forgot if that was inside of my OTZ or not, but let me check one last time. No, so it's not in my OTZ. You can enter from the 6 to level solely because you have a fair value gap above. Up to you, like you can maybe add some position from enter from here at some position from this level as well, or from the order block, whatever it is, whatever you have mastered, that mastery will come place. Simple. That fair value is in my discount. I would consider entering from here. A stop loss usually I'm putting, because of the price action, I'm willing to put here. Okay, from this low to that high, that's my OTZ, that's the fair value aligning. That's why I'm putting into this low. But what we do is, this sell side will not be taken. That's the first thing. Dealing range sell side liquidity. If I'm entering or putting my stop loss here, my entry must have to be at 6.2, because I'm putting my stop loss based on the optimal trading zone. So my entry has to be in the zone. So this entry, that exit, now it's giving me only 1.63. I can extend until 1.62, because that negative 27 is where market will head. Okay, possibly I target 1 to 2 because sometimes it doesn't reach there, but look at the reaction from that level, just around that level. This is the reaction. That's what I'm expecting, but I don't need to go until that far. I reduced my risk to reward, because if I go there, it will give me always 2.33, something like that, 1 to 2.3334, something like that. That is where it hit, but I saw like lot of the time it goes very close and then it reverses, so that -27 level is out of my calculation. Based on my analysis, this is the best risk to reward that you can target. Now look into your risk, how many you can take. So with 4 lots, $570 risk, $1140 as your profit. However, however you are implementing your strategy, mastering your strategy, this is where it gonna work like that way. Okay, so what is OTZ means, Shiva? OTZ is optimal trading zone. Okay, OTZ Z means like Z O T Z, so optimal trading zone. Now the entry, like these three is your optimal trading zone, but the entry from this level is called your optimal trade entry. Okay, so OTE in ICT's trading. Hardik brother, you are actually very late, but whatever I have discussed, it will be in the stream, it will be in the video, you will be able to understand. So since you are late, I will just put here, like in my channel I have shared about the Dillingham type 1 and type 2. So this is the type 1 Dillingham that I'm just showing an example. Yesterday's price action, it took the it accumulation, manipulation, distribution from the low to the high. The OTZ is here, market came to the OTZ, maybe this fair value could have been the entry, targeting that one. If you are putting your stop loss based on the OTZ, then your entry has to be at 6-2 level, whatever PDRA you can find. And since rather than looking into the order block, I was looking into this fair value, I would enter from the fair value, so the take profit could have been even better. And targeting nothing but this, if this doesn't give you 1 to 2, just extend until 1 to 2, don't go any higher. So from this until this this high, it was giving only 1.63, so I would love to extend until 1 to 2. That is how far market gave me. Even it went bit higher, but eventually market fall later on. So that was what I was talking about in short. But if you are entering from this fair value, that maybe, since I'm looking into this, but maybe you have missed. So if you looked into that fair value entering from there, you can target even lower right now. So whatever it is, keep a mechanical thing, like okay, I don't need to think for so many things. If I put my things simple, if it goes there, will it go there, if this is the liquidity or that is the I don't really need to look for those. If I'm even closing partial, what I can see here is it created relative equal high over here. Even when market was doing this, it created relative equal highs over there as well. Look how many candles are exact same level over here. So I'm confident that market will eventually go above this. And since I know my higher time frame point of interest, I could just hold until this far. Now think this way, this is where you got your profit. You might have trailed your stop loss maybe below this low because fair value and some volume imbalance, I don't know, I'm just giving you an example. So you could close all your position here, instead you have maybe one runner. Okay, one runner for what? This level, because that's your higher time frame point of interest that you are anticipating market can mostly reverse from this level to this level. How many ticks? That's 4 handle, which is like for one lot $80. How many you are willing to give up for that $80? 10.5 handle, is it worth it? For me, it's not worth it. If I see something like that, I would love to close the trade at 1 to 2, because above my 1 to 2 it's only 4 handle, but the stop loss I have to put, maybe okay, I'm putting it too far away. Maybe this volume imbalance I'm not taking any, like I'm not carrying this, I'm just putting here. Okay, this time I'm lucky, market didn't came until that far, but I'm putting here. After taking the partial, I'm putting my trailing stop loss here. Is it worth it? 4, and this is 6.75. So for 4 handle you are losing or willing to lose 6.75. Is it worth it? No. So I'm not willing to trail my stop loss anymore and trail my take profit anymore for less reward than the risk I'm taking with my current open profit. So in this case I would simply close it here. Okay, let's say I took partial, left some runner, now trailed my stop loss or started trailing my stop loss. When I saw this reaction, I will have in my mind that just go back to my 1 to 2. I will close. I don't even want to wait for this high anymore. I want to close if it touches my 1 to 2 level one more time, because it's not worth the waiting or the risk I'm taking. It's not worth anything. For $80 I'm risking $125. That's or nearly like $140 for $80. So it's a negative risk to reward for me. And for a negative risk to reward, I don't want to trail until that higher time frame point of interest, even though I know market will go there before it retraces. By what do I mean by I know? Because that's what it's doing for last 10-20 years. Okay, it cannot just take a liquidity and reverse immediately. It has to reach a point that you might have missed, but there is something that you are missing because of your knowledge or lack of knowledge or lack of focus. You might be missing something, but it cannot just retrace from a certain level. It started retracing from here, then it again went higher. Why? Because this sort of liquidity, I think I don't know if he's here or not, but someone asked me in a comment that how do you identify a inducement, because I talked about inducement so many times. You see this one, how I mark a inducement. Let's talk about that. This is a fair value. Okay, let me go to reply mode so that it doesn't conflict. This is not this one, actually I was showing this one. So this is a fair value that can possibly a breakaway gap, whatever it is, I don't care, but it's a fair value. Now when market came below this fair value, okay, this fair value, this area is now balanced. When it will be like not balanced, but this fair value is getting disrespected and it's completely filled up. So I'm not willing to look into that. But where is this low? Is there any reason for market to go higher from here? It didn't even reach the high of the order block. Now the next candle, it came until that level of the fair value. Now you have to understand the fair value gap. Let me move this on here and keep this area clean. From this high and this candle's low, market was below this level, like below this line, market was fair. There is no fair value here. Above this line, market was fair until that fair value happened. So market was fair above that line. When market came exactly on the line, it's not the retest of the fair value, guys, or refill or rebalancing the fair value. Fair value will be retested or rebalanced when market goes at least a tick inside of that area below that low, because before that low, whatever is here, it's all balanced. Here it's not balanced, it created equal low over there. So this low, if market fails to go a tick lower inside the fair value, I'm anticipating this low, a low that does not make sense. This low, even though you might be thinking this is a fair value retest, it's not a fair value retest, guys. It just created equal low over there. This is my inducement liquidity. So I'm expecting next time market will come and take this liquidity. For this specific reason, I will enter, if I enter from a, like if this is a entry, I will enter from at least a tick below that level, because I know market will take that liquidity as my inducement liquidity and then market can go higher. Now as I said, this can be the stop loss, or this candle's low, or whatever you are anticipating, that can be the stop loss. And if there is any more reason for market, for example, what I look into is this extreme order block level. So if market is coming here, it's a high probability market can come here. So rather than putting a entry here, I would look for market if it can come inside that order block area or lower than my anticipated area, I will market execute that trade so that I can get even a lower entry. This is how I redefine my entry. You see, market took that liquidity, came below. Maybe on this candle I am already in a trade. I saw some drawdown, and remember where I was talking about the stop loss, this low never came. Even if I consider the fair value gap candles low, this was the low, came very close to it but never stopped me out. And by now maybe I didn't even put my stop loss yet, but I'm willing to take the loss any of these two levels. I don't know exactly where I would take it, but here or here I'm willing to take the stop loss. Now this liquidity will be taken because of what I just explained, that fair value gap is here above that area. This is not the high of the fair value, this is upper portion, but the fair value high is this 50% above that. This is the higher quadrant of your fair value gap, this is the lower quadrant of your fair value gap. It's better if market can retrace or start to show rejection from the upper portion. It doesn't come to the lower or close below the midpoint, that's even better, because that indicates that yes, this was market's target, now it's going higher. That can easily be the thing. But whenever market reach to a higher time frame, like all-time high or areas like that, close areas like that, when you have nothing on the left to refer, you will see most of the time market is coming back to the order block level. Order block, just put on the high, very close, but anyway I'm not counting this one, although this can be also considered. Okay, I'm sorry, this is the order block, to be honest, because when this green candle happened, that closed above that high, I thought it didn't close above, and this is the retest of that area. At the same time market traded into the fair value. So this is usually called propulsion block, but to keep things simple I'm saying this is the order block. That's where market came. When market came here, it created, let me check if market closed above this or not. No, it didn't close above. Instead, see that this candle closed above, later on market came here, and when market closed above this area, it created a fair value. Let me remove all the things and let me explain one more time. When here market traded above and closed above that candle's high, the very next candle it created this fair value. When the retracement happened, where did it came? To the order block. Same thing, now this is my order block. Why? It has a fair value here, fair value above. When market came, you already saw this part, but where did it came? First time on the order block, second time even on the extreme order blocks mean threshold. Let me check that on last time with you guys. That is where it retested, then went higher for the buy side. So this is what I'm saying, you have to look into the chart and anticipate, like previously where market is trading and from where it is retracing. Everywhere you look, you will find this sort of things. Okay, you see, like these three candles, liquidity, market structure, however you want to call it. When market closed above that level, where did it came back? From the extreme I'm showing you, this is where it came back. So when another time market came to the same level, let me show you this as well. I don't know if it's too small or not. Here, see the mean threshold, market went higher. Now I was not willing to see another revisit of that mean threshold. Instead I would see something like this, but still it created equal at the similar level. It started going higher, broke above, gave me fair value gap. From that to this is my new order block. Okay, when market closed above, market retested or revisited the order block area, along with that this fair value, or you can call this inversion, however you are anticipating. If you are not calling that, then this area market did not retested your order block one more time, it went higher. Now when it's way up, this is where it took another liquidity inside of a fair value. So when you have no revisit of a order block, you don't look for a order block straight away here, you look for something like this, liquidity grab inside of a fair value when market is closing above that high and those black candles, if it has created fair value or not. Now in this move, remember this is the liquidity grab, this is where market took the liquidity. Now even though these two candles are still in that leg, the lowest down close body is with this candle, so this is your order block. Market went higher, revisited that. Now until it goes above this candle, or since this is the lowest it created among that, this is your new propulsion block or order block, however you want to mark it. Until market goes above that, you have no order block. So market went above this one because this is the lowest down close and there is a green candle in between, like multiple green candles. So that's the only last down close and lowest down close that has like qualified for becoming order block. Since it failed to create a fair value gap, I would not consider this as a high probability order block. Here it did not failed, especially like it didn't even come to there, it came just to fair value gap and then went higher, but when retraced it came back to this order block. So things like that, I don't know like how much I was able to give you the information, but mostly you will see fair value or order block that is responsible for a creation of fair value. In this case you have very small fair value there, some volume imbalances at that order block level as well. This is also fair value gap, okay, because it gap opened, so it needs to be filled or fair for people who wanted to enter from this level or level lower. So this area is also a fair value gap, even though we call it volume imbalance, but it's also fair value gap. So when market traded here, you see like the mean threshold of this candle or the middle point of that candle, look how beautifully it tapped and then went higher. When it broke above, now I can look for a order block around this area. Look, this is where market went above the same candle, order block started from here until there, see there, and you have the fair value as well. Now this has the lowest down close, that's why I'm saying this one, okay, like this move, not this one, the lowest down close until it broke above that area. Same thing, when that happened, retest happened, this is where these two consecutive candle can be considered as a order block, because of that it has the exact same level, right? The body of the candle has the exact same level. So in this case there is a green candle, that's why I'm discounting these two. If you want you can count that as well. You see this wick came inside of that, it didn't take that equal, it very close, it came to the closing price of that order block, a tick or two below, but nothing closed even inside of that area, it started going higher. Now that's how I look into the order block, okay. I just zoomed in, it's a very choppy price action I showed you, but if you had that thing in your mind, just look how many times I have showed you in this small little move, okay. So that's how you decide. And let's see, Hardik, bro, I'm in India right now, there are no light, we'll be back in Melbourne soon. How's Sydney? Sydney is good. Melbourne had a huge thunderstorm and flood as well, if I'm not wrong, I saw in the news. And during those flood and thunderstorm 3 days in Sydney, I had a lot of not huge amount of rain, but the rain was something like the whole day for nearly like 48 hours or so. There it was drizzling, there was no non-stop small drops of the rain, something like that, drizzling the whole day. So yeah, I mean it was not very good weather here to go outside or have fun in the open air or something. However, yeah, like overall I'm enjoying whatever is happening, I'm enjoying. So can but it can act as a IFVZ, right, bro? IFVG, which one you were talking about? I don't really know at what point you actually wrote me the message. I'm sorry that I'm reading it late. IFVG is a very complicated thing, but if you can master the FVG, you will know how the FVG works. Okay, because for me IFVG has a different definition. I was okay, I'm sorry. Where are you from, brother? Keep smiling. Welcome. I'm seeing you for the first time, if I'm not wrong. I'm from Sydney, but usually like by birth or by the nationality, I'm a Bangladeshi guy. I'm from Bangladesh. I came in Australia 2013 for higher education. Since then I'm still in Australia. Finished my education, but I love these things. Okay, YouTube blood. You bro make a brief video on daily bias. What is bias and how to identify it, please? YouTube blood. Thanks a lot, brother, for joining. I'm seeing your name also for the first time, if I'm not wrong. Welcome. Daily bias. Let me give you daily. But as I was saying at the very beginning, you must have to be flexible. So for the bias, I would look for things like this. Okay, from the weekly, what I can see is market is willing to go higher. Okay, like this candle, I don't care. Why I don't care? Look, every move after this many green days, only one black day. If I cared about this candle, then I would not consider, like I would be in a losing trade or losing bias for all these weeks, for 5 weeks. Market, all I'm seeing is respecting the bullish fair value. It's going higher immediately, and this is a weekly swing high. Okay, like this high is a weekly swing high. If you don't understand swing high, for ICT you need to have at least one candle on the left and right. For me, I look into at least two candles, but that's on the lower time frame. On the higher, why I'm saying this is because to form this high, I had 3 weeks altogether, which is 21 days worth of data. So one high on the weekly is good enough for me. But whatever, if you don't consider this here, go to daily, that high will be clear to you. Okay, this is your swing high. So when market revisited that fair value on the weekly and the daily level, what I'm expecting here, right? Okay, let me show you that as well. For a short moment of time when market was coming lower or showing some rejection, from this low to this high, that's my first fair value. That also aligns with the OTZ, because I can see by looking into the position of that fair value. But see, OTZ, and this is the other fair value. Now when the first fair value and second fair value happens in one move, I consider this will be a breakaway gap at the very first stage. If it's a breakaway or not, that will, price will decide that, but that's how I am considering that. And this is the fair value. Now why this one and this one I have to be like flexible here is because since this fair value is sitting above my OTZ, but it's part of it is below my equilibrium level or in the discount zone, I am expecting at least this far of the fair value will be filled, then market can show some reversal. Look, that's where market came, and then market started going higher. When market went above that level, now I'm looking into how market went above that level. If it is failing to go above and displace above, or if it is displacing and going above. It is displacing, as you can see, like it closed way above that level. The very next candle, it was a doji candle. Since it's all-time high, we can expect things like that at all-time high. The very next day market started going higher. Now it created a very small little fair value here. So it's my first fair value. I was expecting that market will create another fair value around this area. It did not do that. Instead, okay, it actually created, I'm sorry, I didn't realize that this is a small fair value on the daily level. So I'm expecting market again from this move to this move, market to come in the discount area. Now these fair values are in my premium, so for that reason last week I was bearish. Bearish means I was waiting or expecting a lower run into the discounted array. Now there is no fair value around this area, but I have some new day opening gap, some volume imbalance. I'm keeping all of them aside. I'm marking this one single candle as my breaker block. Let me remove all this, okay, so that you can, even though yeah, like just keep that one PD array for this leg. So I was expecting market will come here and show some whatever rejection. If it wants to show, it can show there, and then it can go higher if it wants to. Market came in, okay, that's the end of the chart, but anyway, market came into that discounted zone. And if I want to like see that's OTZ, market took these liquidities, it started showing the rejection. Now it failed to go above that. From where? From a bearish fair value, bearish breaker blocks, min threshold. Now why that is my breaker block? Because when market created that, it created a fair value here as well on the bearish fair value level, okay, daily bearish fair value right here. So now I have two levels to keep my eye on, okay. Number one, look where market is stopped, on that breaker block area, okay. Previously the min threshold or the middle point, breaker block and order block, the middle point is called min threshold, okay. Only these two has the min threshold. Other than that, everything else is CE, consequent encouragement. So this is a min threshold for bullish price action. This is a middle point for bearish price action. I want to see first on Monday or Tuesday, whatever day it is, how market reacts from this bullish price leg, okay. If it close below that min threshold, I'm bearish until it takes this low and revisits or retests this fair value. If it is failing to like close below this, or if it shows a bullish reaction and close above this min threshold, I'm bullish until it takes that high, and then how whatever level it reaches based on the price action, I will look for something like this. So that's a possible standard deviation from here, or I can look for a possible standard deviation from, where is the other part, here. So market reached into the 0.5 previously, it reached very close to that. If it's not making sense to you guys, I will show you. As I said, like the ICT mentorship, this video, please do not miss this video, okay. Please, the advanced theory of ICT breaker, do not miss this video, because it will give you so many. Your standard deviation should be from the leg A to leg B. So let me check where is my leg A and leg B. So this is leg A and that is leg B. So the high, I'm marking this high, but it should be here. Now if it's a huge range, I can consider the bodies, and 0.5, you like from 0, very close to 0, it's retracing, but I want to see market going around this area. So 615 or maybe 1895, these are the areas if this min threshold is broken. If it's not broken, then I'm looking for a sell short until this sell side liquidity, because market has taken the external buy side liquidity. Now the target is the internal sell side liquidity. Market goes from internal to external. Why external? Okay, let me show you that as well in case you have the question. You see, this was the all-time high. There is nothing below that or behind that. So this is a complete like external. What it means? Outside. So this is the outside the range liquidity. Market took that liquidity. Now it has nothing but rebalancing this fair value, because that fair value part of it is rebalanced. And how far it can come, that completely depends if it's a breakaway gap and market wants to keep some portion open or not. If market can come here and rejects, then this liquidity, the high of it, maybe 25% of this fair value will be my point of interest. I want to see some portion open here, then market going higher. So from the external range that market has already taken, now market is coming lower. So once this area is broken, I want to see market is going for the internal range liquidity. This liquidity, all of them coming weeks. Okay, maybe this week and next week, I don't know. I want to see the price action first. But for the moment being, since I'm seeing this, okay, on Thursday market traded above, closed above. So the buy side was the target for my Friday thing. Friday buy side taken, market failed to close above, instead it came lower, closed below the Thursday price. So since it closed below the Thursday price, I'm expecting a lower run on Monday, and that lower run on Monday and Tuesday maybe, because Monday most likely it consolidates, but if it can expand, it's better. Okay, so lower run on Monday, if that Monday candle can close simply inside of this breaker block, which is below this candle's wick with a displacement, and if it creates a fair value here, then I'm bearish. Literally, I'm guessing this mean threshold will not hold the price anymore. Market will go for this liquidity and eventually it will come to this fair value. So everything is depending on Monday's price action. Now every day is not for trading. You have to understand that you can make money every day, but you cannot find high probability setup or the setup you are anticipating every day. You have to keep that in mind, and I hope that makes sense. I mean, every day is not for trading, guys. If you trade every day and look for a bias every day, because there is a daily thing as well, mostly Mondays. Look at this Monday. What is this? It's a very small body over there, huge wick. That's accumulation. On the Tuesday, mostly we see the weekly manipulation. Now think this way, okay? Every week, what we expect from market is, let me get back to weekly chart so that I can show you. This is the previous week's close, okay? It did not provide me the change in state of delivery. The body failed to close below this opening price. It did not show me that. Instead, what it did, it took the buy side, it took the sell side, failed to close above, failed to close below. What can I get from this weekly candle? Literally nothing. But what was the drawn liquidity? The buy side. So buy side taken, failed to close above. Now I can look for a sell side delivery. That's the first thing. But how a weekly candle forms? This is previous week's closing price. What I'm expecting is, if market is bullish, okay, if market is still bullish, willing to go even higher, what I'm expecting is, from this opening price level, market will first, this is where new week is opening, okay, market will first come here, it will create a swing low or whatever it is, it will create a low. Maybe this week's 50% level is a good area to look for a reversal, since it's also inside the fair value gap, weekly fair value. So this huge unusual week's 50% can be a level you can look into. Market will come to that level, whatever level you are anticipating, maybe the 50% and that fair value. Market, this is Monday and Tuesday's price action. That's what I'm expecting. On Wednesday, if market is bullish, I want to see market from here, it's going higher above that high, taking that buy side liquidity, coming back inside the range on Friday PM session and closing somewhere here. So what that creates is, the lower portion of the weekly candles wick the higher portion of the weekly candle's wick, and this is the body of the candle, something like that. But this I want to see, maybe like I just draw on the high hand side. If it can close above this week's high, okay, above that level, then I will expect another higher move, bullish wick. I'm expecting bullishness until market can give me a displacement below this low on the weekly level or on the daily level. Until market come and displaces below this low, creating multiple fair values, I am bullish. Okay, especially this mean threshold gonna say a lot of things over there, but I hope you got the point. This is the point for every time frame candle. Okay, let me explain that. On a 15 minutes time frame, let's say you are on a trade on 1 minute time frame. On a 15 minutes time frame, what do you want to see? Is market opening from the previous candle's closing price. Okay, this is where, let's say, previous candle closed. Let me actually make the whole drawing in a bigger like the pixel 4 pixels, so that you guys can see properly. This is where a 15 minutes candle opened. You want to see that first couple of candles is coming lower. Okay, why you are willing to see that on a 15 minutes? Remember, you are trading on a 1 minute time frame, and you are willing to see on a 15 minutes time frame, market is opening, market is first couple of minutes, market is coming lower. Now lower where? Maybe there is a fair value gap around this area, you can expect market will come there. Okay, or order block, breaker block, something on your 1 minute that you are expecting market will come until this far. If you see that is happening, the next thing you want to see is from that fair value gap. Let's say this is a fair value gap, market first opened here, came lower into that. From that fair value, you want to see market is displacing higher with new fair values. When it displaces higher, that is a high probability that this candle will expand higher. Okay, and you are in a good trade. When that happens, you are looking for new fair values around this area or even higher, doesn't matter. You are just keeping your eye, you already are in a trade. When candle reaches higher above a certain high, you want to see where that candle is closing. If it's closing the previous candle's high above that or below that. If it closes below, there is a high probability that market from here it can come and take that low that recently it created, and if it wants to go higher, it can go higher after taking that liquidity. But there is a high probability market can go lower. Why? Because okay, let me finish the first part. Okay, so on the 15 minutes candle, first couple of minutes you want to see a lower run, maybe one candle, two candle. But why you want to see that? Because you want to see the lower wick is created first, then market is going higher and creating a green candle on the 15 minutes time frame. If you are trading on 1 minute, that's why when I trade, I keep my chart like this. Okay, here is my 15 minutes, here I put my 1 minute, things like that, this way. Okay, but for the thing, I'm just coming here and showing you here. Okay, like for the purpose of, so first the wick is created, then the body is created. At the very last couple of minutes, you want to see a short retracement, not a huge retracement, short retracement. And if it retraces too much, by the end of last candle, what do I mean by last candle is every 15 minutes last candle starts at 14 minutes time. Okay, what do I mean by that? So let's say you are in the market at 114, the last candle that will start at 114 on your chart, which will show here, and that candle's closing gonna decide if you want to hold your trade any longer or not, because it has already taken the high, recent swing high. Now market can come lower, there is nothing wrong with that. But if it closes above that recent swing high, which is usually on the 15 minutes you will see the previous candle's high or one or two previous candle high. Or okay, let me go to 15 minutes then. This is getting hard for me. Okay, let me go to 15 minutes in a good area. Yeah, let's talk about this. On the 15 minutes it closed above this candle's high. Now we are expecting market will go and give you a higher move. This is your 15 minutes fair value that market created. Now on the next candle it failed to close above. So now I am expecting that market will come and take this liquidity, maybe retest or revisit this fair value. If it can hold, market can expand higher. If it cannot hold, and if I see market is like the 15 minutes candle is closing below this level, this is where I will be tensed, because I don't want to see that it's closing below that liquidity level. If it closes below, there is a high probability market can go lower. The very next candle, where did it close? Below that liquidity level. I don't care about this swing low, I care about the previous candle. It closed below that. So this is where I don't want to be involved in a bullish run from this fair value. Okay, why? Because it's a huge displacement below that previous candle's low. And why exactly this candle? Where is, how many days it is? 12 February. So it will show me on 1 minute. In 1 minute, look how it looks. You see that low? In 15 minutes it was just this low. See this low, a candle's low. In 1 minute it's a swing low, because it took 15 1 minute candle to create that low. It's a swing low. When it closed and displaced below that with that 15 minutes move, this is how it looks in 1 minute. You want to enter from here, how do you know that it can hold here? And also in 1 minute you have nothing around this area that can hold the price. Only this small little fair value that is sitting at the bottom portion of the 15 minutes fair value. This is a high probability fair entry? I don't think so. If you understand this part, a lot will be clear to you. When market closed below the previous 15 minutes candle low, in 1 minute you are seeing something like this. Now on the 15 minutes, what I'm expecting? Another lower expansion. Now it's already in a fair value gap. If the new candle closes below that candle's low, it's not respecting that fair value, it's going here. Now let me go back again this candle. How can I determine that part in 1 minute? In 1 minute, remember where my 15-minute candle closed? This is where my 15-minute candle closed. So I want to see, like, even though it went before that, if market wants to go higher, okay, I want to see that market is first coming lower, then expanding higher and creating new fair value. From there I can consider entering, because it's in a higher time frame point of interest. It has taken some liquidity from a lot of areas. Okay, but let's see if market has expanded lower first or higher first. It expanded lower, lower, lower. Eventually it never went above that previous opening price, so you don't have anything to enter. On the other hand, since it closed below that 15 minutes bullish fair value lower, like below that fair value, bullish fair value, it created another fair value here. This fair value can be your entry. And where is your stop loss? If you enter from here, it has to be at the high. Okay, because market can revisit the middle point one more time. This fair value you can enter from here. Okay, but if it's too much to put a stop loss, don't consider entering from there. Like, this is how you are utilizing your resources. On the 15 minutes time frame, I'm looking into this order. That's why I have two charts. I just enter for the 1 minute point of interest. Okay, but every entry, if you see me, like, I have some silent videos on my channel. I said, if you are entering from this specific like, I want to see a close above, things like that on my videos. Remember, like a lot of videos, the 6-minute video that I uploaded from my mobile phone without any audio. Remember, so many things I'm writing over here during that specific moment. You know, like how much I made on this day, nearly $3,000, and this is the last run up that I have left over there. But I don't know, like 2.6k or something. Yeah, 2.6k, something like that. But every time something is happening, I'm just drawing levels. I'm not manipulating anything. My stop loss, my trailing stop loss, my take profit, my entry, I'm not doing anything. I'm just, this is from my mobile. So let me give you the other one that I usually see, this 10 minutes video, 1.3k. Look, 4 p.m. will be a blast. This is no audio. These sort of things are something that you want to, if you are learning from me, I don't know how much I have given to you guys or how much I was able to give you guys, but if you're learning from me, when I'm entering into 1 minute, in the 15 minutes, just look, I have a lot of things drawn over there. On the left side, I have a line over here. What is that? The previous candle's high and the middle point of that week. I have drawn that high. I want to see by the time, you see, like there is a line over here. What is that line? That line is the 4 p.m. candle, the last candle before 4 p.m. This is, you will see me writing that, and I have already wrote 4 p.m. will be burst. That's the 4 p.m. So candle before that will be the 4 p.m. candle. So at 4 p.m. I want to see first it's coming lower, then it's going higher, because as I said, I want to see the lower wick is created first, then market is expanding higher. At the same time, I'm keeping an eye on where market can go, where market can, you see that 15 minutes order block I have drawn over here. It didn't create any fair value, but why I draw that order block? Because market is respecting that order. It's a order block, but high probability is the one with fair value. And in 1 minute, I have more reasons around that area. Although in this area you cannot see on the chart, but go back on this specific day at that level, you will find your order block. I wrote like 4 p.m. will be a burst. Why I wrote that? Because I'm seeing it's generating liquidity. At the same time, market is respecting the levels that I have anticipated. This high, it failed to, if it fails to close above that high, like this high, I am very worried to see that, okay, because the next run can be below these lows. So let's see why exactly I did that. Look, market failed to close above that level, okay. So I'm worried because I want to see if market is coming lower and take this liquidity or not. Look how far it came. If I'm not wrong, oh no, this volume imbalance is how far it came actually. But 4 p.m. 4 a.m. I wanted to see, I actually wrote p.m. over there, but it's a.m. okay. So 4 a.m. I wanted to see the lower run first so that the wick is created. The next thing is it has generated more liquidity along that swing high. So now I'm expecting market will go higher, and I'm just putting my partial. Eventually I actually changed my levels and put one partial here, took 1 or 2 here, things like that. I don't remember exactly, it's in the video, but I changed, and now I still kept that mark, okay, because that's the highest it has created. I want to see how market is displacing above that high. If it displaces, it will go there. That's why you will see me changing the things here, like the take profit level. First thing I wanted to make sure that at 1 to 2, if it reaches, I will take some part. I was pointing at those things. I will put 1 here, 1 there above the buy side. Why? Because that is my higher time frame point of interest from where market can reverse. Market gave me the 1 to 2. See, like a lot of things I'm just drawing. Mean threshold of this, that is where I trailed my stop loss, 3 lots, whatever it is I have. This sort of thing I'm just putting back and back, and this is like I'm writing displacement now. Why I wrote that is because it's the last 5 minutes of the 15 minutes candle. If this candle is willing to close above that previous high, I want to see a bigger move now. I don't know market will give me that or not, but that's what I'm expecting at the moment. I don't want to see market is staying around this area for too long and then eventually closing below or at that previous high level. That's why I didn't remove that high, but I'm expecting a displacement because the last couple of minutes, if market doesn't expand, remember the upper wick is yet to create, right? Because it still has 4 minutes left. So at that specific moment, market will give me a lower run as well. At the last 1 or 2 minutes candle or something, it can give me a lower run for the upper wick creation. So I am expecting a displacement right now, so that the last 2-3 minutes, if it displaces, it is still way higher than that previous swing high on the 15 minutes, that gray line. This is how I anticipate the market. Market will deliver me that or not, that I don't know. No one can guarantee that, but when that is happening, I'm happy and I know that I'm on the right side of the market. So I'm more confident. I'm expecting a displacement. I know my eyes are here. Okay, it is this candle and 2 more candles. Market will go like market will create a new 15 minutes fair value. Look at this candle's run right now. Okay, how long it took. It has already created a fair value. I was expecting market may possibly tap here and then run, but eventually it did not tap there at all. Within this this candle just went like crazy and gave me all the profit, I think, with this one single candle or something. I don't remember, but last 2 minutes I'm expecting a lower run. So this candle will go higher. The last candle will give me a wick of the 15 minutes candle. So let me check. Okay, this candle is still, it's higher, like it's way higher than my anticipated level. So that's where one single candle displaced. Okay, and the very next candle was a black candle. Eventually it retraced, things like that. I don't know if it's in my video. See, like it tapped into that, it's coming low. This candle closed as a black candle, that's creating the wick. Things like that. Okay, like small things, if you can add it up together, that's exactly what I'm trying to give you guys here. So when you are entering into, like, this is the thing, guys, if you are looking into 15 minutes for every single candle like that way, it might be overwhelming, the information. Better if you can look into hourly candle. Now on the hourly, what you can see, it has taken the buy side, it closed below that, the same candle closed below the fair value as well. Now you have very less things to talk about here. Where is the next target? This low. Eventually there is this fair value below that low, so I'm expecting market to reach at least here. This is how you can anticipate. Okay, see, like how you can anticipate. It's just not gonna take this. I'm expecting it can come here. Yeah, it came even below that level, then closed inside. But if I find a sell short setup around this area, which I like, if I find, and if I can take, how far can I target? Not just this liquidity, or even not this liquidity, because it will not reverse just by taking liquidity. It will come to a imbalance, rebalance that, then if it wants to go higher, it can go higher. If it breaks below that, I'm looking for more liquidities below this level where I can possibly have some imbalances like this one. Okay, and above this one, what do I have? A very unusual wick over here. So the 50% of that is a possible level where I can look for a partial or even close my position if it's giving me good risk to reward on the 1 minute time frame. From here until here, it's a very good area. And remember what I expect here first, market will go higher first, then come lower, so that it can create the upper portion of the wick. Same thing here, came lower at the last moment. I want to see a small retracement, so then it create the lower portion of the wick. In 1 minute, the last retracement was like this, it came lower again, and this is how far it retraced. So the wick created was from here to here. Okay, so let me mark. If you don't understand how the candle works, you see this line on the hourly, that is the wick. see, this is how in depth, like in my channel I started, as I referred to that specific part over and over again. I don't know, like if you have watched that or not, guys. If I'm missing your comment, I'm so sorry, because I was in a topic, I was not actually looking into the chat. But yeah, you can write me whatever you want to write and I will be able to reply. My channel, the very first video I started with, okay, here 4 months ago, I started with water block, candle. What are candles, the anatomy, the formation, things like that. Okay, the second was identify swing high, swing low. Here I talked about like ICT looks into one candle left and one candle right, but I like to look into two candles. This is my thing, because one candle a lot of time can give me fake breakouts, fake information, but two candles is stronger than one candle. That's a better swing high than one candle, right? So this is how I'm refining my strategy or way of looking into chart. And then I actually talked about these things as well, like if it's a daily level or weekly level, then maybe I can look into one candle, because it takes so many hourly 4 hours or 15 minutes candle to form one single candle's high. Okay, that's like 24 hours worth of data. So 3 candle forms a swing high in daily. That is, I don't know, like you calculate that. I think 72 total 1 hour candles, hourly candles. So 72 candles is forming a swing high or swing low. So that is where, like higher time frame, I can look into one candle on the left, one candle on the right, but on the lower time frame I cannot do that. Even on the 15 minutes I want to see at least 2 candle on the left and right. I know that even one candle's high in 1 minute is a swing high, swing low, but 15 minutes perspective, the high and low is very important. And this is why I started 4 months ago from here. Okay, and then I gave the very basic, like what is a fair value gap, just the very basic, just the definition of it. I said in the video, I think definition and expectation, things like that I shared here. Now ICT gaps, in this video I explained about a lot of gaps. Okay, but which one to use, how we can identify, I never talked about that. I had intention to make videos like first you identify things step by step. I made even the trading view tutorial videos, every single settings from this publish to all the way from left, all this I have explained everything. So I don't know if you have done it or not, but yeah, that is it. And then what, breaker rejection, risk to reward, follow this to learn ICT, things I have shared. I had more to offer, but people rushed me into sharing strategies. So then I shared 3 things regarding a strategy, like silver bullet, Dillington's type 1, Dillington's type 2, all of them are a strategy, and the major entry models that you can look into to build your own model. Okay, like the one that I usually look into is everything here, those things, how to build your own strategy. This, after this 4 video, I have not uploaded any good lesson or learning video except for this 1 hour 11 minutes on, because here I have explained the entire week, the entries I have taken, and what exactly that model was looking like. Okay, in this week I got everything from the silver bullet delivery to the Dillington's type 1 delivery to the Dillington's type 2 delivery. Everything was there, and every week you will find similar things. Okay, so if you can watch that. Is your YouTube channel has all beginners ICT materials? I want to learn it. Okay, so no, I don't have the beginners. I have from the 0 level. Okay, that's why I said 0 to pro. But if you have some idea what is a fair value gap, what is a water block, what is a rejection block, or what is a inversion fair value, things like just the basic definition, if you know that, you go to ICT's channel, start with, if you want to save your time, you can start straight from the 2022 IT model. But every single person, like if you know Jetcap or Kyle, if you know Ali Khan, if you know Paladin, any of those people, Omar, Ashraf, if you know any of those people, everyone suggested the core content. Everyone suggested the core content. At least go through the 12-month worth of core content. Take as much notes as possible from month 8. That's the most important. Especially in my channel I made this video where to start ICT. I cannot remember which folder I put it, like which, here. Follow this to learn ICT, where to start to learn ICT. Here I have talked about, and in this video description I have every playlist from ICT's channel listed over here. If you can follow this, just guys listen, this market, these indices, future, crypto, forex, it will be here until the end of the earth. So you, by rushing into a strategy or into a trade without learning it properly, at least one thing you must have to master. Doesn't matter, it can be fair value, it can be order block, it can be breaker block, whatever. 1 PD array, premium discount array, I talked about that as well. So what is a premium discount array? If you want me to talk about it one more time in this live, I will share about it one more time. But before that, what I was saying is, this market will be here forever until the end. Okay, by rushing you are increasing your chance of becoming that 90% losers. Okay, 90% people loss and only 10% people becomes profitable trader. So you are, like, when you are starting, keep this in mind. Even for myself, I'm not saying I'm among this 10%, I don't know, for 1 year or for whatever time frame, I'm 10% winner. Hey, thanks a lot for your subscription. I might be a winner now. I don't know next year or by the end of this year how my portfolio will look. But by the end of this year, if I'm a winner, then I can only consider that yes, I have something, because for nearly 2 years I have been trading as a winner or profitable trader. So I then consider myself in this 10%. Before that, I don't even consider myself in this 10%. I'm considering someone in this 90%, but at the higher level, like the from 1 to 100, I'm below that 10%. So I'm among that 90, but I'm somewhat around 85% or 80%, because my win rate is saying I have around 73.4 or something to 84% win rate. Okay, average win rate. So for now, I'm among that 80 like 74% to 84% level. I'm still among this 90% losers with a 74 to 84% win rate. I will consider me in this 10% winner by the end of this year. Wherever I am, I will consider that. Now, since all of you guys are here, this is something personal, but I'm still willing to show to you guys. So just give me 1 minute before I give you the motivational speech. Okay, I will show you just one of my account and what I have done so far. I don't know why someone actually gave me some $12 credit or something, but on 16th February I'm willing to show this to you guys as well. You know what, I don't care. Incoming account amount from 1000 and above to this. Okay, now it has went too far, but I hope it will allow me. Yep. Okay. I'm gonna show you a few things. Just give me a second, guys. Just give me a second. I'm just preparing it for you guys. So from my bank, that's why it's taking some time. From my bank account, guys, from my bank account. Okay. Oh, I miss my music days, guys, but I don't want to be in a band anymore. So I don't want to be in a band anymore. I was a guitarist, by the way. I had a band back home. This is damn it, I didn't capture the date. Okay, anyway, I'll say you will understand. 4,000, 4,000, 5,600, $1,500. This is from one single account since December 20 until this was, I think, 14th February is the date that I received. 14th or 16th. This Monday, let me check on my bank. When was that one? Yeah, 16th February, not Monday, Friday. I received this payout from Top Step, Patak Trading. This is also Top Step, different accounts, but from 20th I have more. You see, like 9 transactions, but I'm not showing all of them because some of them are little big to actually disclose. But this is how many, like 16 days ago 4,000, 2 days ago I withdrew another 4,200. This withdrawal was processed earlier, but look, this one, 18 January 5,600, 20th December 1,500. So from 20th December until this, it's 2 months. Okay, let's say it's 2 months. 18th February, 20th December. Just from one single account I have withdrawn how much? 15, 56, 60, 4,000. I'm not even counting the 20 and 4,200. Over $15,000 in 2 months. Okay, you are seeing it, my bank transaction, guys. I'm showing you my bank transaction here. Still I'm not counting among that, and that's from one single account. I have 3 funded accounts and I have multiple bank accounts that I try to receive my payments in separate accounts, so that I have that track record of how much I'm actually getting out of each individual account. So whatever I'm showing here is, it's not to give you guys the fuel of being greedy or becoming greedy. I'm giving you guys the fuel of inspiration. If you can learn properly, if you can think properly, this is, I don't know if it's a good amount to you guys or not, but it's something. So 2 months, 1,500. I will just multiply it by 6. Okay, that's 1 year. 6 times 2, 12 months, 2 months. This, I still have a huge amount sitting in my funded account. That's $92,000 in a year from one account. Now, like, if I can keep the rate like this, okay, if I can keep the rate, that's 92,000. Now a job in Australia that pays, like, the minimum wage is somewhat around $54,000. It can go up to 180k, 200k. That depends on how qualified you are. The job I'm doing, maybe if I exclude the tax, it gives me around 128k a year or something. If I'm not mistaken, that's how much I'm getting, the pay scale. Along with that, if I, that's 220k per year. Okay, I don't need to make videos on YouTube, guys. Even my channel, as I said over and over again, my channel is not monetized. I didn't monetize my channel yet. It's not even eligible for monetization. The reason I'm showing you my bank account, my transaction, is just to give you guys the inspiration to learn. This is what you can do if it's a good amount to you guys. As I'm saying, I don't really know what is a good amount to you guys, what you consider as success. I consider success as success. As long as I'm successful, I consider that as my success. I don't care about the amount, guys. I really don't care about the amount. I don't know, like money, money cannot define success, cannot. You have millions of dollars and you are a shit person, you don't respect your parents, you don't have a friend that you can call your friend, you don't have a life, you are just arrogant shit bastard, you have shit ton of money. I have zero fucking respect for those sort of people. I don't care how much money people has. If I cared about money, I would have saved, like, I don't know, I'm in Australia for 11 years now. Okay, I would have saved at least 1100k, because this shit I'm doing not from now. When Ethereum, you know Ethereum, ETAs or Bitcoin, when Ethereum was $355, I bought Ethereum for a very good amount of Ethereum. And okay, 355 Australian dollars, not even US dollars, Australian dollars. I had a very good amount of Ethereum. Solana, which recently from $8 it went to $135, but when Solana was $4 or $3.50 Australian dollar, okay, that is when I had Solana, a huge amount, a good amount. Guys, am I still live? I really don't know, because it's giving me some error or something. Anyway, I hope I'm on live. Let me know when Shiba Inu, okay, Shib, SHIB. I don't know how many of you actually heard about Shiba Inu or do crypto trading, things like that. Just by buying 1800 US dollar worth of Shiba Inu, I saw a raise of 320k in sorry, that was AUD in 320k at that moment, but in USD that was nearly 220k USD just by buying Shiba Inu. Okay, that one single coin with just 1800 US dollars, I made that amount of money. Yes, I didn't take, that's the highest it reached, but I didn't get all the profit, but I got a huge amount of profit out of that. I donated a lot of money, guys. Okay, in one of my video I was angry on someone. I'm not gonna say the name or anything. I mentioned that the money you have earned, I have donated more than that in my life. Every withdrawal I'm making from here, I'm donating some money from here. Every time I'm getting a withdrawal. This YouTube channel, as I said, if I ever get it to the monetization level, because I'm not consistently uploading or I'm not consistently making content, keeping that in mind, that I, like, if I do that I can get monetization and other stuff, I'm not even worried about that. Okay, whenever I will feel like providing you guys something, I will provide. Nothing will force me. Today if I was not feeling like coming in live, I would not come in live, because that's how I want to be. I want to be providing something. If I don't have something, I don't have anything to offer you guys. If I'm wrong, I'm wrong. If I lose a trade, now there is a problem. I had so much intention to like share some losing trades of mine as well, but why I cannot share is because, let me show you my channel, guys. Look at my most popular videos. Silver bullet strategy, straight away the strategy video. Before that I had this many videos, it's only 100 views, 120 views, 142, 77, things like that. The second most popular, London silver bullet for 4.1k, 2 weeks ago 1.4k. The third popular is where to start. I'm happy to see this and this, that dealing range and this one. Even I'm not happy when I saw this video has the highest view. I'm not happy with that, because a strategy is, this is my strategy. I built that strategy from the scratch. ICT gave me the time frame and the idea how it may work. I figured out how I want to build that strategy. This is my strategy. It will work for you. I cannot assure or guarantee you that. How you can make it work for you. you have to back test, forward test enough. The entries you are losing, the losing entries are the one that is teaching you the most of your idea or information, that is giving you the most of your lessons. If you don't consider your losing trades as a investment to learn something new, you can write it on a stamp paper, you will never be a profitable trader. Maybe once or twice you will see profit, over the time you will lose everything. Trust me when I'm saying this. You have made, let's say, $1,500 on your account, on your funded account, whatever it is, you have made $1,500 or $1,000, let's say. On the next day you took a trade and you lost at least $500 or something. Now you will come and say, bro, your strategy doesn't work, I had this much money, I lost this much money. But with that $500 investment, did you actually looked into the chart, looked back into the trade, and where market exactly reached first and then delivered for the silver bullet? There is not a single day it didn't give 1 to 2. Okay, not a single day. Let me get to the 1 minute and exit out of. Okay, somehow I pressed my DPI button and it was very fast. I'm just turning on the indicator just to make sure that I can straight away go to that. This is the Asia session. Okay, market here, I'm expecting for a lower run. Why? Because it took the buy side liquidity. Now market is crazy bullish, still I'm expecting that. So from here or here, because I'm seeing it, no, let me just first draw the 1 to 4. If I get the entry, I have entry. In my silver bullet video, you will see me when I was back testing, I said no entry on a day because I didn't get any entry. So I wrote no entry. Did you took that point that there might be some days you will find no entry? You cannot force the market to give you entry. What happened exactly here? There is your accumulation phase time, like there is no market structure shift. 4 p.m. 4 a.m. finished. Your silver bullet entry was here because the higher time frame point of interest was sitting somewhere here, or if it is the all-time high, you have nothing but a standard deviation to look into your drawn liquidity. Did you get when market like silver bullet started from this low until that high inside of this 1 hour window? Did you get any sell short setup? Any sell short setup? Like this is the low, no sell short. This is internal low, no market structure shift with bearish fair value or something. This is low, no shift. This is low, no shift. This is low, no shift. This is what? This is a liquidity grab. Because what do I want to see? A body closing below. Remember, just go back to the strategy, you will understand. So this is, I'm considering a liquidity grab inside of what? A bullish fair value. Now by now, if you haven't noticed the other part of the price delivery, then you are not ready to trade. From this until that, market is always respecting the bullish PDRs. Either it's a fair value gap or it's a order block. It's a fair value gap or it's a order block. Around this area, it did not even reach to this fair value gap. Okay, I was literally expecting a entry or a position at from this. It didn't even went there. When it went higher, it again came back to this order block level, went higher, created multiple fair values. First respect, second time it came here, respected, went higher. For this specific time, if you are not looking into that, now when market was taking this liquidity inside of this fair value, you are already inside of silver bullet, you are looking into your chart what it is doing. When market was here, took the liquidity, you are looking for a market structure shift above this area. Now I look into the bodies, that's why I didn't consider this. Okay, now what I considered is when market took this, first thing first, I have nothing as my reference point how far it can reach. There is something here, if I'm not mistaken, from the daily chart or 15 minutes chart. Where is it? Yeah, here, because that breaker block and the fair value, last fair value. Okay, so you know market can reach until this far before it retrace or reverse. I already talked about it, showed my entry as well. But here, so you still have a pretty good amount of range when market was giving you the market structure shift, coming back for the retracement. Now silver bullet finished, so what? Still you have your London session, you master one session, one PD array. Along with that, dealing range, accumulation, manipulation happened where I already showed this at the very beginning. This fair value and this extreme fair value, yeah. So accumulation, manipulation happened when market took that buy side. It is still didn't reach, as I said, the sell side, dealing range sell side, dealing range buy side. You are still in your, this is the kill zone, guys. London session finishes at 8 o'clock, but we usually look into liquidities or trade until it's 7 o'clock. Where is 7? We can trade until 7. I will give you that as well. Remember, I had something. Now if you know the London session, then you can look into this accumulation, manipulation, distribution, retest to the PD array, or as I showed from the low to the high, you wait for the retracement to your OTZ and align that area with a point of interest. If you have mastered fair value, you should look into this fair value and the fair value that previously price respected inside of your OTZ. Okay, if you have mastered order block, you should ignore everything above that, below that, look into the order block. I have already, like, I don't know if you have mastered that, don't look into the way I look into order block. You already know why this is my order block. I showed you the mean threshold respect of that order block, like this order block's mean threshold. Price came below the mean threshold, went above. Immediately when market closed above that order block level, let me remove this one, market just tapped the upper portion of the order block, started going higher. So if you have mastered your order block, either you could enter market execute from this candle's closing, or when it was coming lower on the order block, you could put your limit order over there. However, if not fair value, okay, so OTZ, target this. If that is not giving you 1 to 2 based on your stop loss, target 1 to 2 wherever it is. Not, this is where you are expecting market to reach and retrace, but you are not targeting that if you don't have any liquidity along this area on the chart. Okay, it's completely clean. So you are targeting whatever risk to reward you have mastered. I don't know, I really don't know, guys. Like, you have to have something for your own. I can guide you with information. If you can utilize that or not, that's up to you. Some people is entering from this fair value because they know the manipulation happened. If this fair value can hold, then market will go above that, it will retrace one more time, then it will go eventually the high, like above that high as well. And what do I said? 5 questions. Number 1, where is it going from, where is it going to go? Then what is your game plan? What if, I exactly forgot what were the things, but what is your game plan? What if the game plan, like, where is it coming from? Here I have nothing over here, that is the higher time frame point of interest. So this high does not make any sense, and that's why I'm anticipating that will be taken. On the other hand, the information I have given you, accumulation, manipulation, distribution, now it will come back into the range, and the OTZ that I have anticipated, market came back. Now what is the target? Nothing but this high. If it's not giving you 1 to 2, or if you have room for price to go higher, you can target 1 to 2 or whatever, like however you can manage your risk, but that is the high usually you will target. Okay, this is the high. So market delivered that high from where it could have been like retracing lower, that is where market reached. Now it's retracing lower and then it fall like crazy. Okay, this. So if you know that, okay, when market reached here, you could look for another entry around these areas as well for a sell side delivery, where the Asia session low, see the fast fall, the entire fast move, where did it came before it retraced? Now will it happen every day? No, it will not. You don't need to target from here to all the way here, guys. It delivered that, not during your silver bullet, because during your silver bullet its higher time frame point of interest was too high that it didn't manage to reach that. That's why it didn't provide you that sell short delivery. Yes, there are some little sell short here, but your silver bullet finished already. Now you cannot enter into a sell short from this fair value. On the other hand, if you have the knowledge, already I said accumulation, manipulation. So now you are expecting a distribution, because this area you have nothing that market is coming from. This is your higher time frame point of interest again and again. Where is it coming from? Where is it going? And where will your target and things like that? And what if that doesn't happen? What if market doesn't retrace from that area and goes to the level? Then what? That sort of thing. Okay, then you look for the opposite drawn liquidity. Maybe there is something you missed, so go and find that something first, then look for a sell short. On a bullish market like this, looking for a sell short without a higher time frame reference point, you are a foolish. You are not ready. Your knowledge is not good enough to actually consider that. Now when this was happening, see this area, exact same thing: accumulation, manipulation, distribution. When market retraced, now it didn't retrace here because it has that range before, but it's the same thing you are expecting. When market was doing this, what you are expecting, you to go higher, you want to see the sell side is taken first. Market came below that low, took the sell side, went below that high, took the buy side. Now you are expecting it like trade into the range. This week actually traded into the range, but this is something I don't use, to be honest. I use from the high to the low, the OTG or thing, the at least the premium discount array. So maybe from here, or since it reached until that far, from there to there, if it comes inside of a premium discount array, which is somewhat around here, I cannot find anything. So this is just a added confluence. Okay guys, if you are entering from here, this is just a added confluence that okay, accumulation, manipulation, your calculation is range is from here to here. So this part is giving you more confident about your entry, that it has accumulated again inside the range, then it has manipulated inside the range. Now it must go higher and take all these liquidities. That's how you are using this part. If you are utilizing this is not where you are entering one more time. But if you are willing to enter, look for your PDRS. If you can find anything, I can see something, but I'm not an expert of those things, and I'm not utilizing that as well. Like from the low, high, lower low, as I said, like multiple levels of liquidity taken with this run. So the highest up close candle of the body with the highest up close candle is your breaker block. Now did it deliver your 1 to 2? I don't really know. So after reaching there, coming lower, if you are expecting market will deliver another time to your 1 to 2, maybe you can get sometimes, maybe you can lose sometimes. I don't know. It will work 100% of the time. I'm not saying that any of the moment. Okay, whenever I'm looking into these things, I'm not saying that. I'm not saying it will respect your things like every single accumulation, manipulation, PDRA, because by this accumulation, that high was the target from the very beginning. Market took that is it. You are not using this information to enter another trade from when market comes lower. You are using this information to make sure that this information is actually correct, because after that market displaced lower, like manipulated lower and then went higher, displaced higher, took all the liquidity. Same thing you are expecting here. When it's happening, you are in more confidence that your trade is in the right side. Simple. But similarly, from here on this area, I'm just looking into this right now, market is accumulating, manipulation towards the upside. See that buy side liquidity was never taken on more time. Instead, what happened? Market came lower, took all this sell side. So from that high to this low, now you have a new dealing range over here for a sell short. Market retraced. Let me check. I don't know, like this is the other way that I'm just seeing right now. Why I'm targeting this low is because when that high and this low happened, Okay, I can even target this as well, like from that high to this low, since it didn't take the liquidity of that high. So from this low to that high, wherever the discounted eraser, that is where you can look for a entry. In this case you had a very little fair value over here. That's how far market went, but that's extreme. If I was in a trade, I might have looked into a trade from this area if that aligns with my OTZ. Okay, and targeting the same 1 to 2. However, if you missed that part, this retracement could have been a possible entry point from that volume imbalance or that inversion fair value, because when market created that fair value, this respect of this candle retest failed to take the liquidity on the top. So you can look into this fair value also, the inversion on like this fair value. Okay, so market came below that, retested that fair value gap, then delivered lower. But inversion, I don't really want to talk about it, since I use very little of it. Unless I'm confident about a move or a setup, I don't use the inversion. I mostly use the order block and the fair value gaps. Okay, and sometimes the breaker block, if it gives me that thing, like if it is taking multiple levels of liquidity with one single move. Okay, so what I missed so far, let me check. You are a wonderful person, thanks a lot brother, thanks a lot. Still live bro? Yes brother, still live. I was surprised to see you today after what you shared with me. Good to see. Actually you missed the starting, that's why I actually talked with it with I think Shiva, that a lot of the problems became solved. That's the reason I came to live. Also I was feeling very upset the whole day, so I wanted to divert my mind from those incidents that's going with my family right now. So that's the reason I came to live. And then let me read. Thanks a lot for spending your time for us, which you don't have to do. I love to, man. Listen, my goal with the YouTube was to teach first thing. Okay, same thing, it's the same. ICT's goal to post all his videos on YouTube was to teach his son. Okay, that's ICT's goal. When I started learning ICT and I figured out my edge on market, I build my strategy, I had enough knowledge, I started this YouTube channel so that I can teach my brother and few of my close ones. Along with that, whoever is willing to like join the community, like find value out of my video, they can take the information from my video. I had nothing regarding like, because like I don't even consider making a good thumbnail, this and that. Whatever quickly I can make with just a few clicks, that's what I do. Most of the video I don't consider the SEO optimization. I did computer science engineering, guys, so SEO optimization, if I did that, I could have done that a long ago. I don't want to waste my time or energy on those sort of things, since this is not my focus. The focus was to help as many as I can. I could simply like create a Google Meet or maybe Discord for my family and friends so that I can teach them there. But this is a better source, since the video will be here and lot of other people can find it informative. I don't know if people are finding or not, but whatever it is, that was the intention. Now when I was getting a good reaction or good feedback from you guys, like lot of you guys, I wanted to build a community with kind-hearted people. Let's say like you all became a good profitable trader. Now there are a lot of things, guys. When I'm seeing a market in a way, you can see a better thing inside of that. Okay, you can maybe think like, okay, from this volume imbalance I can take an entry, and this is a short scalp, I can do that scalp. I don't know if you are mastering that, and if you can do that, you can do that. I don't mind. When this week took the sell side liquidity inside of this small little fair value, maybe I can scalp. If you are good with that, do that. I don't have any problem, man. As long as you are doing that for a long period of time and consistently making money, or if you are comfortable doing that, that's up to you. How many times market came here inside of this small little fair value gap and then went lower? How many times? Look, now here also look, accumulation is happening. Why I'm looking into the upper portion first? Because when market reached my higher time frame point of interest, now I'm looking into a sell short delivery for the Asia sessions low or relative equal lows, things like that. When market was here on this low, on the left, do I have anything here from this low? No fair value, nothing. Yes, I had a order block, but that order block was maybe revisited here. So I am still holding this low as my possible accumulation low. When market took that buy side, okay, it's a shallow run, I know, like a lot of people will say it's a very just a tick or two for the liquidity grab. When this liquidity was taken, I was waiting, or I will wait until I see this liquidity is taken. So accumulation, manipulation. Now manipulation happened until this far. This is market reaching into the range, but it didn't reach into my OTG or my premium discount array. So I'm not looking into a sell short from this fair value. I'm looking into a sell short from either that small little fair value or around this area, the volume imbalance somewhat close to the equilibrium level. That's maybe I'm not even sure about that, but that is the focus I have currently, that if market can reach here, I will take a sell short. The market didn't reach there, it broke lower, I didn't get an entry. I'm happy to say that I didn't get an entry. But when market was coming back inside of this huge fair value here, what market did, it took liquidity from multiple levels. The market structure shift for me happened when market broke below this, and that fair value retest from this candle, I'm already in a trade. But if you want to be more conservative, you can consider the low, the propal low, and you can consider this as your liquidity grab inside of a fair value, remember guys. So when you are looking into this, still you have nothing but that fair value to enter from. Now did market came back here? No. So where can you enter in terms of this? The close proximity of this candle, you can enter when you saw like it failed to reach, or you can maybe wait a bit. You see this candle is going lower. Now here can be your possible entry, or if you calculate the whole thing properly, you are seeing that market has created order block here. Market has retested that order block level. So now there is nothing for market to go above that area. So below that area, you are looking into a entry and a new order block. Now for me, I would consider this is a order block, okay, but this is not a high probability order block. So as I said, I would either consider waiting until I get a new market structure shift or break, like sorry, this is a break of a structure and the fair value gap. When market created the fair value gap with the break of a structure or displacement, maybe this is where I would enter. And remember, after, like, this is 10 a.m, this is 9:30, so after 9:30 I can look for my possible setups. When I found that, this is where I can enter. Okay, I'm giving up on everything on from that to this. Okay, so this fair value is where I enter. Now as I said, market has retested the order block. There is no fair value here. There is nothing that market requires to rebalance. Market has rebalanced until this far. Okay, this is how far market is balanced. Even above this fair value, it's balanced because market traded lower, higher, then gave you a break of a structure. 1 2 3 move. So from a high, market traded lower. This is move number 1 2 3. So where next time market can come, if this candle, like the low where it has created the low, if the low is aligning with a fair value, then you draw the line from the low. If it's not aligning, you draw from the body, because that is where the fair value you expect to enter from, at least that level, because that above that level everything is balanced. Below that level, this is the first move, okay, sell side only. The second move is buy side. So 1 2, the third move, the sell side delivery one more time below that low. That will confirm that until this level market is balanced. Now here is no fair value gap, but see the body, when market closed below, this is how far it retraced and then started going lower, and then it created more what it calls more fair value gaps. So if you are in a trade from here, your stop loss has to be above that high, or you can put on this candle, like this huge order block candle high. Okay, once you put there, when market is coming below that level, you want to see if market is going above that level. Let me remove this one. Okay, if market goes above this level, that level, if it creates bullish fair value gap, there is no reason for market to go above this level, because that is how far market is balanced. 1 2 3 move, market is balanced until that far. If market goes above this level, this is where you will look if it creates a bullish fair value or not. If it creates a bullish fair value, you have to exit out of your trade. The reason behind that is market has nothing to go above this. When market went above this with the body, okay, with displacement, like big candles like this with a fair value gap, if market creates a fair value, that is an indication that market has taken the liquidity from the left and the level it was anticipating to take from. Now it is willing to go higher if it creates a bullish fair value here. If it fails to create a bullish fair value, you can hold your trade, because it can go eventually lower, and that's what exactly happened. Now the same thing, from this level it only delivered sell side. Okay, like from this level, this is all sell side. Look how far it came. When the first time it came, did it created any bullish fair value above that area? No, it created bearish fair value, so it delivered some bearish movement. But remember where it has to go, this low, this sell side. Now I don't know if you are getting confused regarding this concept or not, but I will try. Like, what do I mean by that is, from, let's say this is a low, market created a high, so this is move number 1. What it did is it delivered only buy side delivery. Okay, from the low it went higher, it's the buy side delivery. So now to rebalance the buy side delivery, market needs to balance a sell side delivery. This is 1, this is 2, move number 2 done. When market goes above that high, this is called 1 2 3 move, liquidity grab, market structure shift, that happens like this. So when market went above that high, below that high, if there is any fair value around this area, that can be a short-term target for the market. But when market went above that high, below that high, it's balanced area. Okay, this is there is no fair value gap, this is the fair value area. Okay, if you have watched Arjo, or the fair value god, his video, I will give you guys that as well, so that you can actually, so this area is called the fair value area, because it has 1 2 3 all those moves. Now when market went higher, what it did above that area, it only delivered the buy side. So now you are looking into a sell side delivery, then another break of a structure over here, which will create what, a new fair value area here, because it has buy side delivery, sell side delivery. Now it went above that area, so 1 2 3 move. Now this is also imbalanced. Now you are expecting again market will retrace here and go higher. This is how the structure works. Now I might make you guys confused, so before I do that, and this is another topic, I don't know how much you have understood or not about that topic. I'm sharing this link in the chat. Please add it to your watch later, or I don't know if you guys are bored with me by now. You guys can give me a
trading institutional market structure.
Oh, come on. You just gave me nearly a heart attack, my brother. I love this guy. Trust me, I recently subscribed him, but I was watching every single tweet of him from the Twitter. I didn't know that it's the same guy. Okay, the fair value god and Arjo is the same guy. I didn't know that. I have been following him for a very long time, guys. Okay, like this guy, fair value god. I didn't know this is Arjo. And when I subscribe to his channel, I have been watching his like tweets and stuff. He shares so many. He's a gem pack, guys. Gem pack. This guy is, and the reason I started looking into his videos, like I recently subscribed him and watching few of his videos. Whenever I'm getting time, I'm watching few of his videos. But what I found is his way of thinking about the chart and my way of thinking about the chart is exactly the same. You will find him talking about the previous candles high and closing, things like that, a lot of time. If you guys can just keep this specific video in your watch later list and watch as soon as possible. Like if you want to leave me, you can leave me. Watch as soon as possible, because this video will give you so much of information. Whatever I have shared so far, the ICT advanced breaker theory, that video, and this video, and maybe I have shared another one. I don't remember how many links I have shared, but whatever I have shared so far, you guys want to watch those videos. If you miss that, it's a huge loss for yourself. The thing that I was explaining, he can give you like a lot of things over there, a lot. Okay, like literally this 40 minutes is full of information. If you can take notes, if you can memorize what he is looking into, the next time, trust me guys, from Monday, if you are looking into your chart, you will have a new vision after watching this video and the ICT breaker video. I'm taking you, like I'm telling you, if you can finish this one and that one before Monday, and if you can observe or back test at least some of that information before Monday, you will have a different view on the market. When I'm telling it, I'm just giving you the gems, guys. I'm trying to save your time. Just watch this video, the ICT breaker, advanced theory on breaker video, the link I shared before. If you missed it, don't worry, just go to ICT's channel and write breaker. I'll share the link on last time, okay, because I'm seeing some people over here, so maybe they have missed. So ICT's channel, whatever I'm talking, the topic I'm talking about, you come here, okay, like on this search, not the search above. Here inside the channel, write the breaker, search it, you will find advanced theory on breaker, which is 2023 mentorship, this 1 hour worth of video. This is the, trust me, this is the only video you will like to watch if you want to understand the breaker block and your order block as well, because you can just reverse engineer that breaker block to understand the order block. Literally that is what you can do. If you have the knowledge, you can combine those two idea regarding your order block and breaker block, and you will understand what is your high probability, what is your low probability, or how a lot of things, how you can mark the standard deviation, which breaker will hold the price, a lot of things, guys, lot of things. So please do not waste your time on anything else before you go to the next week trading, or even if you are looking into the chart as you are a student or you are still learning or practicing things. Before you look into the chart next week, the video I just shared and the video I'm sharing now, like the link I'm sharing now, these two videos are the videos you must want to watch, memorize, or like take notes, however you want to draw the things, picture the things, do it, but must keep it in front of you before next week. Okay, like this Monday you will find it how important it is to understand things. And this is Fair Value God. You can search on Twitter if you want to follow him. Now my Twitter, I don't use it. As I said, if you want to join my live streams, it's better if you can put a notification bell. I upload very few times, so the notification will not disturb you along. But this is my what it calls, this is my Twitter link, which is ICT ProTraderPath. You can sorry, the at ProTraderPath. So this is my Twitter. You can go follow me there. Maybe sometimes I will post some before coming to live, but mostly I will not inform. Okay, I will just click my, whenever I feel like it, I click my live stream button. That's it. So I will just put a short what it calls, short poll in the community, and let's see. Like, I have very few people watching the stream right now, but I want to see what their thought. Okay, text pool. I showed you guys what I'm writing, but it's okay. It's okay. I want to see what you guys think about it. I have just posted a poll. I don't know how many people I have missed. Have you watched Trading Hub videos, bro? Trading Hub? No, brother. No. I have, like, I really don't know. I should not say no, but I really don't know if I watched or not, because some people, if I don't find it's aligning with my thoughts or aligning with my process, I try to take, like, watch couple of their videos. If it does not make sense, okay, what happened right now? 1500 for the prop from, I will watch this video. I don't know what happened, but I will watch what happened, like warning to prop from traders, because he provides some information over here. Something is not going correct. Okay, one more thing, guys. I have nothing with these guys, but even I removed their skill funded traders. Okay, skill funded traders. This is something that was built by Jetcap, then I think Omar and Paladin. These are the people, like Kyle, Paladin, Umar. These are the people who built this specific what it calls, this specific prop firm. You will see lot of promotion going on, but recently I wanted to try them out. I bought a $5,000 account, no, sorry, $10,000 account, which was on a huge discount, like 50% discount or something. So I spent like $40 or something. I wanted to try their prop firm out. If I found it good for me, I would consider like going for a bigger account on that prop firm. But I found lot of things very fishy. When I entered into a trade, let's say I'm in a long trade, I'm expecting market may come bit lower until a breakaway gap high or middle point, things like that. My stop loss I'm putting according to that on the MetaTrader 5, and I was doing it on my tablet and phone mostly, like not on the PC. I don't want to open my computer or turn on and sit in front of my computer for a 10k account. Okay, so I was doing it on my phone. Now the issue that I faced is when market came into a little bit of drawdown, let's say like $100, $120, my trade suddenly disappeared. I had to enter like first time, by the time I realized what happened, I thought maybe I have hit the daily loss limit or something. Then I realized no, it's 4% daily loss limit. So I cannot hit $120 and hit my daily loss limit. So it must have to be $400 loss from a single trade. Now it closed my trade. By the time I realized what happened, market literally from the place it closed my trade, the very next candle it went straight to my take profit level. So I was exited from the trade forcefully. I don't know what exactly happened, but I was exited. I entered little bit after I entered again. I found the exact same thing. When it was in a small drawdown, it closed or exited out of my trade. But this time I entered again just to check like what is happening, if I have hit my daily loss limit or anything. So I had like in 2 trades around 280 or something dollars loss on a 10k account. The next trade, because I entered immediately after it started going towards my take profit level, I recovered all the loss. I made another 200 something dollars as profit on from that third trade. On the fourth trade again, when I entered, whenever it is going into drawdown, like even like $80 $90 drawdown, it's stopping out from my trade. When I saw that, I got angry. I just uninstalled my MetaTrader 5. So I don't know if that is a bug or something. I might have some recording on my tablet. If I can find the recording, I will share with you guys what I was talking during that moment, what I'm saying right now. But be careful, this can be something that is actually worrisome, right? Because a lot of people may have lost a winning trade and like finally hit the max drawdown or daily drawdown, whatever the rules are, they might have finally violated that as well without even realizing what exactly happening behind. So I don't know if I should be talking about that or not, but my first experience with them is not good and I'm not willing to continue with them anymore. Okay, so that's why I didn't even consider taking any trades on that 10k account anymore. And for now, Top Step is what I love the most because of their service, because of their promotions, offers every single week, things like that. However, I'm willing to take a bigger account on the FTMO, but as I said, I don't want to be a part of that MT4 MT5. That's the only reason I'm not taking I'm not buying any challenge or taking any challenge over there. If they had anything like TradeOvate, Wanda, any server that I will be able to connect with TradingView, I will consider the challenge from them. I don't care about like what sort of asset I'm able to trade on or what I'm not able to trade. As long as they offer anything among these list, okay, like this is British pound future, this is gold future, this is Russell Street future, this is euro future. So things like that, as long as they're offering something like this, even like the major forex pairs, anything from this list, I'm happy to take that challenge, but on a prop firm that allows to connect on TradingView. Okay, I don't want to connect something on paper on MetaTrader 4 or 5 because I'm not comfortable with that. So did you guys actually receive the pool, community pool that I had? Did you receive it? Did you receive it? I really don't know, guys. Did you receive it? Wait a second. Why it is not going there? Oops. Didn't it show on my okay. Someone just voted yes, but I don't know why it did not show on my live stream. I thought it will show automatically, but anyway, it is what it is. 1 vote, thank you for finding it valuable. As long as there is at least one person finding my things valuable, I will make videos for them and come to live for them. Yeah, and I got few subscribers today. Welcome all of them. I'm not actually, as I said, I'm willing to build a community with good hearted people who can help each other or help their communities around them during their need or time of support. When they need the support, they can support them anyway, like in mental support, in financial support, whatever support they need. I am willing to build a community like that. I will never ever in this channel give you entry signals. It's only teaching purpose, for teaching purpose and building a community. And as I said before, I'm saying it over and over again, I'm trying to like even if ever my channel get monetized and if I get any money out of this YouTube, 100% of the money will be either donated or given back to the community. Like maybe I can give away some prop farm challenges, or sometimes the giveaway type things, if someone needs that sort of thing, maybe that sort of help, as I said, helping the community or the community surrounding me. So either I will donate the 100% of the revenue, or I will spend 100% of the revenue to help the community I have in my YouTube channel. That's the only focus regarding YouTube videos or YouTube revenues, whatever it is, even if like if I get it in any time of my life. Okay, but until that I don't have any like dedicated direction that I must have to have monetized, and like my channel monetized, my video monetized, things like that. I don't have any intention. Whenever I will feel like I have something to give you to guys, I will either come in live stream or post a video. If I have nothing, I will do nothing. Okay, and about the losing trades that I was talking in between, I actually stopped. Even on the ICT's channel, ICT did not provide any losing trades as a video. In the live stream, when he came in the live stream, like there are so many, like very few live streams with live trading, but whatever trades he took around recent days, he actually lost all of them, all of the trades. Okay, his videos, he has all of the winning trades in the videos. Okay, winning trades, winning trades, winning trades, all of them with very tight stop loss as well. But I'm not here to give you the tight stop loss and live trading signal, things like that. Nothing, you will never get anything like that, because end of the day you have to be independent. If you are using my signals as your entry and passing your challenge and then maybe making some money, what if tomorrow I stop giving signal? Let's say tomorrow I'm no more on this earth, I died. Okay, my days in earth expired. Then what? Then how you gonna continue earning money using the same information if you don't learn it? I told it to everyone, and that's why I will never provide any live execution video. Like I'm come in live stream and provide execution or some entry signals, things like that. Never. That never gonna happen. I'm trying to make people individually trader, like individual trader. They are independent trader. You are accountable for your loss, you are creditable for your success. I am nothing here. I might be a media or a source where you can get some help, some information, some guidance, but I will never, like, for more viewers, more subscribers, I will never provide that sort of information in my live stream. Lot of time I thought about, okay, like I saw my friends are doing live stream and live executions, some people asked for it too. So lot of time I thought about like putting my stream in 5 minutes delay or something and then come and execute live. I even like disregarded that as well. When did I came? I came on like on a weekend. Market has nothing to do, no movement, nothing to do here. I came on live because I wanted to give you guys what you missed during that weekend. Okay, like during the entire week, what you missed. That's what I'm here to show you guys every time, like accumulation, manipulation, distribution. Market traded back, took that range liquidity, like the dealing range liquidity. Market started going higher. It again accumulated, it manipulated higher around this area, more accumulation, more manipulation around this. When it took the highest liquidity, then it started distributing. Well, from this range until that, there was trending as well. In my channel I have shared the trending when there is a I don't really know, like dealing range type 2. Okay, I have referred back to those same videos so many times because these three are good enough. If you can identify, figure out, it's a 1 minute that you are seeing in 5 minutes, in 15 minutes or 1 hour. If you can like find this sort of things, if you can figure out the movement, okay, every time it's happening, you know where market is going. Now every time you will be correct? No, you have to be open regarding that. You see, the accumulation, manipulation, distribution happened until this far or even this far. Now what I failed to show you, the thing that I started with, I actually forgot, like why I said like if this liquidity is taken, market will go higher, take the buy side, and it will reverse from either this fair value or the breaker block. So I will just mark the fair value. Okay, like this is not a fair value. It usually it is a breakaway gap, since market just tapped into it and broke away below a swing point. It's a breakaway gap as long as there is empty space. But why specifically this? When market was retracing, it retraced into a PD array from the low to the high. Like you are seeing the accumulation, manipulation multiple times. I have discussed all of these area. I'm just straight to the point. After this I will finish my live stream. So from the premium, discount and premium, I want to see market is reaching into the premium array, and if there is a OTZ point of interest, like if there is a point of interest that aligns with my OTZ, which is this fair value gap, if market can reach inside of that and then give me a liquidity grab, market structure shift, this sell side liquidity will be my target, this one. Okay, this low, this is the dealing range high to low. Now what market did is, when market like give me this move, okay, like liquidity grab, market structure shift, this high should not be taken because this is a protected high. Above that everything is balanced. Watch the video, you will understand what I'm saying, like buy side delivery, sell side delivery. Now this is the other portion of the retracement, like 1 2 3 move. Now why why market went until that far? Because there is a fair value gap that market never refilled. That's why here still this is due, but I'm looking into this specific area because of my OTZ or optimal trade entry. When market retested that and gave me a liquidity grab, market structure shift, I'm not sure if you guys are seeing this properly or not. So when market reached inside of this fair value and give me this like liquidity grab and market structure shift on the higher time frame level as well, I'm expecting that this high should be protected high, because if market is going lower, it must leave this buy side liquidity. That's exactly what I wrote on my after finishing my silver bullet in this video. Okay, so let me show you one last time. Where is it? Come on, here. See the dealing range buy side, if taken, market will go higher. What time I'm writing it? Just look into the time around this area. I'm writing a lot of things for the next day. Okay, this was my plan for the next day. So when I wrote it on Thursday, February, around like 7 AM or 7:30 AM, something like that, I was waiting for market to go lower, give me some sort of confirmation that it's going there, and that's the reason on Tuesday stream I said I'm bearish, because market is creating the dealing range. When market came here, what happened is market went higher, took that buy side. So what I anticipated, this specific thing is written in my is discussed in my silver bullet dealing range type 1 and type 2, both of the videos. You will understand why that high is must not be taken. When market took that, my anticipation is market will go higher. Along with that, if I'm not wrong, market first came lower. No, market eventually, like that's where market started going higher, gave me a market structure shift with a fair value. So ignore everything until it reached my point of interest. Like this is my point of interest from where possibly it can go lower. So when market took that buy side liquidity with this candle, this is the fair value it created and retested back into the fair value. Let me remove this, although this is acting as the inversion fair value as well in this case, because when market went there, it failed to take that sell side liquidity. So that fair value, this fair value is acting as the inversion as well. And if I move it on the left, see the middle point rejection, that is where you are more confident that market will go higher. When market closed above that, the next time when it came inside of like the upper portion, this is where you take your entry and wait until it reaches to your point. So like this is the hourly chart, it may look small to you, but if you look into the thing, it looks something like this. Okay, so this is like 85 handles, which is $1,700. Okay, from the high of this. Now if you can align other things with that, you can get even lower entry as well, because if I'm not wrong, that day it was actually respecting all the order blocks. Even this low came out of a order block mean threshold or something. Let me check. Like this huge, it's a huge thing, I'm just putting it in the context here. So that's the mean threshold. So that day market was respecting the order block the whole day or whole time. Even this low came back into this order block or this order block, whichever you have selected. Since this part is inside of this move, it's still like you are not wrong here, but usually I would consider this as my order block. Like from the opening price, let me look at the body, how it closed on that opening price. Okay, like inside, it came inside, then it went higher. And remember this fair value, this is the fair value that market respected for a short moment, failed to take the low. When market went above, that became your inversion. So your entry could have been the next time it came here and below the fair value gap candles low or this swing low, whatever, however, but there is another fair value here as well, so you can use that as your entry point and put the stop loss accordingly, however you anticipate. Now as I was saying, this was your entry, but forget about inversion. Since I didn't master it, I don't want to talk about inversion. Let's talk about the fair value. When market broke the structure, displaced higher, created a fair value, this is where you could have entered, because you know that what if market take this buy side liquidity. So if market takes that buy side, where is market like going, and from where it can reverse. And same thing as I showed you, this is the extreme level and this is the breaker block. I know pretty well about breaker block. I don't care about inversion fair value, order block, breaker block and fair value gap. These three are the things I have mastered. Look at the common area, I talked about it so many times. Okay, these three are my breaker block, not this, not this, because that has the lowest down close body. I don't care about any other thing but the lowest down close body. High, whatever the low you count, these doesn't matter. High, low, higher, high, the lowest down close body, the candle is your breaker block, Now if it has a set of or group of candle, that is your breaker block. And what I said, with the higher move I want to see at least 2 level of liquidity is taken. It took this liquidity, it took this liquidity, 2 level. So now this is a better opportunity or better chance. Look at the mean threshold respect, look at the common area respect. Market respected that and eventually it broke below. So common area. Now before I finish, whoever is still with me, 6 people I can see is still watching. I don't have problem like if it's 1 people or 6 people. As long as I have someone to listen to, I will show one last video before I go, and we'll digest the information together, guys. In my ICT strategy videos, okay, in my channel ICT strategy videos, like all entry models, how you can build your strategy, that video, the 4th video in the channel, in the playlist, I talked about different entry models and how I build my strategy. Okay, now recently, okay, that video I have uploaded a long ago, like comparing to what I'm going to show you guys. Oh shit, what I wrote over the word wisdom. I don't know if you guys, just before I waste your time, let me know if you have watched this one or not. Have you watched this one? Let me know, guys. I'm waiting until you say yes or no. Compare, like looking into the answer, I will play this and we will digest the information together. Once we digest the information, that will be the end for today. Because as I said, I love to know more, learn more. I look into the successful people and compare myself with their thought process, not with them, with their thought process. If they are thinking the way I am thinking, like, or sorry, if I'm thinking the way those people are thinking and they found success because of that or not, just that, if I'm on the right path or not, if I'm providing the information to you guys, like the information is right or not. So let's I think Michelle only said no and no one else actually replied. Just, it's a very small part I'm going to show you guys. If you can get time, this is the channel Words of Wisdom, or you can search ICT Roundtable, it will appear on your YouTube as well. I'll see ICT Roundtable. But for the moment, let's listen to what this specific part, very small part, but let's listen to it. Okay. I hope the damn YouTube is loading. Okay, I don't know why in Australia the internet is this bad. I'm just muting myself, but we will be able to listen to that thing. Just give me 1 minute, bear with my internet connection.
Also, what sort of reoccurring themes across all 4 individuals we have. So without further ado, we have NBB trader Omar with us. Have NBB trader Omar with us today. We have Ali ICT, so Ali Khan. We have Kimmel Trading, and we have JCap
legend.
FX, Mr. Kyle himself, who I've already done a pod with today, so he must be potted out by now, but he's gracefully joined us.
Doing it.
I appreciate it. I know people like to separate the man. We just talked about that, right? Separate the man and then the concepts, right? How has that allowed you to sort of just stay focused on your
or like complex? That's why I stick to way more simple terms. Do you think that's essential in order to become in the beginning found way more like complex? That's why I stick to way more simple terms. Do you think that's essential in order to become?
You can do it. You can use an absolute most basic, simple model like
silver
The
bullet.
silver bullet, like what he's teaching his son right now. That's extremely simple. It's time based, and you're just basically keying off a fair value gap. In my opinion, when you graduate to like higher levels of it, you want to put and position yourself in the best probability sort of time frame, right? And ICT has already said that himself, he refers to seasonal tendencies first. If he didn't know anything, he'd sit down and say, right, let me use that seasonal as a roadmap. Because you got so much data, and this is another thing, and Kit talks about this a lot, is collecting data. So when you've got the amount of data that says, okay, well, in this quarter or in February, March, this is what we're expecting to happen, and we've seen 15, 30 years worth of data
like the
to
Santa
back
rally,
that.
right?
Exactly. So if I'm like, okay, May, generally, we're going to see a sell-off in the pound. So I can look at the past data and say, well, this happened. Some years it's not going to. When it doesn't happen, that gives you extra insight as well, because then it's when you get some real mega trades is when you're
essentially saying we have to build a story around the trade I'm
100%,
taking.
exactly,
You know,
yeah.
like the silver bullet is just like
Entries
plotting
is
it.
this is what I can't. I'm trying to get that point across to every. The entries are the last thing. If you understand where the market's going and you've already done that top-down analysis, your entries can be sloppy. It doesn't matter. You're still gonna make money.
When I day trade, right? So I work inside like a daily, right? Is it going to be an open high low close or open low high close? If I can't nail that by the time I'm at the session, because I let the London go, because you can be in quite choppy, then London clears that up and it's previous days lows taken and we're displacing and we're going higher from it.
Keep it very simple, right?
Simple.
Like
Something so
they lead you to
simple. I
swing.
just need to
You don't need. That's what I'm saying. You don't need to go. But like, as you're developing, I think everybody should start small, and then you should develop.
You
on
get
that.
curious, right?
Yeah,
because
exactly.
you're like, I'm missing a piece of the puzzle.
Exactly,
Like
exactly.
I'm seeing the fair value gap, but I don't feel confident because I'm missing something. Like, what is the market sentiment? What is the market structure? Everything else that's going on behind it. It's like you want to add that layer of confidence. 'Cause I don't feel confident just taking one concept and just slapping a trade on it.
It's even like that fair value
It's a
gap.
blending though. It's not meant to be easy. It's harder than just using a model, in my opinion. Look, there's so much content for a reason, because trading is complicated. Whether we like or not, it's not something that we can just use this and I wish it was just as simple as an OTE, right?
Yeah.
But you need to factor in a few things. Like me personally, weekly profile, daily profile, to me that is the meat. That is like, if you can
when you
nail,
see that just repeat over and over and over again.
If you can nail with the economic calendar, the weekly, because what Forex Factory tells you is the day that you have an event, and then the time of that day there's an event, and then you can say, okay, where am I
in the Bank of Japan?
Where am I in the AMD, right? Where am I in the AMD?
Exactly.
Given the roadmap.
If you blend market maker models with that, it
And
just
then
changes everything.
okay, there's a news event on Tuesday. Okay, Monday clearly done manipulation, so it's Tuesday going to bring in distribution. Everyone thinks that red folders are just manipulation. It can be distribution. It can just be
exactly.
it can be distribution as well, right? This is the thing people understand.
If the manipulation happens before the red news,
Exactly.
event,
Then it's going to be distribution.
Then if it's manipulation's already happened before the news driver, when the news comes out, this is
going
why
to your target.
Exactly.
It's all about. To me, it's like I see it like a mental skill, because I have someone that kind of is like a coach now type thing, and he tells me like, look, it's a scale. Is it going to tip to buy side or is it going to tip to sell side? And that's the first thing. If you can't favor a one way over the other way, just chill out, right?
Yeah.
And then all I'm doing now, because once I have an expectation of the daily, every time frame under that is going to build the daily common sense of the fractal nature of the market. Once you have a bias, right, you have an exact expectation. Am I waiting? Because this is the thing that I detest about 15-minute, 5-minute traders with no narrative. Are you expecting sell side manipulation or buy side manipulation? You personally, you won't know that unless you have some sort of roadmap from the daily or even the 4 hour. Because say I'm bullish on the daily now. Okay, I'm waiting for offset accumulation. I'm waiting for the run under the low, the displacement, market structure shift, if that's your model, fair value gap. It's that simple. Once you need an expectation to see on the chart, you get the expectation from some level of bias, whatever time frame you like to use for direction, and then you're just waiting for some stage and price on the low time frame. Yes, your Q,
You said the key
entry.
word, waiting.
Yeah.
Because people don't want to wait. Like, why are you rushing into this trade?
Should I
Do you
trade?
understand?
Should I trade to the PD rate or should I trade away from the PD rate?
Yeah, yeah.
I'm
It's
trading
like-
Sunday Open.
Market's open. Yeah, I think everything that you just said, you nailed it. You have to have a roadmap in terms of what you're looking for. And the majority of the time that we're going to do as traders is wait. Man, that was hard for me to do. I'm not going to lie. That was the hardest part for me.
What
was
made it easier
waiting.
for you?
making it easier for me was narrowing down my time window. So I started looking at thinking like if I trade EU and GU generally, and I have my own silver bullet time zones in there is 3 a.m. till 4 a.m. for London and 8 a.m. to 9 a.m. for New York. And the macros that run in there, and I know what I'm looking for. And if I'm looking at, say, the market maker model, and let's say that's universal, and I've already had, say, a manipulation event that's happened, I know where I am and what stage in the accumulation or
Do you ever
redistribution
take like a low risk buy or sell?
Yeah, so I can take it from the very, say if there's like equal highs and above it there's a fair value gap.
The total sweep.
Yeah, so I can take a small entry. I won't put my whole position in right at the top, and then when I get my change in state of delivery, I can go back into my order block for my low risk sell, and then I've got my first stage distribution, second stage, and that's a silver bullet. I struggle with massively, and a lot of my
For me, a lot of times, like my best trades, I don't, because a lot of students ask me like, what was the confirmation that did you wait for confirmation? A lot of times I'm not waiting for confirmation. I'm like touch trading the level. Yeah. So I'm entering the trade and then it's confirming that I'm correct after it's moved my direction. Because a lot of times,
I do that.
Once it moves away from you, you've already missed your fill.
Yeah, exactly.
Right?
That's why I take a small position right at the very top. And then when I've had a change in state of delivery, I know, right, okay, now I'm most likely on side, and then I enter again. I'll pyramid until 50% of the range. If below 50% of the range, I won't pyramid. But I know that I've already got positions working in my favor because I entered early. When you're waiting for confirmation, sometimes
great trades.
They're the best if you can
when
get.
it's
I
taking
use
liquidity
that
and it's taking the next level liquidity, and then it's like,
Sorry guys, I actually forgot which part had that specific information, so I just paused the video because it was going too long. But the point was, every single person you are seeing here, they are talking about one thing. I can assure you that I can share the link with you guys so that you guys can go and watch and maybe get some idea based on how they look into trade or how they are utilizing few things. But what I'm saying here is, in my channel I said over and over and over again, look for the common areas, and that's exactly what they said. Like, if you have a overlapping PD array, this is a breaker block, this is a fair value gap overlapping with each other, this is a high probability trade. Along with that, sometimes they are overlapping the OTZ, okay, optimal trading zone or entry. Now if that OTZ aligns, you see like the OTZ aligns with this fair value or that area above your discounted level, OTZ, whatever it is, OTZ, just look at this delivery. Yes, I was expecting a higher run until that is a retracement that I'm catching, but the overall market, what it did, it ended until this far, and I'm expecting it will go and take this low. Eventually it will come below that low as well. So why I'm utilizing this? Every time in my strategy video, in my other videos, I have talked about this specific thing, that I look into the OTZs. Why OTZ? Okay, let me, before I finish, I will give you this. Let me change the background to maybe more dark. I don't know if it's disturbing your eyes or not, and let me put that middle line as a better color as well. So I'm just putting a random box over here. I will explain the PD array. Okay, in my channel I have talked about it a long ago in a live stream as well, but let me give you one last time. So this is your discount, and let me actually make the text bigger and change the color to something like green zone. Discount, and same I'm gonna put here, and this is your premium, and change the color to red or this red so that it doesn't disturb your eyes. So premium, discount, the middle point, or this level. This is the 50% range. This one is called equilibrium, so I will just put EQU, equilibrium, or the 50% level. Now discount area is where you are looking for a long setup towards the premium area where you are looking for a short setup. Now what can be the PDRs? Now I have not mastered all of them. Okay, this is where you have to be you have to have your own analysis, your own thing. Now BSL, no, let me actually write buy side liquidity, then there will be order block, there will be breaker, don't worry, I'll breaker block, FVG, IFVG, these things. Okay, let me clear out this area by putting it here and changing the color to something like white or this. Now I have made a few. Okay, there are, as I said, ICT has so many to talk about, but I'm just putting this many is what I have somewhat, I can say somewhat mastered. I'm not gonna say I have mastered, but somewhat mastered. My strategies are based on these things. Now the same thing, if I put here, I have to put it from the opposite direction. Let me come from here first. IFVG, FVG, now breaker, what I'm trying to write, I don't know, breaker block, order block. Now sell side liquidity. Okay, so how does this work is, whatever you have mastered for a sell short setup, when market is trading here, okay, below the equilibrium, this is where you found your break of a structure or market structure shift, something like that happened. Inside of your discounted array there will be a swing low. That's what market will create before retracing into your premium array. When market is at equilibrium level, here you are looking for market to either retrace to a IFVG or a FVG or a breaker block. Above that you have a order block. Above that you have the buy side liquidity. Now why until this far? Okay, why until the buy side liquidity? Sometimes this specific part of the area can act as a rejection block. This buy side liquidity is acting as a rejection block. So rejection block is in between the order block and the buy side liquidity. Order block is starting from this entire move somewhat around this area. Rejection block is here. Above that you have your buy side liquidity. So market can reach to the buy side liquidity, then it can come lower. That is why the highest is the buy side, where if you have this fair value as your entry, fair value, or your breaker block, order block, whatever it is, this is your last level of defense, the high. Okay, market has to reverse before going there. So if you are entering based on just the liquidity grab, your stop loss has to be above that. That's what they were actually talking, that sometimes I enter early when like this candle happened. I entered from here rather than waiting for the displacement. I already grabbed the majority of the move, things like that. and they will consider adding more position until it reaches to the equilibrium level. Now you are entering from a premium for a sell short until what? Until these levels. Market can retrace from the inversion fair value if there is any. Market can reverse from a fair value if there is any. Market can reverse from a breaker block if there is any. Market can reverse from a order block if there is any. Or market can reach to the sell side liquidity. So when I'm targeting for this example, okay, I'm expecting market to reach until this discounted array. For this example, from this low, what happened here? Market took the liquidity, gave me the market structure shift, created a fair value, and there is also a inversion fair value aligning. When it's aligning, I'm looking for a entry from the common area, not from the top. But still, if I want to, even I have a order block as well over there. But from here, I'm not going all the way up there with my entire position. I'm happy to take some partial here or at the common area, whatever it is, wherever it can possibly reverse from. If I'm exiting out from here or taking partials, putting my stop loss to break even or in a certain level that I calculated, market may not come. For example, maybe this low. Eventually from here I took the partial, stop loss here above my entry, market came, stopped me out, no regret, nothing, because I have secured most of the profit here, and from the entry until this far I have secured some more profit. I'm not in a losing trade, or I'm not finishing my day as a losing, like as a losing day or something. So this is where the premium arrays, the opposite, when market is from what we are expecting, something like this. This is not actually that. Let me redo that part. Market coming until this far, creating a high, market taking that liquidity, creating new sell side liquidity here, giving you a market structure shift into a premium level or whatever level it has given. From that low to high, this is your premium and discount range. Okay, I have drawn over here. So from this low until that, this is your premium and discount. So when you are looking for a entry, you look for your discounted arrays. From that height to this low, the middle point is your equilibrium. So above that, everything is, hold on, let me extend so that it makes more sense to you guys with what I have just showed you. Now from a premium level, you are expecting market will come inside of your equilibrium, inside of your discount for a buy long setup. Okay, so when market is coming here, you are looking, I might have like put it in a different order because breaker block will be around this area, then the inversion fair value will be around this area, then the fair value, things like that, and order block here and sell side. These two are correct, but these three I could put my breaker block higher. But whatever, I hope you are understanding. The fact is, when market is below this equilibrium level, you are looking if there is any breaker block here or not. There will not always be a breaker block. So if there is no breaker block, this is unticked. Okay, this is, you don't have to worry about breaker block. What you have to worry next, maybe the inversion fair value around this. If there is an inversion fair value, you want to look for your model or entry from that area if you mastered the inversion fair value. If not, for me, I don't want to use the inversion. So what I want to use, the fair value. So below that equilibrium level, if there is a fair value, that is where I'm entering. And if there is no fair value, then I have to look for a order block. If there is an order block or not around this downwards movement, there should be order block. High probability order block is the one with fair value. Low probability is the regular order block, like the lowest down close candle or set of down close candles that has taken the sell side liquidity. And also, even if there is no fair value, if the liquidity grab when it happened, this low has taken another liquidity from your higher time frame point of interest or higher time frame level, or even the same time frame level, if it can take multiple levels of liquidity, this can still be a high probability order block. But rather than that, like if this happened, then there will be a breaker block. So you want to look first reaction from the breaker block, then inversion fair value, then fair value, then order block. If nothing is there, where you can enter is from or below this low, keeping your stop loss bit lower and expect a higher move after taking the liquidity if it aligns with any other higher time frame point of interest on your left around this area. But PD arrays, like it's the same array in the premium and in the discount. That's why PD arrays, okay, like equilibrium, PD, premium, discount, and these are the arrays. So your entry should be based on when market is above that level from the low to the high, the middle point is equilibrium, below that equilibrium level whatever you have over here, inversion, fair value, breaker, order, like breaker should be higher because that starts around this area. So that's why I said like I might have made a mistake regarding that, but I hope you are getting the point. So since I did not master the inversion, I would love to remove the inversion from here. I'm not gonna say I'm a master of inversion fair value. I'm not. Okay, I'm not master of any of them. Whatever I'm doing is still I'm journaling, making things better. Now in my strategy video in my channel, you will find me that I'm utilizing or using OTZ all the time. This itself is a entry model from the low to the high. If you want, you can enter from the 6 to stop loss at the 1, targeting. First target is the 0. This is where you take some partial. You can wait until the negative 27 level, but as I said, since I have seen sometimes market reach very close to it, then it reverse. So for that case, I made like, this is my experience, this is my way of thinking, I made it 1 to 2. Even I had another level over here which is like negative 0.15 or something. Let me actually check. Let me check. Not that one, but okay, I will just remove this and 0.15. Where is that 15? Where is the minus? Come on, here. You see that? This is where the, like usually my 1 to 2, 1, 3 or something, that is where the 1 to 2 aligns from the entry to the exit. I made this a specific level for myself. This is not something you should be using, but this is my observation, my way of, I'm happy if I get that profit. Okay, if I invest $100 or if I take risk worth of $100 in this entry, that entry will give me at least $200 in return. Since I enter with at least $500 or around up to $750 or $1,000, like up to 1%, I'm happy with the return, man. This is $2,000 from a profitable trade. Now what can make my entry a better? If it can aligns with another PD array. This is also a PD array. This is also an entry model, guys. This is the easiest possible entry model, but this model will be more effective if anything aligns inside of your OTZ. Maybe here, let me mark it in a different color so that you can see. Either this fair value, if it aligns this beautifully, that high or top of the fair value you can enter. If you see the fair value is aligning like this, consider entering from the fair value top. Okay, now there will be a lot of time that you will see a fair value is aligning like this. The high of the fair value is little higher than the OTZ level. That level you will keep in mind that this is a mechanical thing, guys. If you do this, no matter what, this will be your risk reward every time. Okay, and you have to calculate very less. You are making your trading life simple. You don't need to, like, once you enter into a trade, you don't want to calculate a lot of things. Okay, what you want to do is enter whatever aligns, like if the fair value is aligning like this, enter from there. Put a limit order, like right click, let me create limit order, go to your account, whatever, like this is a hourly chart, that's why you are seeing like $3,000 worth of stop loss and take profit is 7,500. But same thing you can look into 5 minutes, 15 minutes, 1 minute, whatever time frame you are comfortable trading with. You look into that, enter from the fair value wherever it is aligning. If it aligns like this way, as I said, enter from the 6-2 level, not from the top, because if market is coming here, it will 99% of the time you will get your entry from that area. That 1% of the time I'm happy to give up. If I see market is reacting from this area instead of coming to my OTC, I can look for another entry when a lower time frame structure around this area is broken and fair value gap is retested. That time I can enter from here and put my stop loss even higher, because the fair value here was perfectly respected, and after retesting that, market is going. This is your experience will give you that. But if you are new, you are testing something, try to look into the thing like this way. When you are finding that, this is where you are entering, not from the top of the fair value. Even in lot of my videos I said, when I see a big fair value gap, I try to enter from at least the 25% from this area. But as I said, the moment I started utilizing this, my performance, my trade result, it has improved like dramatically, literally, like I cannot even explain how much it has changed my trading journey. Because this is the entry model, this is the entry model, this is 2022 IT model, liquidity grab, market structure shift, fair value gap, entering from fair value gap. Simple. This is 2022 IT model, one model aligning with another model, and the same zone is where you are entering from. I was actually trying to show you from this specific video, but I forgot, like if they talked inside of this how to consume ICT, or here, or there is this how let me check, pair comparison changing strategy, if inside of this or not, I actually forgot. But it's a very long video, I don't want you guys to be bored around these things. I shared the link, you can watch later. I'm giving you guys whatever I'm finding valuable, I'm giving you guys during the live stream. Now as I'm saying, when I align two strategies with one, there is why this is a high probability. This itself is the entry model, this is another entry model. When in my trading time, or in my session that I'm usually trading, I'm finding my setup that aligns with two strategies at a point where I'm willing to enter. How many people has to be wrong regarding this entry in terms of getting a stop loss? How many? It will work 100% time? No, it will not. I might have missed something on the lower portion, maybe it has created a equal low with a lower time frame or something. Market can easily come and take that first and then give me the setup, whatever it is. If I have a bias on the daily level, if I minimize my risk, let's say I'm willing to take 3 trades maximum, but there is a rule. If my first trade is a loss, I'm losing maximum 1%, not more than that. So my second trade, I'm expecting a better entry, like the same way. If I get it, I will take it. If this is minus 1% loss, I'm looking for a setup that keeping the bias same. Okay, I'm not changing my direction straight away, keeping the bias same. If I get another setup, I'm willing to take another 1% worth of risk. If this one is a profit, I'm getting my 1 to 2, so 2% back, and that is covering this 1% and giving me another 1% of profit out of this trade. If this one is a loss, back to back 2 losses, I don't even consider trading one more time. But if it is a profit, I have 2 decisions to make. One is either I will end my day with that 1% gain, because it's not a bad amount. That's why I lowered my target from making $1,000 per account a day to $500 to $600, because that's a easily achievable target for me, considering the account size I have. Now I have a total of 300k, okay, in my funding, a total of 300k account. Think about it as 1%. How much? That's 3k, guys. That's 3k. Now if I'm risking 1%, then now I usually utilize around 0.6 to 0.75% per trade, but whatever I'm doing on my first trade, I'm keeping the exact same. Although ICT said to lower the risk or cut the risk into half on the second trade, first go to break even, then look for a profitable trade or something, but since I'm not risking exactly 1%, I can like keep the same thing. Okay, with two losses, I'm taking around either 1.5% or 1.2% loss. So with two entries, I'm risking that much because I lowered my profit target. Okay, now that's 3k after a losing trade and a winning trade. If I lose, like, this 1% loss is also a minus 3k. Don't just get me wrong by like looking into 3k profit. If I lost that, it's 3k loss as well, but I have a 300, like my total funding is 300k, so I'm willing to take that 1% risk. And not just doing that, like I have already like balanced up my each account, right? Each account now have over, like, total balance is now around 318k after all that withdrawals and stuff. So since I have 18k in profit already running on my account, something around that, I cannot remember the exact balance, either 15 point something k or 18k, like in between that range, not more than that, but not less than 15.4 or 4 or 6k, something like that. So after the withdrawal, I didn't actually check. As you all know, like I was going through a lot of things, so money is the last thing I was worrying about. However, as I'm saying, like, since I'm up, I don't mind losing 3k from that 18k. I still have 315k as my balance. So on the next trade, if I can make it 1 to 2 and close the day like that, keeping the same risk, it will give me 6k return. So since I lost 3k, another 3k will be added over here. Okay, this is how I look into. This is my thing. I'm not a financial advisor. I'm not anywhere like anything regarding, I'm not giving you any advice regarding your risk management or investment capital thing. This is my way of looking into the thing. Now whatever you find suitable, if you don't want to target 1 to 2, you can target 1.5. I don't care, like, as long as it's positive risk to reward, and you know that over time this will give you a higher win rate and higher like the return is good enough to recover your loss. What's happening here? 1.5, you are still getting that 1% loss back and 0.5% gain in your account. However you want to view your thing, it's up to you. You have to find it. This is my way of finding. I'm happy to take a loss of $1,000 or $2,000 in a day. Okay, I'm happy with that because I have built that capital, 300k as my funding account, and 18 or 15, whatever it is right now, that's the amount as extra on top of that. So 1k or 2k I can risk from this 318k or 15k account. I don't mind doing that. But if back to back 2 losses, I consider the third entry as a, like, I first talk to myself, okay, like if it's a revenge trade that I'm taking, or if it's a actually optimal trade that I'm getting, that I would love to take and take the risk on more time. So if I do that, I will take the third entry. If not, if my answer is I'm taking a revenge trade, or I'm desperate to win a trade, I will straight away, like without even closing the chart, I will just go to my start menu, or without even going start menu, I will hold my Windows key, I will press the U, no, I'm sorry, I'll press the X, then U, okay, U, and then another time U. Okay, that is the shut down my computer straight away without even closing the chart. I will shut it down straight away so that I don't spend one more second on the chart looking into another trade. If anything I feel in my emotion has changed after 2 losses, just use this, okay? Like Windows X is what will bring this screen, then like don't select any other key, just press U once and one more time it will shut down the computer straight away. I'm not pressing the U twice, so it's the steps are like this, okay? If you guys don't know, just for that example. So Win key, okay, where is the color? Here, Windows plus X, that's a step 1, and step 2 is U. Done. Your computer will be shut down straight away, okay? So first Windows plus X, give like don't hold any more the window key or any other key, just press U 2 times, it will shut down your computer. That's the quickest way to shut down the computer. Now I will do that straight away. If there is a recording going on, I will not even consider stopping that, because I know if OBS crashed, that recording will be saved in my computer. So I don't worry about anything, not even clicking on this save button, not even closing the tabs, nothing. I will just straight away close that. That's my psychological thing that I'm training myself with. Now this is my thing, I'm expecting that. How many times you can be wrong if you follow 2 strategies in a row? Now I'm going around 83.8 or 6% win rate. What are the words that I lost back to back? There is a very less word over there, right? So 83%, forget about 83, let's talk 80. So out of every 10 trades, I'm winning 8, I'm losing 2, okay? So out of every 5 trades, I'm winning 4, I'm losing 1. Now that one trade can happen at the very beginning, but what are the odds of my second entry going into a losing trade one more time? It has a very less word. That's why lots of my days, the PNL I made at the very beginning is the PNL of the day ending as well in my profile. You will not see different PNL as well. The screenshots I have shared so far regarding my PNL, even in my channel community post in the Twitter, you will see I have the same PNL on the same thing. Like in the community post long ago, I have shared all these things. I don't know like if you have watched it or not. Few things I have shared over here, but these shorts I found it interesting, that's why I shared that as well. Let me show you some of my not that actually, from TradeOvet. I don't know if I have that or not here. Now you see I gave some top step funding account challenge target, how you can like utilize based on your strategy from 2 days to say like win in 10 days. You need $300. You won't need that. That's what I said, like you won't need that, because if you have something you can have that. The better choice, good choice is 5 days 600 per day, you can make that 3k profit target, or 6 days 500 per day, you can make that. It's a better choice, good choice. The best are here if you target 7 or 8 days, so you will have some reserve days, things like that, okay? Like someday it will be better, someday it will be 2 days. It's impossible. Why I said you will see a lot of people are completing it in 2 days, but impossible in a manner is that 2 days is not good enough to justify your strategy or your knowledge on the market. If you can complete, it's good, but 2 days worth of PNL, so many people they complete their challenge. I look into the top step community as well. So hey brother, what's up? Yeah, I have been streaming for a long time. I don't know why, but yes, I am streaming. So as I said, like this sort of things, if you if this is just a planning or this is just a template that I'm giving you guys, you can decide how you want to approach your challenge. Everything has to be your own, your strategy, your entry model, your lesson, your learning. As I was talking about these things, that if you can align this thing, as I showed you earlier, that the ICT roundtable here, every single person, if you don't know any of them, I hope you know, because you are trying to learn ICT. This is Kyle, ICT's best ever student, who has proven to be the highest payout taker or highest profitable trader by far in the history of prop firm. This is Kamil. He recently started ICT. The other guys that I showed, these are all his private mentorship. Omar, this is Ali. All of them the best ever ICT students that you can see over here. Okay, now there are more as well, like the fair value god that I didn't know about. His name is Arzo, but I was following him on Twitter. As I was showing, like on Twitter, I was following, he had a lot of things. I'm following him for a long time now, but I never realized that this guy's name is Arzo on YouTube. Okay, so that's why I didn't consider his YouTube channel. I watched couple of his videos before. Okay, I found a couple of videos on my list, but I never knew. I was sleeping, just got up and YouTube and found you live. Hey, you got up for what at this time of night? This is like nearly 1 a.m. in Bangladesh. Why you are wake up? Like, why you are waking up this time? Go to bed, sleep more, wake up during the Fajr prayer, brother. Muhammad Ali Khan, inshallah, brother, you are on a path of the thanks, brother. I'm trying path of that destination. As I said, like, so far this is what I'm using. This is I removed the other PDRs because, as I said, I am not a master of any of those. I'm not a master of any of those. However, if you get time, since it's weekend, you are not trading, or people who are trying to learn, sometimes this sort of videos, like these 4 people are the people that you want to listen what they have to say, what they have in common. These are the things you can take out of this specific video. It's a long video, I know, lot of fun talking, personal things as well. Even though, like, at the very beginning, ICT, they're talking, like, when they initially started the what it calls, the mentorship, private mentorship from ICT used to say he is one of the guy who was with the coding team, who coded the algorithm. Later on, he said on a Twitter space, no, I was not in the team, I just decoded it, or I was doing that and that, things like that, lot of things. Okay, but why I'm saying this is because, as I said earlier, I have a huge respect for ICT. I loved what he has done for the community. As a trader, I love him, but as a person, I don't know him. I don't want to talk about that. But as I said, me as a programmer or me as a computer engineer, I know that when you are working for someone on a project, you have to write a non-disclosure form. You have to sign that. If you violate that rule, any rule from that non-disclosure form, you will be behind the bar no matter what. I don't care wherever on earth you are, you fly away from that country or that company. If it's this serious of a matter, if it's this big of a matter, they will find an executive no matter what. If it's a lifetime imprisonment, a huge amount of fines and dues, whatever, you will be executed, because that non-disclosure form is something that can ruin one's life. That's why you see, like, why do you think people who started Microsoft, they are still working there? Not many people changed their job or left Microsoft, things like that. Why the things are not coming out? AMD or Nvidia or any other thing, Intel, things like that. Why people are not disclosing how they are making their products, what their infrastructures are, what are the codes or whatever they are using? Why it's not out, like the sources are not out? because they have all signed that non-disclosure form. So this is where I have problem accepting or expecting that ICT was part of the team or had anything to do with the coding or the algorithm. He deciphered it, he broke the algorithm into pieces, and he figured out the things. That is where I respect him. And later on he actually like what it calls confessed or cleared that no, I was not in the team, I deciphered or broke the algorithm and figured out the algorithm, things like that. Okay, 30 years, 40 years, 50 years experience, that is where the experience comes in. So as I was saying, as I showed you earlier as well, like whatever the strategy is, it may work for me the best way, it may not work for you because you don't know the inside and outside of that. Same thing, whatever the strategy is working for you, it may not work for me as well. No matter, like regardless of how profitable that strategy is, it may not work for me because I don't know the inside and outside of that strategy. You are the one who created that strategy, you are the master of that strategy, that's why it will work for you. But as long as you are willing to learn from it and utilize it, or you want to look into it in depth, that is where it will give you the most of your success. So ICT said long ago as well, recently as well, even these people are saying that out of those 82 models that he has shared, all you need is to pick one that suits you. So one model, one time, like one pair or whatever it is, indices, index, forex, one pair, one session, that's all you need, and one PD array. Okay, like model or PD array, however you want to say it, it's the same around this area. So that's all you need to become profitable from ICT concept. Now if you are a fan of 2022 IT model, master that model, you will learn it. I have learned the 2022 IT model. At the same time, I'm still learning and developing my knowledge, watching all the videos. Now every single person, these 4 people here, will say if you have not watched the core content month 8, you are missing the biggest part of the puzzle. It's in pieces. Okay, ICT, the strategy or the concept he shared, it's in pieces. It's one piece here, one piece there, one piece there. You have to combine those pieces to become someone like Jetcap, Ali, or Umar, or even Kemal. He is a very good trader as well. So to become one of them, or more than better, like better than them, you can be better than them, man. If you trust your process, if you have worked enough on your process, why you cannot be better than that? Let's say my daily bias is a downwards move. Okay, like market is going for a sell side delivery, that's my daily bias. Now my silver bullet during London time, it has taken the Asia's buy side liquidity, it has reached into a higher time frame point of interest. From there I'm getting this liquidity grab market structure shift, and my OTG is aligning with a beautiful fair value, the fair value I can anticipate to enter into a trade from. Now I'm with my bias, I'm getting my silver bullet setup as well. This is where I can even consider risking more money than I usually risk, because that's my A plus setup. It's aligning with my daily bias, it's giving me all the criteria that I have talked about in my channel, it's fulfilling all of them, and then it is giving me that 2 entry models that I have discussed. This OTG itself is an entry model, this liquidity grab market structure shift fair value gap, this is an entry model. So I'm expecting everything is aligning together with my overall bias on the market. I can risk more over here, or I can risk the same. I can target for the Asia session sell side rather than targeting just 1:2 or something. Okay, rather than just targeting this, I can target even lower the liquidity I'm anticipating, or I can take partial here, I can leave some position open to maximize that day. This is how I can be a profitable trader. My personal daily PNL best is 7.4k. Okay, like almost 7.5k, but let me keep it round figure as 7.4k in one day from one trade. This is the highest ever I have made. I have made so many times 3k, I have made so many times 2k. This is just one account and one trade. Okay, I'm not combining all three accounts and then telling you the PNL. This is one single trade, one single account. So whatever I'm seeing, I have done so many times. Even from my 50k account, my average win rate, or like winning PNL was average was over 1k, because I was risking 1%, $500 per trade, and I was targeting that 1 to 2 or little higher. If the liquidity is very near to my 1 to 2, I would target the liquidity to my as my exit. So 1 to 2 of $500, it's giving me 1000. I had PNL like that. But then I have, over the time, I have developed more. Now I'm not looking for $500 risk in every single trade. I have a minimum. I have a minimum profit target. I have a maximum risk amount. That is no longer 1% anymore. I'm now risking 0.75, because the more time I'm utilizing or using regarding my my trading, my journaling, things like that, I'm looking into something that makes more sense. Okay, what makes more sense? Out of that 7.4k, I have withdrawn literally like nearly 5k from that one single trade. How? When I got that, I reduced my risk by very big margin. Like literally I reduced my risk. I had only 2 days to complete before I can request another payout. So I made sure that I'm first completing that 2 days, because the profit I got is good enough for me. If I withdraw even 50% of all the profit I made during that 5 days of completion. So let me actually remove all. I think you got this point. I will just clear the chart. So top step, you must have to complete 5 days of winning days above $200. Okay, so before that 7.4k, I had some days of like 1700, some of 1100 something, things like that. I cannot remember exactly. It's a long ago, but like nearly a month and a half ago. But something like this I had already in my account sitting. Then I got that 7.4k or 5k as my profit. Okay, that's 10 extra, but anyway, I hope you got it. Now when in 3 days I'm seeing I have over like 11k, nearly 11k in my account, I need 2 more days with 200 plus. So I minimized my risk. I made 600 something on the very next day, like 600 something, because that was the most obvious level of liquidity that market will go, and the risk was somewhat around $320 or something. So 600 plus, around nearly $700. That's what I made on the 4th day. The 5th day, I just closed my trade on this specific reason, only 243 or something. So this is 5 days done. I closed my trade. I didn't even consider looking into more profits or something. The only accounts that I held that trade is yet to like complete 1 or 2 days for the 5 days profit target, because the account I got was in different days, and the day I request a payout from one account, I don't trade on that account. So the days are different. The way I'm requesting payout is, let's say this is account 1, account 2, account 3. So if I'm requesting payout from here, I don't trade on this account until the money reached my account. So these two I'm trading. Now this one is now again coming to the zero days. Okay, not zero balance, 0 days. But these two has now some maybe 3 days or 4 days. So on next day, this account, my target is only the bare minimum to complete the 5th day, and on this account and this account, I'm targeting the whatever the drawn liquidity or my target, I'm targeting that, because I still have couple of days left over here, and this one I have only 1 day. So once I complete the 5th day, I will withdraw from this account and don't trade until the money is reaching here. Next target is this account on the 5th day. I hope you are getting the point. I don't want to make it too hard, but it's my way of looking into the things. Okay, so what I'm saying here is you have to have some plan regarding everything: your take profit, your stop loss or risk percentage, your strategy. If you don't have anything, let's say you are not looking into you have no strategy, you are starting to learn, the biggest mistake you can make is trade while learning. What do I mean by that? Is utilizing, let's say you are going for a maybe what it calls, maybe a challenge account, while learning to check if you have enough or not. Now for a lucky charm or for somewhat being correct, if you are getting your challenge completed, okay, I don't know if it looks bad or not, but I didn't mean to draw something bad over there, okay, it was the arrow. Anyway, so for any reason, if you are completing your challenge, this is where you will maybe reduce learning or stop learning and thinking that okay, now you know how the market works, now you have a strategy when you have nothing, and eventually you will lose that account. And by completing, what gonna happen is you are investing more money. If I'm talking about top step, so when you complete the top step challenge or pass the challenge, you need to pay another $149 non-refundable fee, okay, for the express account, and you have to be profitable for 5 days before you can request a payout until you reach to 30 days of profitable days over $200. Okay, whoever is with top step, he already knows. I'm just saying for the people who doesn't know. So you are investing more and eventually you will not even reach these 5 days. You will lose your account because your account is starting from zero balance. If you go to negative $2,000, your account will be blown away. And there is a high probability that with less knowledge, if you are trying to trade, that gonna happen to you. So whatever you have, do not stop learning. If you are already funded, if you have a strategy, try to learn something that can complement your strategy or that can make your strategy even better. I talked about this, okay, the trending dealing range or things like that in my channel. So when this liquidity is taken, now I'm willing to see if this liquidity taken or not. Whatever low it creates before taking that buy side, if it can take this low, whatever low it creates, this is another type of dealing range. Same thing here, buy side taken, sell side taken, I talked about that. Market retraced to the OTG and the most common area, as I was saying, this is the very first fair value of the hourly chart, and this is the, are you serious? Where is it connected? I don't even know where is it connected. Maybe on my laptop, but or I have created multiple, anyway, or maybe I'm so long logged into the same account. And this is your breaker block. So common area, as I say over and over again, so this should act as a breakaway gap, the first fair value, or since it's in the extreme premium area. So from here market is retracing. The reason I already shared or I already talked about, but if you have missed, let me get back to 4 hours one more time. So from this accumulation, manipulation, accumulation, manipulation, accumulation, manipulation, distribution happened until this low, market retested into the premium array, which is the one, either this 4 hours order block. Now if you are not looking for a order block here, that's your problem, but as long as it has taken the liquidity, shifted the market structure, and when it shifted the market structure, it created fair value gaps, I'm looking for a order block here. Okay, and as I said, same with the breaker block. if it has taken multiple levels of liquidity with that higher run from this and this. I showed the video from ICT's channel also. Go to that video, you will have so many insights. Mentorship 2023 advanced theory on breaker, you will find, and ICT mentioned it inside of this video so many times, that this is his, like, this is the highest probability breaker block. Like, this is what he will use every time if he find this sort of things. Okay, 2 levels of liquidity, especially if the sell side, this one is a higher time frame point of interest, it's even better. Like, if the liquidity is from a higher time frame, this is even better, but at least multiple level of liquidity taken breaker. How you draw your standard deviation or fib levels from the A to the B, this leg, not from here to here, not from here to something here, from the A to B. Okay, in this video you will find everything, how you can draw the things, how you can identify your breaker, high probability, low probability, everything over there. Now that's how I look into the market. I have shown before as well. Market reached there, market coming lower, so the dealing range is from this high to this low. So that's why my friend is here, ICT trading concept brother. If you can remember, I was talking about this 4200 level, that I'm expecting market will go until that level, 4200. This is the reason, and along with that I have more liquidities here as well. So maybe market can take this liquidity, trade into the lower portion of this fair value, or it can go even lower. I don't know, depending on what market does on Monday and Tuesday. I will consider my Wednesday, Thursday, Friday expansion and range as well. But now I'm looking into this sell side liquidity. But before that, as I said, I have from the daily level a breaker over there as well, that previously market. Now my friend the other day when I mentioned this breaker on his channel, he didn't find it, but the reason behind that is it has taken liquidity from this swing low. It has taken liquidity from this swing low, 2 level. This is the breaker I was talking about, the highest up close candle with body, like highest body with the up close candle. Market came to this area, as I showed on the 4 hours or even 1 hour. The respect of that level happened multiple times, and even I can like reduce or realign that area with other levels as well around that area. So whatever it is, this is the respect or reject from that level. Market is currently exactly top of that. Whenever it came here, it retraced. This is hourly. Let me show you the hourly liquidity graph, market structure shift, and above that level, as I said, I look into premium and discount. If that can, that's the highest it reached before this retracement. That's why I'm looking into that high. This is the discount. Around the discounted area, what do I have? I have this order block that has taken the liquidity and traded into fair value gap, or I can simply consider, if I don't want to consider this as my order block, since it's inside of this huge leg, I will give you this as well. This is where the bodies are respecting. Okay, so I don't know, like it's one's preference. And why I'm looking into this area, because of this is a huge wick, don't get me wrong, but this is also a breaker on my hourly level, because that recent swing, and that's the 4 hours or daily level liquidity that it has taken with that one single move. So this is a huge breaker. The middle point is getting respected, nothing close below that middle point. Yes, I know fair value, that's what making it even more high probability, but watch that video, then you will understand what I'm saying over here. Okay, but not from the one video that I'm saying. Simple thing is low, high, lower, low, it's a breaker. Now if it's a high probability or not, that's what ICT said over here, that he is willing to use that no matter what. Like, this is his highest probable breaker block. If it takes some liquidity from recent sell side, and the sell side that is sitting below that level, that sell side, that is also a higher time frame sell side liquidity, which in this case this, and that same move took that liquidity. So that breaker, now I'm willing to see if market can close below that mean threshold of that breaker block or not. Now if it's a mean threshold or not, that is also explained over there in that specific video. From this low to this high, that is where I'm gonna look into the standard deviation. Market traded into 1, inside of that 1 and 1.5 I had this rejection, like premium PDRS, from where market is coming lower. It all makes sense until this far, and as I showed earlier, that why I was expecting a run towards that, because of that swing high. Okay, if I'm not wrong about selecting the swing high, either this one or this one, whatever it is I showed earlier, because from the 4 hours, yeah, so this one, this, when this was taken, that is where I know that market is going for a higher PDRS, whatever it is, this side, so that level 33.5. So yeah, I think you have got something over there. I don't know, like guys, I'm trying my best. So since, as I'm saying, like the hourly is sitting here, I'm expecting first a run lower from this area, close below that. If I can see that during Monday silver bullet, market is trading below that, or at least traded below that, now going higher for a rebalance of this sort of fair value, the premium discount area, things like that. Even if it can take this liquidity then go higher, this is another hourly dealing range that it is creating. So I will look for a sell short if I can see that happened. And eventually what gonna happen, right? Once it takes this liquidity, I can do two things. Either I can catch my buy long until it reaches the point of interest, so maybe this high can be a good target from around this area for this, because it will take the Asia liquidity during the silver bullet, it will take the Asia sell side liquidity, and then after the silver bullet, like when the silver bullet happens, the retrace, for the retracement I can look until market reach there, but taking partial around whatever the most obvious levels are from there. And if market goes higher first, then I will look for a sell short, because it gonna take the, like, overall direction of the market is sell short. It gonna take the buy side liquidity of Asia, reach into the premium and discount area. If even it can go back to this area one more time, take this liquidity, I don't mind seeing that. But as long as it's delivering the sell side, I'm gonna look into sell short until whatever relative equals or whatever lows it has created, maybe the middle point of this specific candle, like this candle, or until this fair value, whatever, depending on the price action, I'm looking into my take profit levels. Okay, where whatever it has created, before that I'm not willing to say that my take profit will be this low or my take profit will be here or here. I'm not gonna say that. Okay, because during London, during Asia, especially when it's Monday, I might not trade at all, because Monday most likely it's gonna consolidate. So if it consolidates like this way, if it's a range bound, I don't want to be chopped up when it's taking buy side, taking sell side, like inside of a range. I don't want to be in a trade in that situation. So whatever it is, everything depends on the price action. But as I'm saying, these are the key levels that I'm looking into. Like first on the hourly or 15 minutes level, I want to see a break below that, taking those liquidities. And on the higher time frame, like maybe 4 hours or even the daily level, I want to see market is closing below this in terms of disrespecting that daily breaker, so that it can continue lower. And if you know by now, there is another daily breakaway gap sitting right below those liquidities. Okay, so like right below these liquidities, I'm expecting if market can reach here, it can. Okay, so everything is depending on where it is accumulating, then manipulation is happening, then the distribution wherever it is happening. I'm expecting to see that first. Okay, like every other week, every other day, that's how I decide. Market gave me beautiful buy side delivery, took all the things wherever I anticipated, market went until that far. Now market coming lower, it closed below the previous day's candles low. I'm looking for a sell short on Monday, and depending on where Monday is closing, as I said, the levels I anticipated, depending on those levels, I'm going to look into my Tuesday, Wednesday, Thursday, Friday, wherever it can possibly expand. Because on the weekly, remember, as I showed, like end of the week you are expecting either the week high of the week or low of the week will be formed, like this weekly candle. During those 2 days, whatever market did, it first created the high, it created the low, it retraced back into the range, even it went higher, then it expand lower. That's what you are seeing over here. Okay, so market, because of the news, you are seeing the bigger moves over here. I'm telling you that as well, because we had news. Market on Monday, it did something like this. Usually Monday is something like this. This is a Monday. Look at the Monday before. This was a bigger Monday, of course, at the all-time high, but most of the time this is a Monday. See, this is a Monday. Look at the Monday over here. Okay, this time I think the Monday was closed, so Tuesday had that that consolidation, because I can see Friday and Tuesday, so Monday was closed. But on the lower time frame you will find your Monday, because the London and the Asia session, they actually traded, but the New York session was closed. It's not here printed over here, Monday. Let me check actually. Okay, so this is Friday. I'm now looking for Monday. Let me check in hourly. Friday. See, the Monday is here inside of that range, of course, but Monday is here. Okay, this is 15th January. That day the New York session was closed. I can remember, because on that day I made a good amount of profit from my London session. Then I found another setup, I took entry, and I had to take, I think, a small profit or a small loss, I cannot remember. But the moment I was seeing like market is not doing anything at the New York time, what's wrong, then I realized that okay, today is 15th January and market was supposed to close on 15th January during the New York session because of New York bank holiday. So that's why it's not over there. But as I said, it will most likely do a very short range, like it will go to a very short range on Monday, and on Tuesday it's most likely the manipulation, and the weekly expansion and continuation, that sort of thing happens from the, you see, the 15th Monday, 15th January, USD bank holiday. See, like later I realized. So yeah, like whatever it is, I remember that first session was good, but the second entry that I took, that gave me a lot of headache, because I forgot about the New York is not opening today. So whatever it is over here. Okay, USD bank holiday. Now similar thing is coming up somewhat around this week, I cannot remember. Yeah, so this Monday is also a bank holiday, so be careful. 19th February bank holiday. So yeah, I mean, Monday bank holiday, Tuesday we have no news. From Wednesday we have FOMC unemployment claim, PMI. So Wednesday, Tuesday we can see a consolidation. The exact same thing we saw on this 16th or something. Let me go back to the daily. Yeah, so this 16th January, the similar thing, like avoid this sort of days. When Monday is bank holiday, try not to trade on Tuesday as well, if you can avoid. Or try, if you are in a trade, try to take the like obvious level as your take profit or liquid, like take profit target, and exit out and finish the day as a profitable day, whatever profit you can make from that trade. don't try to like make a huge amount on this sort of moments. Okay, as you can see, like usually this is how Monday is doing. On this specific Monday that actually gave a bigger wick or something, I like bigger green candle or something. I actually forgot which one. This one, I think on this day 29th, on the Sunday we had a news or something, I forgot, but whatever it is, this is a very rare case on Monday. Usual Monday is something like this or this. Okay, look into your chart, you will find your most of your Mondays are doing something like that. This is a Friday, although usually Friday it's not that bad, but it's all-time high level, that's why market was doing something, whatever it is doing. This is not a very good place to consider, you know, lot of analysis and this or that. As ICT said, until proven wrong, take long entries. Okay, so until proven wrong, look for the PDRs that can possibly send market higher. Yeah, like keep an eye on those areas. And also I wanted to talk about one more thing from the hourly before I go. Where was it? Just a second guys, I actually forgot which day was it. It was very recent, so I actually forgot which day, but I think this one, this specific fair value. Yeah, so why am like this is where a lot of people may not agree with my concept, but this fair value, it acted as a support, sent lower, took the liquidity, it kept some portion open, market went to the upper portion, market went to the upper portion, it found some resistance, failed to close below that fair value, eventually broke above. See the reaction, even still the market is holding inside of that area. Now why I said like ICT, even if like if you, this is a huge area to look into, let's look into this. Okay, this fair value as well, it's made some resistance, kept some portion open, failed to take the sell side liquidity, market broke above. So this became your inversion fair value. Market when came here, it beautifully got rejected from that fair value. Again market came around that same fair value level, market got rejected. Now again market is over there. This is where the day finished, or I have no more further confirmation that if it will hold or not, but the same area. Okay, before I was showing this big one because of a reason, but let me start from the big one, then I will come to the lower one as well. Support resistance trader, you see this area, you watch Ali Khan's that video that I have shared with you guys. Before, this area had a beautiful resistance level. Okay, beautiful resistance. When market broke above that, that same area support resistance trader are using as a like high probability or higher I don't know, like high resistance area before. Now it should act as a beautiful support as well. So when you are finding this sort of area, just keep an eye. Okay, I'm not saying use it to enter into a trade, keep an eye on those sort of areas, because you might not understand the breaker block, you might not understand the inversion fair value, a lot of other things, but when you have a trade inside of this sort of area that is giving you your alignment, okay, whatever, let's say like you have used the 2022 IT model like liquidity grab market structure shift, inside of this sort of area that previously found resistance, now showing the support, or like showing the what it calls support, showing the support. If you find any setup inside of that, take that trade. Okay, but not because I'm saying. Look into your chart on the 15 minutes level, on hourly, daily, 4 hours, whatever your higher time frame is, look into the chart into those levels. Why I'm saying this, if you can find, take it, is because the support resistance trader are also using that level. The ICT traders or even SMC, it's the same thing but different name, those traders are using the similar support what it calls supply demand zone, things like that. You are aligning with so many people, and the reaction or rejection from here will be like pretty good if you can. But as I'm saying, back test, forward test, look, utilize that area, as keep that area on your chart and look if you can find a setup around that area or not. When market give you this liquidity, market structure, fair value gap inside of that area, that is where market made that fair value gap, like this liquidity graph, market structure. I'm into a 1 hour chart. Okay, so market came back into that fair value gap, market started going higher, and look like how quickly it left that area. Then little bit of consolidation because there is a important fair value over there. Now at this level, you see like market in this area, it found support, resistance. When went above, it found support over here. Now this is what happened in the future, even this one. Let's look into the past. What is this? Support. Look into the past. Resistance, broke above, found support. Like, I don't know guys, it's up to you, but watch the video I have suggested from ICT's channel, from that interview that you have taken in the ICT roundtable from Word of Wisdom, his channel. Watch the interview, try to like take the notes or informations that they are giving, when especially when Mr. AK, like Ali is talking, listen what he is saying. Okay, even Kyle is talking, listen what he is saying. Yes, he is saying maybe there is a fair value here, but ICT is not looking here or here, he is looking way back. Now by way back, I can define this, I cannot define anything. Maybe ICT is looking for another fair value here or another breaker block, order block here. But as I said, I have not mastered all the PDRs, I'm not a master of everything, but I can assure you that this sort of thing you will find so many places. Okay, when market is respecting, like I'm showing you a bearish fair value that previously was partially filled and respected by the market, then market came lower, took the liquidity. That same fair value in future, how many attempts market like tried to like break below? Okay, when it went above, how many times it tried? But on the left at the same area, this is what happened in past, this is the future. Okay, from where I draw the fair value, if you consider like this area, that fair value does not exist on your chart yet. In future that happened, but what is the area? This is the area where market had most of the highs or the resistance levels or the buy side liquidity. However you want to define that, this is the area that happened in future. That is where market, like, let me just cancel the replay mode. In future, that is where you found a fair value gap. So keep an eye on that fair value. When this retracement was happening inside the fair value, if on 15 minutes you have better option around that area, like it's the news candle, so huge fair value, it's the almost same size fair value. In 1 minute as well, it's the similar size fair value, if I'm not wrong. But if you have found a setup over here, okay, like inside of that fair value around this area, if you have any setup, you can take a sell shot for that, thinking that previously it acted as a support and resistance. So this area is a very important area. When market broke below that, it will act as a resistance. This is, you are aligning your thing with support and resistance. I don't know if you want to do that or not, that's up to you. But I talked about this before as well, I'm talking about it again. Like, I have a different view on the market. Okay, it may not align with you. I don't have to align my thoughts or strategies or way of looking into the market like this way with your thought process, but I'm just giving you something. Look into that, even in like 1 minute time frame, 5 minute, whatever time frame you are looking. Look for the most like the areas that price has revisited most of the times that support resistance trader usually use, the way they use. Okay, look for those areas and look how market reacted around that. You see here what happened around this, what happened here, what happened here. Now it's up to you. Even when market broke above, what happened here? Market went higher, took all the liquidity that it had on the left, it reached to a fair value or a PDR around this area. When it broke lower, look, let me give you first time, just look, when came here it started going higher, when broke below, that is where market respected, came lower. When again market came very close to that area, maybe I could extend for that low or something, then it will align even better. Okay, because I just draw that fair value. Now if I align with that one tick or low, that is where market retested and went lower. Now I have more influence or confluence around this area on the 15 minutes and other time frame, or even 1 minute there is a fair value gap around that area as well. So whatever confluence I can align with ICT and the support resistance together, I have more, I have a bigger community to support my idea. That's what I'm saying over here. Okay, because after that, even like you see this consolidation, not a good price action wherever during the London session or whatever it is. On that video I already showed you guys that Ali and Jetcap, they are talking like, even though the price action is like a very sloppy price action, if you know the like what it calls, the structure, the range, the delivery type, if you know that, doesn't matter if it's a sloppy or choppy price action or not, as long as you know where the market is heading, what it has done, what is the market structure looking like, that is your trade, you take that trade. You don't worry about the choppy or sloppy price action. What gonna happen, instead of a profit in 10 minutes or 5 minutes, you are getting a profit in 1 hour, but you are eventually getting that profit. It doesn't matter if it's going very quick or if it's going slowly. As long as you are right about your analysis, you have a proven strategy that you have mastered, back tested, you don't worry about how market is going there. Yes, we all want to see that quick gain, quick success, quick win, everything, like everything quick. Okay, that's why we rush into something. We learn one thing, we know what is a fair value, we are a trader now. If it was that easy, then everyone is a trader. Okay, trading is not for everyone. Murad Hassan brother, 5 hours and 30 seconds. Wow. I had no intention, but since I have few people actually willing to watch and learn, I'm still here for them. So welcome, good to see you at this time. I didn't thought you were still awake, but thank you. And yeah guys, I have talked a lot now. I think it's a long time and I should go, and I have already shared like however I'm willing to look into the chart, whatever I'm looking into. I don't just stick with one thing. My bias can be wrong, I can be wrong, but what if it's wrong? I know where market can possibly go. That is when I can shift or switch my bias. I cannot be a slave of my bias. I have to be flexible. I have to know that if certain things happen in the market can give me this run, and when it is giving me that run, I will look for a setup around that run. I don't care whatever it is, I will look for a setup around that run. I hope you guys understand the topic and point from the 4-hour explanation that I have given, that why I was looking into a higher run if market can take that certain price or the liquidity that I was talking about, and why I was expecting a lower run, what time, things like that. Okay, I hope you got that point. For all this price action, all this upward move, I had the expectation that market cannot take this buy side liquidity. Once this one was taken, I know it is going for that higher time frame point of interest. That's why I looked for a long entry and long setup, even though market is like my expectation was market will be bearish. Okay, like this hourly fair value and the break at the common area, whatever I have shared already. Even though market is this bearish, I know it is willing to go at least to that fair value, if not the buy side liquidity. It went there, I'm done with my day. Now it's falling, I don't have to worry much. I'm not looking into another trade here, rather than I'm looking on the next day what it does. If it can break below that low, or the breakup that I have shown over here, the middle point of that, if it can break below that, I will look for a delivery until this, because this is the dealing range, sell side liquidity, that is the buy side, and the retracement is in a extreme premium array. Okay, so OTZ, the first, okay, here, so the first retracement happened here, or this one, okay, this one, because that was the fair value gap sitting inside of my premium array, and inside of the OTZ, this is the first retracement inside of that, where I have the liquidity graph market structure shift, the market, like the dealing range model, market created fair value. So if this high was taken, I'm looking for a higher run until at least that fair value, if not the buy side. Market took that buy side, it created fair value, this is the fair value I would love to enter from until it goes at least there. So when market went there, I'm done with my day. This is where the Friday finished. Okay, like the Friday London session finished, London session silver bullet, London session starting, everything based on that. Not just because I'm looking like it took the Asia buy side, so I'm now looking for a sell side delivery. It gave me the sell side delivery, but it gave me in the New York session. So not every day I'm looking like that, because I know above this level market has only that area to reach before it can fall. So this high is just the liquidity graph, there is nothing that can send the market lower from here. It can come to this fair value before coming lower. So when market came in like and close above with the single candle above that fair value, this fair value is not what I'm looking into anymore. I'm looking into the fair value above that area. That is where market reached, now it fell. So this high is what I say is a inducement, or simple, like since it's a buy side liquidities, you can call it simple buy side liquidity. You don't have to worry much about inducement or something. The high that does not make sense, that is the high market will clear first before giving the delivery, even in 1 minute as well. Okay, makes sense means if it's not coming out of a PD array, anything like, I mean not PD array, array, simple, like a fair value gap, a water block, a breaker block, anything like that. That is where you have to mark that buy side liquidity or sell side liquidity as a obvious target, and above that wherever it can possibly reverse from, that is where you want to see how a liquidity is, when a liquidity is taken, if market is displacing or if it's failing to displace. If it's failing to displace, you don't want to hold that trade for too long. If it's displacing, you can anticipate your point of interest on higher time frame. So on the 15 minutes, this is how it looks like. So when the liquidity was taken with that candle, the very next candle displaced higher, and with the next candle it created a fair value. So you want to hold your entry that you have taken either from this fair value or this fair value. I don't know which fair value you can use, but for me, as I said, I look into the OTZ. If this fair value is inside my OTZ, if price did not come here, when I see this close, I will immediately look into my premium and discount. Now I can see that it came into the discount and it is going higher. So I will either market execute around this area at the candle's close, or I will look for another entry around this area. As simple as that. Once it revisited that area, now I'm pretty confident that it is going higher, since it revisited and started going higher and above that area. That's what I'm saying. But as I said, when this liquidity is taken, focus is what it's doing next. If it's failing to displace like this, I will not hold my trade no matter what. If it displaces like that, I will hold, of course I will trail my stop loss, but I will hold until it reaches to that level, taking a partial on its way as I take at 1 to 2. That's the way I will look into the chart. Okay, fail to displace let me look for an example. Let's say here, when market, you see this bullish fair value, market came into the fair value, it went higher, it took that liquidity, the same candle, it came back, closed inside the range, like from the high to low, it closed inside. The very next candle it started going lower, so it failed to displace here. You don't want to be in a trade still holding and thinking that it will go higher. This is like, look into the chart, observe this sort of thing. When a high is taken, when a low is taken, this sort of thing, you will understand, you will have better vision. Okay, I'm looking into a lot of things, that's why I can hold a trade or I can exit a trade from a certain level. I don't mind taking the profit. Okay, entry any place, anyone can like, you can enter for a sell short from here, and if this low is where you are taking your profit, it's a take profit for you. If you are like comfortable doing that over and over again, if you have a strategy like that, like a scalping or something, it's up to you. Or you can maybe look for a buy long around that area, and when market closed here or the next candle, you are taking a partial. Taking entry is nothing. Entry, you can be wrong by taking a sell short from this low, or you can be right by taking a sell buy long from this high, and then market retraced, went above, whatever, I don't know, like I'm just giving you some example. Entry is nothing. It's more important is where you are anticipating market is going, where you are taking your profit. Until you take a profit, you are not a profitable trader. You have earned nothing until you take a profit. You hold your entry from, let's say you entered into a long position from this area, you hold the entry, market went until that far, you didn't take any profit, market came lower, now you are in a drawdown trader, like you are in a drawdown, or either stopped out or a drawdown, like, because price is now trading below that entry level. So until you close or take your profit, you are getting nothing. So target is whatever you are targeting, that is the most important thing. If you know market is going until that far, or even like above these highs, so what, you didn't enter from any of these retracement or this fair value, you can enter from any of this place. If there is a small little fair value that I can see over here, you can enter from here, because you are anticipating market is going these areas. So enter from there. When market retested around that area, went above that, take your profit. You know what you are doing. Yes, you missed the early chance or early opportunity, but if you are correct, if you are thinking it properly, this is where you can enter from any place. You missed the early chance, you are taking less profit. You entered early, you are taking more profit. It's all about that. Nothing can define, like, if you have mastered your strategy, no one can tell you that why you entered here. No one can tell you that. You can enter from this fair value. You can maybe this is not a order block, but you are still counting it as a order block, and then you entered from here thinking that market will not come below this low and it will take that buy side liquidity. If that is how you are looking into market for long time or practicing it, you can enter from any place. You can enter from here. I don't mind seeing you, like, when this candle closed, you can enter from, like, do a market execution, enter here, very next candle you are taking your profit, exiting out. This is a 15 minutes I'm showing, so it's not a very small range. That is 36.5 handle from the opening to the closing, not even the high. Okay, this far. So 36.5 handle with one lot, that is like $725 or something. So that's why I'm saying, like, you can even enter from here. If you know the next expansion is until that liquidity, you can take profit there. Whatever, guys, whatever, you have to have a verified strategy or a way of entering into a market or reading the price action. However you want to, like, master yourself on the chart, spend your time, look into those things, master yourself. You can enter from any place. Any retracement can be a opportunity for you. If you know when market came until this far and retraced from this area, if you know that market will go lower into a like into a imbalance or take these liquidities, you can look into a entry from that fair value, exit out from below that level on this candle. From a entry around this area, you are expecting market to go and take this liquidity. Whatever it is, you are getting at least like oh my god, I don't even want to talk about it. This is like 42 in one single candle, and if your entries from here until this liquidity level, it's like 120 or 30 ticks, something like that. Okay, I'm just measuring for something like around 80-90 handle. So that's like $1,600 with one lot. I don't know if you have mastered something like that, like this liquidity or Judas swing, because it's 830. Okay, now what sort of thing that I look into usually, let me give you one last thing before I go, is one Thursday and Friday, and I think Wednesday as well, but Thursday and Friday mostly I was looking into few things. Okay, 730, mark the high and low in between 730. Okay, like 6 to 730. This is a time based drawn liquidity. I'll get back to the 1 minute time frame and show you why I said it. From 9 a.m. to what is that, 9:30, from 9 a.m. to 10:30, not even 9:30, 10:30, this 90 minutes windows, let me mark in it in a different color. That's red, and maybe that's something like blue or something, so that it doesn't disappear from the chart with the candle colors. These two liquidities, along with that, mark the London and Asia session buy side and sell side. In 1 minute, wait until this 9 to 10 10:30 happens, and it takes the sell side or buy side in between that. Okay, when market took the session low or that specific time windows liquidity, let me show you the session lows as well. Any of these three liquidities, okay, the liquidity inside of this, liquidity inside of London kill zone, liquidity inside of Asia kill zone, if market has taken any of these three, buy side or sell side, inside of your, let me take off the indicator because it's conflicting the lines that I have drawn, inside of your 9 o'clock to 10:30 liquidity, like liquidity pool or price action, if any of these liquidities or either the buy side or the sell side is taken, if it is aligning with your bias, it's even better. Look for market structure shift after that. So when market took all this, after that, where did you get your first time market structure shift? When market, after that, okay, so after this happened, market came lower, took the liquidity, gave you a market structure shift above. I can consider this, or I can consider here as my internal. Both way I'm correct, because I know how I am using that. This fair value can be your entry, or this small little fair value. This is a liquidity, this is another liquidity graph. That's why I'm marking this high, okay, as my internal structure shift. If you want to wait until the confirmation of this high, then wait until this fall, but that's during the lunch session. So your entry during lunch session, I don't know, you cannot take the entry during lunch session. I mostly it either consolidates or runs on a like liquidity run is very like volatile during that specific area, because people don't like, whoever is still holding their position, they wants to close that position above every high. So during lunchtime you will see if market is going higher, above every recent swing high there will be a liquidity grab and some reaction or rejection from those areas. Like mostly that's what I saw, that's my personal observation. I don't know if that is true or not, but look for this 3 time frame, okay, like this 3 time window, Asia session, London session, from 6 to 7:30. If you see the highs and lows, mark that highs and lows around that time frame. From 9 to 10:30, wait until it grabs either the buy side or the sell side. Even when this happened, okay, this happened, it has already taken the sell side from London session. Market took these liquidities, traded into that. You can consider a entry until this Asia session is taken. After that area, like from 10 to 11, there is a silver bullet. During that silver bullet, this is the liquidity grab. Market structure shift, as I'm saying, either here, or you can consider upper portion if you want to, but if you don't trust this, don't enter from here. Wait until something better happens around that area, okay? Like when market goes and gives you another break of a structure, like second break of a structure over here, you can look for a fair value to enter, or whatever PD array that you have mastered, you can look for that to enter. There is a small little fair value over here, so enter from there. The optimal stop loss is below that, but if you put your stop loss here, it's not valid because this volume imbalance. If the volume imbalance was not here, this could have been a valid area to put your stop loss. Just because there is this volume imbalance, this is not a valid area to put your stop loss, because market can easily trade into that volume imbalance, okay? So that's why I'm saying here, not because I'm seeing market came below that. Look into this sort of areas and look if market has reached over there like 99% of the time or not, if not 100% of the time, okay? Just look like fair value below that, if there is a volume imbalance or something, if a week at least tried to reach there or not. If that is the case, you will understand why I'm saying this. I have witnessed it so many times. I don't need any other like reason to put my stop loss below that area, okay? If let's say you entered here, you got stopped out, market came here, went higher, gave you again a rejection, again a break of a structure, this, enter from here, keeping the same. Now when you are entering from here, okay, it's, although it's lunch time, but I'm still showing you because there might be controversy regarding this stop loss placement or something. Again you got a break of a structure, you know where market is heading, like where it can reach for. It has taken all the sell side, so the buy side liquidity inside of that range, which is here, that is the target for the market. Now where am I entering from? Here, but are you holding until that high? I don't know, it's up to you, but at least I would close some partial around the most obvious levels, maybe this high or these relative equal highs. I would close some partial. So if you are entering from this, where is your stop loss? The third candle's low of the fair value gap. The same thing, the reason I invalidated this low or this low, because there is a volume imbalance. Same thing, let's say I didn't invalidate it, I got stopped out. Now that's the low. The same calculation, this is the low, you enter from whatever place. If this is a big fair value, I mostly focus into the 25% level. I don't care if it respect or disrespected. Eventually what I can see is it took liquidity here, it gave me another market structure shift here, if not above that area. So it's even better for me. I don't see a reason for price to go lower one more time. However, either here or, as I said, if it's a big one, I always look into the 25% level. A stop loss there, market came into a drawdown, gave you some heart attack. Eventually it has taken the recent swing high. This was the entry I took, keeping this stop loss. On my friend's stream I was actually talking, like I went a buy long from something like this area, a stop loss here. If I'm not wrong, I actually talked about this entry in my friend's stream, and on that moment I targeted this high, okay, this high. The reason behind that is this high with this leg created a hourly bearish fair value gap. 15 minutes or hourly, let me check. 15 minutes it has a small one, but hourly I'm 100% sure there is a bearish fair value. So I was waiting until, see, like this one, because I remember that move, okay. So that is the bearish fair value that market created. So I targeted the fair value retest or refilled with my entry. That actually gave me 2.09. That's why I targeted that as well. Okay, like at least 1 to 2 is what I target. It provide, I don't know where is it. Okay, here. See that fair value that I have drawn on the hourly. This is the fair value. That's why I targeted until that high, rather than going here or here. Okay, but eventually market went there, but it came very close to my stop loss. Okay, it came very close, but so what, as long as I'm not stopped out, I don't care where it came. Okay, whoever has thought that market after doing all this, yeah, I was expecting it can take the liquidity, maybe it can come until that volume imbalance. That's why I put it there. Okay, and that's the entry. My friend's channel I have talked about. Anyway, I'm talking for a very long time now. I hope you got some idea, you got some something valuable out of this long stream or session. And also this low is coming out of a 15 minutes breaker block or bullish fair value, something like that, I cannot remember, but this low was actually coming out from a higher time frame point of interest. So for that I was willing to take that long as well. So yeah, I mean that's it guys. I hope your time was well utilized, or I was able to provide you guys something. If you have any question for the last time, you can ask me, or I would love to take the leave here. So yeah, I will wait 30 seconds. After that I will stop my stream. Okay, Shiva, Murad Boy, then Muhammad Ali Khan, ICT Trading Concept, then Michelle, and am I missing any other name? Yes, I was missing someone, something like YouTube Pro or something, Pro YouTuber or something. Where is the name? I don't want to miss his name guys. Okay, YouTube Blood, then Keep Smiling, Hardik, Dhankar, everyone guys, Jihad as well. Thanks a lot for joining. I would love to take the leave over here, and yeah, until next time, take a very good care of yourself, your health and your loved ones, and keep me in your prayers as well. Hopefully things will be all right, and yeah, like I'll give you guys the update about whatever happening in my life, in my family life. I'll keep you guys updated. And if by the way, the baby or operation will be happen on Monday, so maybe I will not be able to trade on until Tuesday or something, because this is a very big thing for me. First time I'm going to be an uncle. My elder brother is going to be a brother, so like a father. So it's a big thing. Okay, and I don't want to miss the moment, so I might not come and make any more videos before that, or even I will maybe not be trading during that time. So yeah, I hope you will utilize your time during that moments. And as I said, before you go to your Monday or Tuesday session, since Monday is a bank holiday, utilize these days off. Watch the videos I have suggested, the one in ICT's channel, ICT Advanced Theory on the Breaker, that video, and the other video I have shared from, I think, the Fair Value God, Arjo, his channel as well, that video, and the video from this Word of Wisdom, the ICT roundtable. You will find lot of valuable informations. If you can digest the information, I'm telling you, next time when you are sitting in front of your chart, a lot of visions will be changed, a lot of things will be changed. Okay, your perception, your knowledge will enhance a lot. So yeah, like with that hope, I will take a leave right now. Bye bye guys, good night.